out like the piece to get us to 2%, but and there's not much harm done at it. And while those task forces are happening, and they seem to be, as Kevin Warsh described them, mainly like external and some staff, the committee itself can be full on doing what they've been doing, try to wrap their heads around what's happening with inflation, what's happening with the labor market, and what they should do with monetary policy. We just probably aren't going to see as much of it out in the open because one of the task force on communication. But I don't think this is really holding up the Fed in terms of their process.
Well, on that last note, Claudia, you point to something of this idea of private access, something that everyone has always throughout history tried to get from Fed officials. Is it different this time, though, if the public access starts to dwindle?
So I think it's just we're going to have a lot more noise, a lot more uncertainty, and that it will probably weather through that. This may not be a big deal. Trying, the guessing game of what does the Fed mean? What are they going to do? I don't think I don't see the merits of this. Like, this is not the way I would approach it, but I think we can push through it. I think what's very important is that Kevin Warsh, as he pulls in the amount of public information, he needs to be very careful that the entire committee is pulling in any kind of private information that is coming out of the Fed, because that would be the absolute worst scenario where you have some real ethics issues where the information does get out, but it doesn't get out broadly.
Claudia, you've been on both sides of the wall, inside the Fed, watching the Fed. If you had free reign of the institution and you could adjust the communication apparatus over at the Federal Reserve, what would you change? What would you get rid of?
Oh, goodness. No, so I have been, in the time that I was at the Fed, I started in 2007. I watched a Fed that became more transparent, more speaking to the public. I do think it's very important for accountability's sake that the public, that Congress really understands what the Fed is doing, why they're doing it. And sometimes that means it's going to be clear they've made a mistake, right? Like, if you show your work, sometimes it'll be clear you've made a mistake. So I think the accountability piece is so important. I think this fine tuning of how the Fed gives information so markets can understand it and can help the Fed do its job. Like, that's part, it works through financial markets. There's lots of fine tuning. The dot plot is not a perfect tool in any way, shape, or form, but the spirit of it, I think, has some real merit. So I think there's a lot of fine tuning, but I worry that it's very easy to delete things, delete tools, but that doesn't necessarily move the ball forward in terms of improving kind of the goal setting, improving the transparency, the communication.
Claudia, it's good to see you. As always, thank you. Claudia Salm there of New Century Advisors. Is there addition and subtraction when it comes to improving communication at the Federal Reserve? Again,
but the whole thing of this is we have to wait, right? Like, we don't know what the task force are going to come up with, so it might just be deletion. Maybe we do get some additional fun tools to add to our belt.
I just sense we go into a different world where we have a very different cadence for news conferences at this institution.
Which you've sat through a lot, so maybe that isn't the worst thing.
Yeah, I think a lot of people have sat through a lot of those and wondered whether we should be having them every single meeting. Up next, Alex Ullman of Barclays and a whole lot more from New York City. The second hour of Bloomberg surveillance just around the corner.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I do think inflation right now is underestimated as a risk.
There is more inflation in the system outside of energy.
You kind of need to see core PC running 0.2 or below for the Fed to feel more comfortable.
The case for monetary policy becoming a bit tighter is pretty compelling to me.
Those expectations around Fed policy are going to continue to jump around.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures negative. We're down by 0.5 on the S&P. We've gone 4 days without gains, and it could become day 5. On the Nasdaq, we're down by 1.2%. Check out Micron. What a strange situation. Micron this morning is down by 5% in the pre-market. 85% margins, a problem for everybody else. And because it's a problem for everybody else, it's a problem also for Micron this morning.
But like this thing also maybe is just because South Korea has had a bad day and a lot of the traders there maybe are exposed to Micron. It is just wild that on the same exact print, you can get Micron surging nearly 60%. And again, on the same story, Apple falling by 6%. It just feels like there's this really messy process happening in markets right now as we try to figure out exactly how these business models are working and who's winning and who's not.
We spent the last hour talking about it. It is the debate of the moment in financial markets. You saw Microsoft try and pass on higher costs. Stock hit. Saw the same thing with Apple in yesterday's session as well. The spenders, the hyperscalers, have been hammered all month. In fact, for the last several months for the likes of Meta and Microsoft. And this major wealth transfer, in fact, one of the biggest wealth transfers we've ever seen in financial market history, from one group of names to another. And we're all trying to figure out how sustainable that actually is.
I also think one of the things that's worth paying attention to kind of goes back to the start of the year, but are these open source models? Because part of this conversation has also been, if you're an enterprise company, are you really going to want to pay up for how expensive this AI is? And there's been reporting that the use of these Chinese open source models has skyrocketed. And that makes it all the more harder for these hyperscalers to justify their spending, because you don't need all those data centers if you're using more efficient open source models.
Does it make it harder to IPO? The latest reporting from the New York Times suggesting that maybe OpenAI is going to delay that IPO into next year. Simple question, OpenAI problem or broader capital market story?
Or maybe Sam Altman problem, because he
Possibly.
really wants a $1 trillion valuation when he goes to market. But it's hard not to extrapolate something for the broader market just because we came from this monstrous SpaceX IPO. And when you get the price declines and the volatility you just got from SpaceX, it doesn't make it as appealing to come to market because those investors have just gotten burned from SpaceX.
And they are not the only ones. We've had an Alphabet equity capital raise. I mentioned SK Hynix in a previous hour as well. I also mentioned that the SK Hynix $30 billion effort to raise capital through ADRs would be one of the biggest capital raising efforts ever on the equity side in the US, which just gives you an idea of the sums, the numbers we're talking about with regards to the capital race right now.
Are we going to get less of that? Is the confidence of companies to come to the market going to start to dwindle? Because at the end of the day, they are competing for a lot of the same institutional capital.
Futures this morning on the equity side of things, negative by 0.5% on the S&P 500. Next week, we won't be talking about tech. We'll be talking about tech. We'll also be talking about payrolls. Next week, payrolls Thursday, not payrolls Friday. Worth making a note of that going into next week. Data so far this week at the index level, headline level, been pretty decent, which is why that rate hike debate is still alive and well.
Which is, by the way, while you've seen this stock market volatility, all the other markets are pretty calm. I mean, treasuries starting to decline those yields, but not really moving that much. Oil markets have been really benign. The volatility has really been seconded to one part of this market. Everything else has been more stable because of the equity, because of the market data.
On the bond side of things, yields coming in 3 or 4 basis points, twos at the moment, about 4.08%. Coming up this hour, we'll catch up with Alex Altman of Barclays on why a negative narrative might be brewing. Eddie Fishman of the Council on Foreign Relations following an attack on a container vessel in the Strait of Hormuz. And Jonathan Krinsky of BTIG on why he's expecting additional downside risk for the AI trade. We begin this hour with stocks failing to find a firmer footing as big tech concerns continue to grow. Alex Altman of Barclays writing, I cannot be the only one whose spidey sense is tingling that at the margin there is a more negative narrative brewing around this beloved theme. Alex joins us now for more. Alex, good morning, good to see you.
Good morning.
What are you worried about?
Okay, so there's really two things. There's a narrative, which I think at the margin is shifting, and we've touched on that already this morning. The other one is the technicals. And I want to focus on the technicals because I don't think there's going to be many individuals talking about this right now. So in the market, we've had this massive accumulation of levered ETF assets under management. So they're effectively products that are multiplying factors. So you buy one unit of it and it's buying multiple units of whatever that underlying is. And the AUM, or assets under management of that domestically, is now swelled to around about $220 billion. In Asia, it's swelled to around about $50 billion. And the reason it's so interesting is because the bulk of this swelling has come through the tech sector. So it's within semiconductors and NASDAQ. And if you think about that's really captured the zeitgeist of the market. So as money has flowed into this narrative, it's been accelerated through the purchases of these levered ETFs. Now, the reason why that's interesting is because when those ETFs need to rebalance on a day-to-day basis, we get significant excess volatility. We're creating almost a short gamma profile to the market. So moves go up are exacerbated higher, and moves down are exacerbated lower. So you increase the volatility, and we think that's been fueling some of the rally up. Cumulatively, these levered ETFs have bought $300 billion of stuff, mostly in the semiconductor and the US index space. But of course, the largest single stock levered ETF on the planet, SK Hynix out in Korea.
So let's get out to Korea. Just describe some of the technicals developing in South Korea at the moment with regards to the backdrop you just described.
Right. So, I mean, again, we sort of go back to this idea that you've had this huge accumulation of levered ETF within SK Hynix. It sits out in Hong Kong specifically as a single stock. You've got individuals posting on social media and they're wearing the vest of the particular ticker of this levered ETF. And so it's sort of, again, reminiscent of that euphoria that we saw, say, in gold at the beginning of the year when you had pictures of people taking photos of queues around the corner of people trying to buy bullion. It's this, and the same with silver.
And cashing in their insurance plans based on some of the reporting we've seen to do some of this.
We've heard anecdotes of that as well, although I can't confirm it. But the point being is that it's an illustration of a significant amount of retail excess. And, you know, we've seen pockets of this before. We saw it in the Kospi earlier in the year. We saw it in silver at the beginning of the year. Generally, these things don't end particularly well. And it's very much reminiscent of what happened with the levered VIX products back at the beginning of 2018. You remember you had this huge accumulation of short vol strategies. This is different. It's not short vol in the traditional sense. It's more the fact that you've just got leverage. It's good old-fashioned leverage that's hidden within an ETF. And as a consequence of that, the more that things begin to move, the more excess volatility it's going to create from rebalancing.
Alex, is this you calling for a Volmageddon 2.0?
I'm not calling for a Volmageddon 2.0, but what I would definitely say is that if there is a shift in narrative, small shifts in narrative in AI, and again, we've talked about that, whether it's from IPOs potentially getting delayed, or whether there's the token maxing in reversal, or price cuts, or frontier versus open source models, these small changes in narrative can have much more dramatic price moves. And I think that's really what we need to focus on, is that you can have, remember, I'm a big believer that narrative follows price and flow, right? So what we're really talking about here is price and flow. And it's the narrative that people can suddenly change very quickly.
Just on one more point on the technicals in these leveraged ETFs, there has been some chatter around, for example, SOXL, one of the big ETFs that is like 3 times leverage, the Philadelphia Semiconductor Index, some other ones too, that banks on the other side aren't willing to give them the swaps. They're struggling to find some of the counterparty risk, and they're turning to more options. They're turning to unique ways to try to construct these ETFs. What happens when you get these oddities and how these ETFs are being put together? Is that very much so like a problem for these ETF providers, or can it have wider spillover effects into the market?
I think it's more of a specific issue to the ETF providers. At the end of the day, they issue a prospectus which kind of assures their investors, or they attempt to match the performance of the prospectus. So if they don't match that performance, then obviously they're on the hook, so to speak. But there's a lot of leeway in terms of if they don't match it, they just effectively do as a best effort. But I think the key point here is that you highlight if they cannot get access to the prime balances or the leverage through the traditional measures, and they're forced into the options market, all it's doing is creating a significant theta decay. There's a time decay of those options, which is going to drag on the performance. So again, it just may be a case of investors aren't necessarily getting exactly what they signed up for. I don't think it creates systemic issues, so to speak. I think this is more just a case of if we have, again, a change in narrative within the AI story, and again, at the margin, I think we are seeing that, it can create exacerbated moves, both to the top side, which I think we did see within the memory story, and possibly to the downside as well.
So you can go from mount up to mount down. It's one of the reasons you're tactically bearish.
Correct.
One of the reasons, or the reason you're tactically bearish?
It's one of the reasons. So I wouldn't say it's exclusively. I think there's a narrative reason as well why we're tactically bearish, and that's partly driven by the fact that we have our quantitative framework, which has sort of got a bunch of inputs that's sort of giving a warning, but then you've also just got this AI shift as well in narrative, which I just don't think is necessarily being fully appreciated. AMD at the beginning of the week, they came out with a desktop PC that they claim can take away a lot of the processing requirement from data centers. You've got price cuts, the things that we've already talked about, and also the fact that people are using 2029 forecasts as a reason to still be bullish a deeply cyclical sector such as memory is just a bit of a warning shot in our opinion. So there is a narrative, but I'm not going to lose sight of the fact that yes, this is a very technical message.
If there was a space from a fundamental perspective, putting this all together to get long, given these developments right now, where do you see a pocket of opportunity in equities away from the tactical bearishness?
So there's 2 parts, right? And the first one is quality. I think quality's had one of the worst drawdowns in its history, if you just think about it from a factor perspective. Some of that may be within the hyperscaler narrative. I mean, if you're a hyperscaler and you're spending over 50% of your entire CapEx budget on memory, doesn't strike us as a particularly sensible investment decision. So actually, could the hyperscalers be bending the CapEx curve in the future? Could that be quite positive for that cohort of stocks? So that's a quality trade. The other one is commodities. I really want to get back to this commodity story. It's had a bit of a gut check recently, and the reason it's so interesting is that strategic autonomy narrative that we started the year thinking about, US and China decoupling, remember that? Rare earths, all this kind of stuff. And then also the Iranian story as well, and on the crude side, the need to have your strategic petroleum reserves, but also reserves of everything, right? So if we're moving into a world of strategic autonomy, then owning commodities, I still think is a very interesting thematic.
How should I own them? Through energy players, through miners, through the actual commodities? How should I own them?
So we really like the miners, and the reason is that there's only $1.4 trillion of global market cap. Sounds like a lot, but that's basically the size of a memory company these days. So actually, the availability, the scarcity of these commodities equities is so interesting because, quite frankly, if you want to play the theme as a large institution, there's actually not that much equity you can buy.
Just a final question on tech. Can you imagine a world, not several years out, but in the next 12 months, where both hyperscalers and the chip players are doing well?
I can. Structurally, I know I sound a little tactically bearish, but structurally, I'm incredibly bullish.
The stocks, not the companies.
I still think there are going to be some inevitable winners from this, right? I think in a world where we're sort of somewhat focused on the ROI, we have to believe that there's going to be some ROI winners. And ultimately, we're talking about, from a hyperscaler perspective, these are some of the best capital allocators we've seen in our lifetimes. If you think about the bets that these guys have made over the past 20 years, they're virtually faultless, other than arguably maybe the metasphere, whatever. But the point being is that do you really want to bet against these guys over the long term, over a cycle? So I think there will be some ROI winners, and yes, some of these hyperscalers I think will win.
Alex, good to see you.
Good to see you.
As always,
Thanks.
thank you, buddy. Appreciate it. Alex Holman there of Barclays on this equity market. Equity futures at the moment still near session lows, just a small bounce in the last few hours. We're negative by 0.4% on the S&P and on the Nasdaq down by around 1%. With an update on stories worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Yeah, just to recap a little bit about what happened in that volatile trading session across Asia. The Kospi closing down nearly 6% after triggering circuit breakers earlier in the session. The Nikkei losing more than 4%. Many reasons. Those synthetic products you've been talking about, of course, month end, obviously trading with 3 days left in the month, and maybe a little bit of anxiety over those AI trades. Volkswagen considering cutting 100,000 jobs and shuttering factories in a push to become more competitive. German magazine reporting VW's CEO announced the proposal at a management board meeting earlier this week. And from Wimbledon to Wall Street, the most decorated tennis star of all time is taking on a new challenge. Novak Djokovic is joining General Atlantic as the firm invests further in sports. The firm plans to lean on Djokovic's connections to push further into the health and wellness sectors. And that's your Bloomberg Brief, John.
Bonnie, thank you. It's great marketing, isn't it?
Yeah.
You know, you hire him, we talk about it, and everyone's talking about General Atlantic.
Blackstone did the same thing with Tommy Fleetwood. I mean, it's Djokovic himself. He also has a partnership with the Amon. He's doing pretty well for himself. He's like it feels like he's diversifying away from tennis a bit, which makes sense.
20 years ago, do you remember R9 had an internship at WPP with Sorrell? Am I making that up? Like, I feel like that happened like 20 years ago.
You can do better than an internship. Was it an internship?
I think it was something like that. Google it. I would do that, or ChatGPT. Whatever your preference is these days, depending on your generation. Up next on the programme, a presidential victory lap.
The Strait is open. Yesterday, they took out 19 million barrels of oil. That's the most in the history of the Strait. And the oil prices are dropping like a rock.
Up next, we'll catch up with Eddie Fishman of the Council on Foreign Relations, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Welcome back to the programme, live from New York. You're watching Bloomberg Surveillance. Equity futures right now pulling back by 0.5%. We're down by more than 1% on the Nasdaq 100. Declines on crude once again this morning. Brent down by 3%. Likewise on WTI, 72 on Brent. WTI in the 60s once again. Under surveillance this morning, a presidential victory lap.
They want to make a deal with us very badly, and we probably will. I think we will, but the Strait is open. Yesterday, they took out 19 million barrels of oil. That's the most in the history of the Strait. And the oil prices are dropping like a rock. And, you know, as goes oil, so goes everything else.
So here's the latest this morning. The president touting the flow of crude through the Strait of Hormuz. This as a container vessel was attacked, undermining efforts to restore traffic. Multiple networks reporting Iran launched the strike. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Well, a White House official tells us that the U.S. is looking into whether this attack was ordered by the highest levels of the IRGC or if it was perhaps a rogue decision by lower level personnel. But regardless, it does mark the first such attack since the memorandum of understanding was signed, though for the most part, at least for now, it doesn't seem to have totally derailed the reopening of the Strait. However, some commercial shippers are now reviewing their exit plans, including one major company in Asia telling vessels that they should stay put for now, according to a recent message reviewed by Bloomberg News. Because new this morning, we saw Iran's foreign minister post on X reiterating that any vessels that want safe transit need to coordinate with the country. Because yesterday, it wasn't just this attack. We also saw at least 3 super tankers have to turn around after reportedly hearing warnings from the Iranian Navy. Now, the U.S. Secretary of State, when asked about all of this, reiterated the U.S.'s position is that there cannot be a deal where Iran maintains control or tries to impose fees in the Strait of Hormuz. But, John, we know this isn't the only point of contention at the moment, as we are now within this 60-day negotiating period. We're tracking very closely President Trump yesterday doubling down that Iran could use unfrozen assets to buy U.S. agricultural purchases, which Iran has denied. As yesterday, the Trump administration asked Congress for $11 billion in assistance to U.S. farmers amid the supply crunch from the war.
Tyler Kendall with the latest in Washington. Tyler, thank you. Eddie Fishman of the Council on Foreign Relations writing, Iran still has the ability to disrupt traffic if ships violate its wishes. Iran has shown that a U.S. adversary can weaponize a choke point and then get paid to stand down. Others will take note. Eddie joins us now for more. Eddie, good morning. Good to see you.
Yeah, nice to see you too, John.
It's advertised in the following fashion. No one's charging a toll. But ultimately, aren't they being paid to reopen the Strait of Hormuz?
Oh, definitely. I mean, that is what fundamentally the MOU is, right? If you go back to 2015, the Iran nuclear deal, the JCPOA, which a lot of people compare this to, in that circumstance, the United States imposed significant economic pressure on Iran and pressured Iran to give up concessions on this nuclear program. What has happened in 2026, this year, is actually the reverse. It's Iran, by using its key choke point, the Strait of Hormuz, has imposed significant economic pressure on us and has coerced us to give up economic concessions. The way you know that is that all the economic relief of this deal is front-loaded before anything on the nuclear side.
Your words, your language, others will take note. Who are we thinking about?
Pretty much everyone. I mean, because again, this is the second time that this has happened in as many years. China did the same thing last year with rare earth elements. They got us to backpedal our policy on China by virtue of cutting us off from that key choke point. If you're thinking about other countries that could do similar things, I mean, Indonesia is right at the top of the list with the Strait of Malacca. Their government has already brought up the possibility of imposing additional fees at the Strait. It's caused a lot of agita in places like Singapore and Malaysia. But that doesn't mean that over time they won't reimpose this type of thing. I think the Iranians came out yesterday and said that a toll at the Strait of Hormuz could be worth $40 billion a year for the Iranian government. Any other government sitting across one of these straits will see that kind of a revenue and imagine what they could provide for themselves too.
Do you think it will continue to work for these other players who take note, in your words? If it is something that looks like Indonesia, are other governments going to be okay with this? Or does there reach a point that there is enough of a pushback that this system becomes not viable?
That's the key question, Danny. I mean, look, what Secretary of State Rubio said yesterday, and I totally support his position, is that if Iran is allowed to charge a fee here, there's going to be chaos, right? You're undermining a core tenet of the international system, which is that waterways like the Strait of Hormuz are free and open to international commerce. So I do think it will require an international effort to stop this from happening. I think the challenge is, since World War II, that norm of free and open commerce has been underwritten by U.S. military power. And the U.S. military has just proven over the last 4 months that we cannot physically force the strait to be open. And so I guess the question becomes now, what are the Iranians going to do? Are they going to, target neutral ships like that Singaporean flagged vessel yesterday that defy it and, take a channel around Oman, maybe don't pay a toll? But if they do, I'm not really sure what we're going to do about it.
Beyond the revenue from the toll, there's this question of the hundreds of billions of dollars that Iran is likely getting with this MOU, and where that money goes to. The White House has said it's going to go to things like U.S. agriculture. What do you make of this pot of money and how it's likely to be spent?
Yeah, so look, I think the most plausible way that this deal could be funneled to buy agricultural commodities is through the frozen assets that Iran has. They've got tens of billions of dollars of these frozen assets, and ostensibly through this deal, although the White House has not fully provided the details, in this 60-day period, we're going to provide at least $12 billion or so to the Iranians. The question is, how does that actually get channeled to buy U.S. agricultural commodities? So far, we've seen no evidence that it will. And the thing that makes me a little nervous, frankly, that this is more rhetoric than reality, is if you look at the one regulation that has come out, which is the sanctions relief on Iranian oil sales in this general license that came out on Monday, there are no restrictions whatsoever in terms of how Iran can use that money. It actually allows Iran even to collect the funds in U.S. dollars, which is something that the United States has not provided Iran for decades.
The Republicans used to criticize Democrats for taking those frozen funds and allowing them to do the same thing, to use it for humanitarian needs. But ultimately, the same criticism was levelled at them that we should level at Republicans too. If they're not using that money for that, what are they using the money for? If I've got excess capital now to spend on humanitarian needs, it means I've got additional capital to spend on the other things, like sponsoring proxies. How do we address that?
No, that's exactly right. Money's fungible, right? So, and Iran does depend on agricultural imports, right? They import grain, they import wheat, they import corn, a lot actually, soybeans from Brazil, a lot of the same countries that we compete with. So they're going to buy agricultural commodities, potentially from the United States. And again, I haven't seen any proof that that's going to happen. But to your point, John, even if some of that money is used for that, that frees up additional resources to rebuild their nuclear program, to supercharge their missile program, which ostensibly now the U.S. is okay with, per comments by President Trump. So I completely agree with you on that.
Sanctions failed. Operation Economic Fury, if you look at this and how it's played out, failed. What are the lessons from that?
Look, I think the key lesson from this entire episode, right, you go back to the sanctions under George W. Bush, Barack Obama, and then now under Trump in Operation Economic Fury and Operation Epic Fury, is that economic pressure is a powerful tool, but it's a limited one. And if you're trying to use economic pressure, for instance, just to curtail Iran's nuclear program, I actually think that was a viable goal, right? We had a deal on that in 2015. It's probable Trump could have even had a deal, earlier this year. If you're going for something more maximalist, like regime change, I think it's pretty unlikely, and you're going to wind up probably on a slippery slope to the use of military force.
Eddie, appreciate your time. As always, buddy, thank you. Eddie Fishman there of the Council on Foreign Relations and, of course, the author of, I think, the most timely book release I've ever seen, Choke Points, American Power in the Age of Economic Warfare. Coming up on the programme, Jonathan Krinsky of BTIG on why he's expecting additional downside risk for the AI trade. Plus, Yahara is back with us with your morning movers. Soaring prices coming back to bite some of the chip makers from New York City. You're watching Bloomberg TV.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
The volatility makes a comeback in the tech sector. We've got the Nasdaq down by 1.2%, the S&P 500 down by 0.5%, the small cap struggling as well. We're down by 0.6%. Lots of single name level stories to talk about. Many of them are in the tech sector. With your morning movers this morning, Yahara has more. Hey, Yahara.
Hi, John. After some wild swings this week, we are seeing the memory and chip trade faltering again this morning with names like Micron and AMD falling in the pre-market as investors grow increasingly worried about demand destruction after we heard from both Apple and Microsoft saying that they are hiking prices due to higher component costs. That is fueling concerns that slower spending may be ahead, and not helping sentiment is this report out that OpenAI may be considering delaying its IPO. Staying on the chip sector, we are seeing onsemi falling, adding to losses, now down more than 14% in the pre-market after it announced an all-stock $6 billion deal to buy this company right here, Synaptics. Those shares rallying, but investors clearly not impressed by this transaction. Synaptics makes chips for things like phones, smartphones, and laptops. And what analysts are saying is that this takes onsemi further away from the AI data center story, which investors have been piling into. And we end on space with Rocket Lab. Those shares are rallying just up 1% in the pre-market after winning a new NASA launch contract. But it comes after this name was caught up in the space sell-off. It was down some 25% this week alone as investors start to question SpaceX and its valuation. John?
Start to question everything this morning, at least. Yahara, thank you. Appreciate it. On our radar this morning, the president turning his attention to the home front.
And we have another one, a new market coming up, and that's called the lovely country of Iran. We're going to be taking some of their money and we'll spend it, and we're going to be buying wheat, soybeans, and corn, a lot of it. I am pro-farmer. We're never going to let you down. We're never letting the farmer down.
The president hosting farmers at the White House, maintaining Iranian funds will be used to buy U.S. goods. Trump also requesting another $11 billion in aid. Elsewhere, Samsung and SK Hynix ramping up spending. South Korean media reporting the chip makers are preparing to announce new investments worth hundreds of billions of dollars as soon as Monday. Despite a recent pullback, shares of Samsung and SK Hynix have more than doubled this year. And finally, OpenAI considering holding off an IPO until 2027. According to the New York Times, bankers are warning that recent volatility in tech stocks could hurt enthusiasm from investors. The CEO, Sam Altman, reportedly pushing advisors to target $1 trillion valuation.
I was thinking about this in the context of wider IPO markets because I was just in Berlin for Super Return, one of the biggest conferences for private capital, and I was asking people, is SpaceX a good thing for you or a bad thing for you as you look to IPO your companies? The resounding answer, because they love to be bullish, is, oh, this is a great thing. It's wonderful that this company can come to market and it's received so well by investors. That narrative obviously turns on its head if the IPO isn't a success. And that just shows the danger of having this mega hyped up IPO go before you, go before OpenAI, go before Anthropic. Timing is important for IPOs. And is the window now shut because of the volatility we're seeing?
We've all been following this race for capital. And by the way, it's not just happening in equity, it's happening in debt as well. And you've been tracking that too. It's starting to look like just recently more of a competition for capital. And that's why I think this story is important, that they are coming here late. And by late, I mean after Alphabet, after SpaceX, after SK Hynix thinking about raising 30 billion. And we've also lost, I think, our ability to really internalize the size of these numbers. That the SK Hynix effort to raise 30 billion through US ADRs, as big as the Aramco IPO. And I've mentioned this a few times already this morning. I know I might sound like a broken record, but these are some of the biggest equity capital raises we have ever seen in the history of financial markets. Anthropic's still to come. No wonder the likes of OpenAI, who are on much shakier ground right now based on reports when it comes to financials and growth reports, they're on shakier ground. No wonder they're talking about postponing this IPO.
Part of the problem, though, is we've been spoiled by this narrative of there's cash on the sidelines. There's so much money that needs to be put to work. Credit spreads will never widen because there's so much money hunting from a home. And I think so many people took that to heart, including these companies who came to market. We are about to see a shift. The supply-demand dynamic is about to turn on its head because of the supply coming to market. Forget, just SK Hynix. What about SpaceX and the amount of shares that are going to be unlocked? These things are happening to the market, and I don't know if we've fully digested to exactly what you're saying, John, just the difference it makes to have more supply when we've been used to less companies going public and to be starved of that kind of equity issuance.
And to get trillions of buybacks on top of that as well. It's a real shift developing. Let's talk about tech. Stocks heading for a fifth straight day of losses as AI faces a fresh set of concerns. Jonathan Krinsky of BTIG writing the following: whether or not we rally in the short term, we continue to see medium-term downside risk for the tech AI trade. Jonathan joins us now for more. Jonathan, welcome to the programme. You sit in a slightly different seat, technical, so let's focus on that. Why do you see this story turning the other way, from melt up maybe to melt down?
Hey, Jonathan. So I think, let's, from a starting point, let's take a walk down memory lane. No pun intended, or pun intended. If we go back just 9 months ago, you had Bitcoin at 125,000. Sentiment was extremely bullish. It was the debasement trade. Retail was all in. Calls for $1 million Bitcoin, and yet here we are 9 months later, and it's been cut in half. Go back to late October, you had the software sector at an all-time high. There was sentiment maybe was not as optimistic as it is on semis right now, but it was an all-time high. There was largely a moat considered around software, and within 3 months you had it down 30% and fears of AI wiping out the sector. And then you go to January, late January, when gold and silver were at all-time highs, calls for $10,000 gold. You kind of, again, had that debasement trade. You had to own gold, right? And then we saw about a 30 or 40% drawdown in precious metals in a matter of months. And then even most recently, just 6 weeks ago, the Mag 7 hit an all-time high. They were largely considered, kind of immune to the inflation trade or geopolitical risks. And yet here we are with hyperscalers down 10, 15, 20%, and fears of their CapEx spending going wild. So I think just from a history standpoint, I think investors should be aware that things can change quickly, and narrative follows price, not the other way around. So it may be hard for investors to see a bearish narrative on the semi memory trade, but also let's remember NVIDIA, which is a semi, is down over the last 9 months. How many investors back in October would have thought NVIDIA would trade lower with semis broadly doing what they're doing? So I think just history tells us things can change quickly.
Well, let's talk about what has been changing, and you noted a few of them, so let's unpack that. And I've picked out 2 names throughout this morning. You mentioned the Mag 7. Within that, Microsoft and Meta, those stocks in bear markets, Jonathan. And just this month alone, to have Microsoft down by more than 20%, to have Micron up by more than 20%, to have 40-point performance gaps between those 2 names when one company is doing all the spending and another company is receiving all of the capex. Jonathan, do you think that's sustainable? That's been a central question for this program this morning. Do you think it is?
We don't, and I think, again, leaving aside, where the money is flowing, the money in the stocks has obviously been flowing to a narrower and fewer part of the market, right? So even within semis, as we mentioned, NVIDIA has started to roll over, but it's really those hyperscalers, Meta and Microsoft, that have been and lagging. But again, it wasn't that long ago that those were seen as, kind of the must-own names. So I think that the parabolic nature of these a lot of these names, specifically in memory, is typically unsustainable. And while it's gone much further than we would have imagined even just a couple weeks ago, the volume, if you look at the volume yesterday, it was a record notional volume for Micron, around $100 billion. That's one of the largest notional volume days ever in a lot of stocks. So I think, the run up into Micron's earnings report received a lot of hype. And I think on the backside, maybe there's a little bit of sell the news over the coming weeks.
What about just the ownership structure of these stocks? Let's take Micron as an example. S3 data shows that active long ownership, so kind of more of the hedge funds you'd think about, the quote unquote smart money, has been dropping. It's now at 16%, whereas passive holders are up about 27%. So a plurality of holders of Micron are passive holders of ETFs or passive mutual funds. What difference does it make for that to be the cohort in control of Micron?
I don't know that it makes a whole lot of difference. I mean, there's always going to be changes in ownership. The passive side, obviously, more on the ETF flows, and given the surge in leverage ETFs, that could also, money comes in when things go up, and obviously the leverage ETFs have the inverse on the way down. So I wouldn't look too closely at that. But I would say, again, look at the volume, look at the trading action. The other thing we highlighted recently for the broad-based semi-complex, you had 9 days in the last 90 calendar days when the semi-index was up 5% or more. The only two periods we've seen anything like that were in 2008, 2009, the depths of the great financial crisis, and in 2000 to 2003. So again, these are historically moves you see in bear markets. We're seeing it, kind of in the tail end, what we think of this bull market, which suggests more of a blow-off type of trading action.
Well, then what do you make as we've seen kind of this rotation, this violent rotation within AI and within tech itself? You've seen value, cyclical, small caps, equal weighted measures. Those are outperforming. Jonathan, what do you look at to see whether that type of rotation is sustainable?
Yeah, I mean, that's actually one of the things we have been looking for is, as parts of the AI complex has rolled over, more so on the hyperscaler side right now, we've seen areas like financials, the regional banks hit new highs yesterday. Biotech's been doing well, industrials, small cap industrials. And so there is a lot of rotation going on, which is still, we think where you want to look. So right now, the market is telling you it's rotational in nature. Money's still staying in equities. So there are places to go. It's just we think there are pockets that are a better risk reward at this point than some of the high flying semi names.
John, final question. It's well in your wheelhouse. At the opening bell, we're going to look for that break at a 50-day moving average. At the close yesterday, sitting right on top of it within a point. How important is that support?
Look, I mean, moving averages, we certainly look at. I think generally, from a trend perspective, you want to follow kind of more the slope of the moving average. So we'll look to see if the 20-day kind of turns down. But if you're talking the S&P again, it is going to be weighted by the tech trade. But look at the equal weight S&P and look at something like small cap value to get a sense of if there's more rotation below the surface.
Appreciate it, buddy. As always, thank you, Jonathan Krinsky there of BTIG. With equities under pressure this morning on the S&P, on the Nasdaq. That's the second time this morning, second time this hour we've heard someone say price sets narrative, not the other way around.
I feel like we're struggling for that narrative because of the price. I mean, we don't have a new Mag 7 yet. It's clear Mag 7's out. What's going to be our new, fun rhyming or, three-letter moniker that's going to take us forward?
Micron, apparently.
Yeah, MU, perfect.
Right, basically just that. Equity futures down by 0.5. Let's get you an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Ukrainian President Volodymyr Zelensky approving a 40-day influence operation to convince Russia to end the war. Zelensky did not give details of the plan, which he posted about on social media after receiving a briefing from the head of his security service on strikes against Russian targets. Microsoft raising prices for its current generation Xbox consoles again, citing a shortage of components. The company says memory and storage costs have risen more than 2.5 times and could double again by 2027. President Donald Trump is preparing to take his first trip on the presidential plane gifted by the Qatari government next week. Sources telling us here at Bloomberg the president will take the plane to an event in North Dakota July 1st. The jet is among the biggest foreign gifts ever given to the United States government. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for the update. Up next on the programme, seeking stability from the labour market.
I do think, though, that the job market, in my mind, is stable without being good. The low hire, low fire environment. I think that's from business uncertainty.
Up next, we'll catch up with Russ Brownback of BlackRock from New York City. This is Bloomberg Surveillance.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Check out Boeing this morning. Stock is up in the pre-market. Quick bounce, up by 0.6%. News just crossing moments ago. China Southern to buy Boeing planes for at least $3.62 billion US dollars. The stock responding to that, higher by close to 0.6%. That's Boeing. Broader market looks like this. Equity futures declining on the S&P 500 by 0.5, on the Nasdaq by 1.2. Bit of an offset developing in the bond market. We'll spend some time on fixed income in just a moment. 4 consecutive days of lower yields at the front end of the yield curve. We're down 3 basis points. Twos sub 4.1%. Under surveillance this morning, seeking stability from the labour market.
I do think, though, that the job market, in my mind, is stable without being good. It's extremely weird that the layoff rate and the hiring rate would both be really low. That's the low hire, low fire environment. I think that's from business uncertainty.
So here's the latest this morning. Traders tempering expectations for an interest rate hike ahead of next week's payrolls report. Russ Brownback of BlackRock writing the labour market is softer than nominal GDP would suggest. Real wage growth this week. Unemployment has not tightened meaningfully. Russ joins us now for more. Russ, good morning.
Hey, good morning.
A lot of people think we're setting the stage here for rate hikes. Would you take the other side of that?
Yeah, I think the bar is pretty high for the Fed to do anything from here. We've had this sort of surge in nominal GDP growth. The labor market has stabilized. We were kind of at peak job disruption fear. Actually, the day we entered the Iran conflict, remember February 27th was the day Block announced 40% layoffs, and we had 3 cuts priced into markets on that day. So today we've taken those out. The data has stabilized. And we've had resurgent growth, surprisingly, through the quarter. We really see that as sort of peaking right about now. So back half of the year, we see the inflation readings decelerating. And some of those influences that have been so heady are going to come off the boil. So the CapEx impulse, we think, decelerates just marginally. And the fiscal impulse is going to decelerate a little bit. So all of those things are data that will come to the Fed and allow them to sort of stand pat.
Good time to borrow or good time to lend?
It's the best time to lend. I've been doing it 35 years. You've got these unbelievably high risk-free real yields and then really, really good fundamentals underpinning credit quality. And so you can build these diversified portfolios. There's been so much sort of consternation about bonds are costly and bonds are dangerous when, in fact, the opposite is true. We've been in this income regime for the last 3 years. And the power of compounding, very, very attractive real yields, is the gift that keeps on giving. And we believe that's the regime for fixed income indefinitely.
There is a line of people who want to borrow, though, and spreads are really tight. So some people might be sitting here saying, why is it a good time to lend? Supply's picking up, spreads are already very, very tight. You've seen all these deals coming through on both the equity and the debt side. Why is it a good time to lend?
Supply's coming to the rescue of an imbalance we've had for years. Too much money, not enough yielding assets. So you think about the equity market, stock buybacks over and above IPOs. The share count in the equity market's been going down. Fixed income, there's $2.25 trillion of interest income that gets thrown off every year that needs to be reinvested. And gross issuance in credit has been high, but net issuance has been low. So now, if you're getting these bursts of supply, they're very welcome to a asset-starved market. And I think you're a long way from getting to the tipping point of moving into the other side of the equilibrium.
I was going to say, I mean, at what point do you just mechanically see spreads widening because there is more supply coming to market?
So it's actually very interesting, Danny. If you look at the phenomenon so far this year, you have had these concentrated bursts of supply, and particularly related to the CapEx buildout. And that's where you're seeing the concession in markets. So overall public market credit indices are pinned at all-time tights. Where you're seeing the widening come along, we just deep dived this week in our strategy meeting, you're getting these new issue concessions in the places where there is this concentrated supply. But that's a gift to investors. So if these companies are coming along and deciding, if you're an investment grade rated company, and you're willing to borrow at levels that are below where your credit rating indicates that you might otherwise be needing to borrow, that's a gift to lenders. But if they can turn around and invest that and get a good return, everybody wins.
Well, there's also this question of crowding out because so much capital necessarily needs to go to work for this project of building out AI infrastructure. I was having this conversation with Scott Goodwin of Diameter, who said that he's starting to notice very slightly, but picking up in other industries that aren't tech related because all the money is getting funneled to them. Do you think that for maybe more cyclical type industries or ones that, again, don't have anything to do with the AI build out, that their spreads were widened because they're kind of being ignored by the market?
So I don't. And, we do investment committee meetings every day. And what I see still is pockets of irrational behavior where people are crowding into lending at levels that aren't necessarily where there's intrinsic value. So I think the evidence is still very much in favor of the idea that there's a surplus of capital. You have seen some re-rating of illiquid assets in general. And as I said, if it's data center finance related, if it's CapEx related, and the supply is very concentrated, the concession's been wider. And so you just need a very discerning lens in this environment to be a lender. But again, the intrinsic value is there.
So bottom line, you think yield is attractive right now. All-in yield's high. And we've talked about where that's coming from. 85% of it's coming from the risk-free asset. How risk-free is the risk-free asset right now?
I find everything's in equilibrium. So risk-free rates are high, largely because real yields are high today. That's a reflection of very, very solid nominal growth. Credit spreads are narrow today, but that's reflecting the same very strong growth that underpins credit fundamentals. And the key is diversification, because there is dispersion. It is an uneven economy. And so you want to be very careful how you build the portfolio. But diversification on top of that very high risk-free yield curve is this incredible Sharpe ratio trade. And, it's the compounding. I mean, you can feel the compounding as we're sitting here talking. The income is just ticking up, and that's the regime that we're in. And as I said, we think it's indefinite.
Can we finish on the dispersion? Are there parts of this economy that you are less excited about, that you wouldn't be interested in lending to? Now, of course, I say that knowing that BlackRock is a massive shop and lends to almost everything, but just thinking about where you want to be and where you don't want to be.
So, look, it's an uneven economy. You have the rate-sensitive sectors of the economy that are suffering today, and whether that's small businesses, whether it's anything in the residential real estate market, whether it's in sort of the credit card or auto loan securitizations. If you look at the bottom of the capital stack there, you start to see delinquencies move up. So there are pockets of stress in the economy. Again, if you can get paid the right price for those parts of the market, that's fine. But you just need that discerning lens as you're constructing portfolios.
How does the Federal Reserve calibrate policy to adjust to that when you have these areas of weakness in household balance sheets, but you still see all this strength in corporate balance sheets?
Yeah, it's tricky because their policy tools are pretty blunt. And, when you think about the things driving inflation today, those aren't the things that Fed policy is designed to sort of get at. All the more reason for committees to evaluate what the protocol, what the reaction function of the central bank is. I'm really excited about what the modern toolkit might look like.
You're a task force fan.
Absolutely. Listen, we disrupt ourselves in our business every quarter to make sure we don't have recency bias. We aren't just doing things a certain way because that's the way they've always been done. At a time when there's profound innovation, when there's lack of visibility about where the world's going to be in 6 months or 12 months, the toolkit should be reinvented. The data set should be reinvented. And I'm really heartened that that's the progression.
I was tempted just to ask you if you like the dot plot or press conferences, but you said the toolkit. What do you think they're going to change in the toolkit?
So I think they need to be very open-minded at a time when things have changed. So, whether it's, we look at all the different proprietary data sources, we've been building and compounding that toolkit forever. We had a debate internally this week. Somebody said, the Taylor rule says that the Fed should be tightening. The two most important inputs in the Taylor rule are the economy's growth potential and R-star. I don't think anybody has any idea that's credible exactly what those things are today. So what we need to do is go in and investigate, what the right data points are and then what the right models are for a modern economy. And I'm really excited to see where that goes.
Russ, excited to catch up with you, sir. Who's excited about this fixed income market right now? It's good to see you, buddy. Thank you.
Thanks,
Russ Brown back there of BlackRock. Coming up next on the programme, we'll catch up with Marvin Lowe of State Street, Vivek Arya of Bank of America, Greg Dacko of EY Parthenon, and Eureka Hoffman-Bachadi of UBS. The third hour of Bloomberg Surveillance is just around the corner, with equity futures on the S&P 500 declining by 0.6 and the Nasdaq down by 1.35.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies.
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ula, Saudi Arabia, and this is Bloomberg.
The technology revolution will continue.
It's just rapid-fire movement of money.
The red lights would start flashing if it felt like there was blind euphoria.
We've been on this broadening out theme for a long time.
The market's going to broaden out a little bit.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now in your price action. Your scores look like this. Equity futures down again by 0.5 on the S&P, on the Nasdaq down by 1.29, down by 0.6 on the Russell. In the bond market, a bit of a rally again at the front end of the curve for a fourth consecutive session, down by 3 basis points. The 2-year just short of 4.1%, 10s anchored around 440, down from around 450. Looking ahead to next week, the main event is Thursday. Holiday shortened week next week. It's payrolls Thursday. And so far, the data has been pretty decent, which is why this Federal Reserve has become increasingly focused on hiking interest rates.
It's the refrain of we need to get to 2%. We heard it from Williams yesterday, Goolsbee talked about, and we've even heard it from Kevin Warsh from the chair, and that allowed the market to interpret it as something hawkish. But it is still some stability we're seeing. PCE, maybe not comfortable, but not uncomfortable. And it's allowed for a market, while we deal with the equity market volatility, as we try to figure out how to trade the AI trade, you can see some more calm in both fixed income. And now that same calm seems to be returning to oil markets too.
Don't have any calm whatsoever in the tech trade, at least this morning. Overnight in Asia and South Korea, tons of volatility. 4 days, no gains on the S&P 500. Monday, Tuesday, Wednesday, Thursday. It looks like it's about to become day 5. Unlike yesterday, Micron this morning is trading lower, and Micron at the epicenter of a massive conversation in technology right now. Their 85% margins becoming a bigger problem for everybody else.
It's a huge problem. And I also think about other things. Okay, so we decided data centers are really hot, so let's buy a bunch of optics stocks. If all of a sudden these hyperscalers are spending huge amounts of their budget on memory, what's left over for everything else? This is damaging for many companies that are surrounding the AI trade because Micron can command 86% margins. But we also have to ask, Does it mean that Micron's not cyclical anymore? It's priced at 8 times forward earnings. It's like nothing. And it's priced that way because we've decided this thing is cyclical. Are we going to start to change our minds? Is something going to shift? And that does mean further gains from Micron, which we're obviously not seeing today.
Equity futures shifting this morning. We're down by more than 1%. Micron, that's negative between 4 and 5 percentage points in the pre-market. Coming up this hour, we'll catch up with Marvin Lowe of State Street on another round of tech volatility. Vivek Arya of Bank of America raising his forecast for the chip sector. Greg Dacko of EY Parthenon on how AI is keeping inflation above target. We begin this hour with stocks inching lower following renewed selling in tech. Marvin Lowe of State Street is blaming the Fed. Tighter liquidity is likely behind recent equity volatility, which has been driven by Fed chair Walsh uncertainty. This is loosening, and we think that risk should stabilise. Marvin joins us now for more. Marvin, welcome to the programme. I just want to build on that. Just how much of these jitters in the equity market lay at the feet of the Fed chair and maybe not the likes of Micron?
Well, I mean, for sure, we've had an incredible run in a lot of these stocks, and, they're rich, they're overowned, and there's a natural amount of flow and diversification that goes along with it. In terms of what we're hearing from the Fed, in a lot of ways, it's a position of strength. A lot of these conversations about whether they hike or whether it's an extended period of holding is really a function of the growth story being much better than we expected at the beginning of this year. In terms of the uncertainty that potentially is making its way into the market, which is a little bit more concerning to me, is on the balance sheet policy side of things. And I think that the Fed balance sheet and the amount of liquidity that it's been able to provide in the market has been a tailwind for risk assets, really for the last few years. And a significant change in that policy is something that, we should watch as investors.
Marvin, what would a significant change in that policy even look like over the next several months?
Yeah. I mean, for sure, if we wind up hearing from the Fed that they want to shrink the balance sheet below the levels that we got to at the end of last year, if you will, that created a little bit of volatility within the funding market, and then stopped the QT process and ultimately restarted some of the asset purchases on the Treasury bill side of things. That is something that we've seen have a negative impact on risk assets. It really wasn't that tight of an amount of liquidity that caused that volatility within the funding world. If we significantly look back towards, maybe different regimes, thinking about what the balance sheet might have looked like near the beginning of the GFC, that's a significant change in the amount of liquidity that's in the system.
When it comes to capital market liquidity, Marvin, Ludo Sabran, the Allianz CEO, was talking to the FT and basically made this argument that all of this issuance that we've seen, whether it be on the equity side from SpaceX or on the bond market side, that for him it's a sign that we've shifted from a healthy boom to a stretch boom, now into bubble territory. Do you get red flags from all of the issuance coming into the market?
You know what? It certainly is a very important marker. The amount of capital, the demand for the amount of capital is something in my mind that requires a higher interest rate and ultimately robust liquidity in order to continue. And the fact that spending is so important to the GDP story, which is kind of really where U.S. exceptionalism is rising above. You've got a bunch of Jenga blocks, if you will. It's not as if we're seeing those blocks being pulled out in wholesale manner. But certainly there is a bit more tightness with the uncertainty that we're hearing from a new Fed that really wants to look at everything, and that's not necessarily a bad thing. But there's a period of uncertainty as they kind of figure out where they want to settle.
In the meantime, Marvin, can we just discount oil as an important driver of this economy? We saw some volatility, but we're back to levels that we hadn't seen since before the start of the war. Has oil kind of lost its punch and therefore lost its punch for a driver of this Treasury market?
Yeah, I mean, for the moment, for sure. I think that inflation expectations have probably gotten a little bit ahead of itself in terms of tracking that decline in oil prices. But it has had a limited impact, certainly in terms of the pass-through. It really hasn't affected spending at all. And it's allowed kind of this growth story to be the main reason that we're thinking about a Fed that is leaning towards tightening.
Marvin, it didn't hit spending on the way up. Does it support spending on the way down?
I think so. I think I think that's an underappreciated part of this discussion. gas prices below $4 is just going to put, a few more dollars into a lot of people's pockets.
This is the Torsten Slot camp. Just how hot do you think this economy will be as we work our way through summer?
It has surprised to the upside, really for the last several quarters. I think ultimately it can continue to do that as we go through the summer.
Even so, Marvin, so you have consumers who are spending, but they're extremely unsatisfied. They're extremely upset that inflation is still a problem. And the way that you're seeing that play out is not through spending, it's through the politics of the moment. I mean, New York City's elections are a great example of that. If you do get more policy that kind of follows this populist bend, if we're talking about the government taking stakes in AI policy, how are you thinking about that filtering through to the investment decisions you make?
That's all of the populism that we're seeing is inflationary in my mind. And I really do push back on the view that inflation expectations are automatically on a downward slope because oil prices have come down. I do think that you see that pressure kind of building across wages, building across rents. It does wind up creating an inflationary type of environment that's kind of hard to pull back.
So what does the Fed do in all of this then, Marvin? It's some clear inflation drivers that you're pointing to. Not necessarily seeing anyone condoning hikes on the Fed, but they certainly at least don't sound like they're ready to cut anytime soon.
Yeah, I mean, I think that they need to maintain that tightening bias. So far, the market has voted with confidence in terms of pulling down longer-term yields. Remember, we've been talking about it for the last 6 to 9 months, how unanchored the long end of the curve was because we were concerned that the Fed wasn't going to really get a handle on that inflation. Again, some positives that came out of the FOMC meeting last week was that the long end is behaving. Investors do believe in the inflation fighting will of the Fed. And they need to continue to do that because that long-term yield is so important to really all of the growth within this economy.
Marvin, good to see you. It always is. Thank you, buddy.
Thank you.
Marvin Lowe there of State Street, breaking it down. And please, you brought up the politics. You saw the headlines overnight, I'm sure, about stabilising rents in this city and keeping everything unchanged.
Yeah, I mean, there is some real discontent. And in the past, we've seen that maybe move people more to the right. This time around, it's moving people more to the left. It shows up in NIMBYism of people not wanting data centers in their backyard, about rent stabilization. There is this real growing force, and it's hard to really extrapolate what's happening in New York to the entirety of the world because it's a bit of a bubble here. But you do feel that discontent playing out in policy.
Which is why you see the populists on the right and the left agree on certain economic issues.
The kind of horseshoe of politics.
Bending together. You see interest rate costs on credit cards. That's how we started the year. We were having this conversation around the table yesterday. That's how we started the year. Getting Wall Street at the housing market. All that stuff is coming back to the surface once again.
But I guess the question will have to be how much of it is lip service and actual policy. You look at the housing bill that was just passed by the Senate. They were trying to curtail institutional investment in housing, but there were so many caveats that ultimately it doesn't make that much of a difference. But then they can go to their constituents and say, look, we passed this thing to get institutional owners out of single-family housing.
The conversation building up again going into the midterms later this year. Equity futures, if you're just joining us, welcome to the programme. On the back foot this morning, we're down by 0.4% on the S&P, down by around 1% through much of this morning on the Nasdaq. With an update on stories worldwide, with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. OpenAI is leaning towards holding off on an IPO until next year. The New York Times reporting bankers caution that recent volatility in tech stocks could dampen enthusiasm from retail investors for OpenAI's offering. Microsoft raising prices for its current generation Xbox consoles again, citing a shortage of components. The company says memory and storage costs have risen more than 2.5 times and could double again by 2027. In sports, Ecuador mounted a bold comeback to upset Germany 2-1 in the final match of group play. It's their first win of the World Cup and secures a berth into the knockout stage. Elsewhere, the Ivory Coast beating Curaçao 2-0 to make the knockout stage for the first time in history. And that is your Bloomberg Brief. John.
Some big games later as well, Vonnie. Thank you. France and Norway, Uruguay, Spain later on this afternoon. 2 big games to watch.
Yeah, it's been such a good summer for sports.
It's been pretty cool, hasn't it?
It's been really cool. This weekend, some good games. England, Panama.
You'll be there
for that one. I'll be there.
Right.
I've got my England kit ready.
Oh, have you?
Yeah. It's like an old school Beckham one. It's pretty cool.
Nice.
But it looks wrong when I speak because then this American accent comes out and they're like, oh.
Doesn't matter. I'm sure you've got an English accent in there somewhere.
Oh no,
you can make it.
No. We don't
have to practice here. Bremo did that once. It didn't sound too good.
Yeah, I'm learning from her mistakes, John.
Yeah, we won't repeat that mistake. Up next on the programme, the Morning Calls Plus, we'll catch up with Vivek Arya of Bank of America with a bullish outlook for chip stocks. We'll have that conversation in just a moment, with equity futures negative by 0.3% on the S&P, recovering just a touch. On the Nasdaq, we're down by 1 percentage point.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
When you look at OpenAI and the frenzy around it, it doesn't feel as much like an analyst reading, SK Hynix reports as it does the GameStop glory days. And so I think that they were depending on that frenzy to be able to give them a valuation that doesn't really make sense when you look at the numbers.
That was Sarah Kuntz of Clio Capital weighing in on the potential delay to the OpenAI IPO. We'll catch up with Ed Ludlam on that in just a moment. Let's check out the price action together. On the S&P 500, declining by 1/3 of 1%, erasing some of the losses this morning as we get closer to the opening bell, 1 hour and 15 minutes away. On the Nasdaq 100 this morning, down by around 1 percentage point. On the week so far, down Monday, Tuesday, Wednesday, Thursday, 4 days, no gains on the S&P 500. You make it day 5, and that's the longest such streak of the year so far. That's the equity picture. Here's the bond market story. 2s, 10s and 30s. 2s yields declining by 3 basis points. Once again this morning, for a 4th session, we're down to about 4.1% on a 2-year yield, the longest such run going back to the start of the year, the month of January, I believe. Encouraged by this move in crude, we talked about the disconnect between the return trip we've had in Brent and still the elevated yields at the front end of the curve, maybe recoupling somewhat. Down 3% this morning, 72 on Brent, 69 on WTI. Just bear in mind, we've wiped out the wartime rally on crude, and yet still, yields at the front end of the yield curve are still some 70 basis points higher now than they were at the end of February before that war started. That's the cross-asset picture this morning in financial markets. Let's get you some morning calls. First up, KeyBank downgrading Nike to sector weight, saying the company's turnaround is taking longer to materialize than expected. Your second call from TD Cowen, downgrading onsemi to hold, saying its deal to acquire Synaptics adds complexity to an already complicated model. That stock is down in the pre-market by 13%. And finally, DZ Bank upgrading Qualcomm to buy, reflecting growing confidence in a chip maker's expansion. That name is still lower by 1.6%. Let's stick with tech. OpenAI considering holding off on an IPO until 27. According to the New York Times, bankers are warning recent volatility in tech stocks could hurt enthusiasm, while the CEO, Sam Altman, pushes for a $1 trillion valuation. Bloomberg's Ed Ludlow has more. Ed, good morning, buddy. There's a long list of companies looking to do the same thing, and this one was top of the pile. What do you make of the potential, and I stress potential, delay?
Yeah, potential delay. I mean, the New York Times report cites the concern from OpenAI and its advisors of commanding a valuation they think is fair in this environment. The idea that OpenAI would go in 2027 as opposed to the end of this year is kind of consistent with what we've been hearing anyway. And on June 8th, when they disclosed their confidential filing, they basically said, even though we've done this, it will be some time. We've not set a date, in part because there are lots of things the company wants to do that are easier to do as a private company than being in a public company. But I think what I hear a lot at the moment is there's a level of comfort in letting Anthropic go first, and that Anthropic is moving. You know, it's getting the mechanism in place to do this. There's also a lot of cautionary tale, both not just in the equity, but in the bond story of what's happened with SpaceX in recent days, of pulling the trigger quickly.
Ed, are they also just late? This is the question we've asked, whether this is an OpenAI issue or just a broader capital market story, that we had Alphabet get out early, just ahead of SpaceX, with that upsized monster equity capital raise. Then we had the biggest IPO we've ever seen with SpaceX. And then this week, Danny and I were talking about this earlier this morning, SK Hynix looking to raise $30 billion through US ADRs. That alone is one of the biggest capital raises we've ever seen in US capital markets, Ed. Are they looking at that and saying, you know what, it's too much too quickly? On top of that, you've got the lockup, the staggered lockup of SpaceX just rolling out over the next 6 months or so that they've got to contend with too.
That chronology is spot on. And, we've been talking about it for a month, literally in that order, the sequence of events, and the idea there's a finite pool of capital. The one thing that is slightly different with OpenAI with respect to which order they go in is look at the commonality on the cap table of Anthropic and OpenAI. There are lots of investors ranging from mutual funds to the sovereigns that have decided to back both at different points in recent history, and maybe deciding, is there room in the world for two horses or just one? SpaceX included in that race as well. And then who the potential, sort of cornerstone investors would be in an IPO. But again, just reflecting on what OpenAI has said on the record, which is very limited, there are lots of things that you can do as a private company you may be restricted in doing as a public company. And noting also that Anthropic's kind of overtaken them from a revenue run rate perspective or traction in enterprise deals, etc. That factors in too.
Ed, before you go, down 5% on Micron, wanted to squeeze this in. It's been the conversation of the morning right here on Bloomberg Surveillance, that their 85%, 86% margins are becoming everybody else's problem. Sustainability is the word. Sustainability is the question, Ed. What's the response you're getting?
Yeah. Historically, they do not maintain margins at elevated levels throughout a memory cycle. The question is whether this is cyclical or that the fundamental structure of the memory chip market has changed for good. I heard what you guys were talking about earlier why are we also investing in optics? Why are there supply constraints everywhere? It's really simple. GPU-based architectures dominate data centers. For every one NVIDIA Blackwell, there are 8 corresponding stacks of high bandwidth memory. It's just logic that if what we're hearing from NVIDIA is true, the continued investment in NVIDIA GPU-based systems, and the growth is like that, an upward curve, then supply will remain tight for a long time on the memory side. And because of the pricing power that Micron has and others, and the demand that the data center have with their CapEx power, that's where they go. And it's why Apple had to raise prices on the consumer electronics side, and Xbox followed suit.
Ed, it's good to see you. Looking forward to the programme. 3 hours away. Bloomberg Technology, hosted by Ed Ludlow. Vivek Arya of Bank of America staying bullish on semis, raising his forecast for the chip sector, expecting the market to reach $2.7 trillion by 2030. He writes the AI industry moving to addressing structural and physical constraints from having to defend return on investment before. Memory chip shortages and price inflation remain the critical moving pieces. Vivek joins us now for more. Vivek, welcome. We've been asking how much longer is the runway. The response we're getting from a lot of people is longer than you think. What's your response?
Good morning. We think that the AI infrastructure cycle could last at least through the end of this decade. I think we are only about a third of the way through. And, there is still a lot of adoption ahead when it comes to enterprises, when it comes to consumers. Yes, there has been a lot of deployment of this infrastructure initially by the hyperscalers, but I think we are very early in the adoption of these services and applications by enterprises and consumers on premise. There's a lot of deployment that different countries and states and regions need to do to be self-sufficient. So no, we are extremely bullish. And I think that means very good things across the semiconductor supply chain, whether one looks at computing companies, whether one looks at networking, optics, memory. And, these kind of deployments are never a straight line. There are going to be periods of digestion in between. But I think that despite that volatility, I do think the cycle can last till the end of the decade.
Vivek, on that cycle, I have the same question for you that John was just discussing with Ed, that these stocks, these semiconductors go through boom and bust historically. Is this time different?
Yeah, they do go through boom and bust cycles, and there is there is a scenario where between now and till the end of the decade there is a year where there is a period of absorption. But I would say that is part of any cyclical industry. What we have to question though is that do we believe that the deployment of this AI infrastructure is important, and that is there enough of monetization and funding and the returns that these hyperscalers are getting? And our assumption is absolutely yes. Look at the growth rates that the top search company, the top web services company, they are getting. Their growth rates have accelerated to their fastest level in the last 3 or 4 years. If you look at the largest social company out there with 3 billion plus subscribers, it is growing 20 to 30% a year. How does a company with 3 billion subscribers grow 20 or 30% a year? The only way for it to do that is to extract more value from every user. And AI is a critical tool to do that. That is why we are so bullish, because I think there is a secular theme. But of course, within any secular theme, there could be periods of digestion and in between. And if you look at the growth rates for the end customers that are anywhere between 20 to 30% on an average, the semiconductor industry is not able to create capacity that quickly. It takes years, billions of dollars to add new manufacturing fabs. There's a lot of specialization required. And so I think the supply-demand imbalance can last for a while. And then the final point I would make there is, the top 3 semiconductor companies that I cover, NVIDIA, Broadcom, and Micron, they're all trading at below market multiples. So it is different this time, because I do think the cycle can last longer, and because I do think the valuations make a lot more sense this time around.
Vivek, always good to catch up. Appreciate your time. Vivek Arya there of Bank of America. That final point, such an odd situation to see a move like the one we have on Micron up by more than 200% year to date. And we can sit here and say the stock is still cheap. Yeah. Just crazy how much earnings have picked up and how quickly they have done.
I was going to say, their last earnings, even though they rallied 16%, you saw price to earnings ratios come down because their earnings were still strong. This thing is still trading under 9 times forward earnings. If you believe that it's a boom and bust cycle, that's reasonable. If you think this time's different, as Vivek does, that's pretty cheap.
Micron, lower this morning by around 5%, up on the year exponentially. Coming up on the programme, we'll catch up with Greg Deco of EY Parthenon and how AI spending is driving inflation. Plus, Yahira, has your morning movers fears of a delayed public offering from OpenAI weighing on some cloud stocks this morning?
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are on track for the wrong kind of clean sweep every single day this week. On track, at least, for a day without gains. On the S&P 500 this morning, we're down by 0.4. On the Nasdaq, we're down by 1 full percentage point. We haven't had a run like that all year. On the S&P on the back foot, likewise on a Russell, we're negative by 0.5. In the bond market, things getting better, firming up at the front end of the yield curve when things were getting away from the Federal Reserve. The two-year yield is still well above the policy rate of the Federal Reserve, but it's certainly not as above as it was. We were looking at 420 only a few days ago. We're back down to about 410 on twos. We're down 2 basis points, setting the tone. The firming up of the unemployment story, the labour market picture, has just allowed this Fed to focus more on the other side of the mandate, inflation, things like that. You just wonder if it flips back if we get a bit of weakness just next week.
I mean, it would have to also because on the inflation side of things, now oil has started to come down. So that also gives them a bit of time to play for. I would also just make the comment that this will probably ruin a lot of people's long weekends. Ian Lingen out with a note saying July 10th would have been fine. Yeah, you didn't have to do this on Thursday.
As if 4 days isn't enough, right?
Yeah,
right,
exactly.
We have to hang out for payrolls too.
Yeah, of course.
What did you want, like 3.5? Is that what you wanted next week to be?
Yeah, I think every week should be 3.5. No, we can get all work done.
250 fantastic years of this country's history, and we should have a 3-day week, of course.
Yeah, I think in this country's history, we used to have a 6-day week. So, I mean, I'll take 5.
Or 7.
Or yeah,
given
or
the work ethic of the original settlers.
That's a very good point. Weekends were probably not a thing.
Yes, we look lazy, that's for sure. 1 hour away from the cash open with your morning movers, Yahara has more. Hey, Yahara.
Hi, John. We're seeing the impact from that report that OpenAI may be delaying its IPO until 2027. We saw the news hit SoftBank overnight in Japan, that stock plunging some 13%. And now we wake up to CoreWeave and Oracle both lower in the pre-market because both these names have a lot riding on this listing. Oracle has a $300 billion deal to build OpenAI's data centers, while CoreWeave has a cloud partnership worth up to $22 billion. And that is not helping sentiment around the chip and memory trade. We are seeing names like Micron and AMD falling in the pre-market. Along with this reason, investors growing increasingly worried about demand destruction after we heard from Apple and Microsoft that they are hiking prices on their products because the components are getting way too pricey. So that is fueling concerns about spending eventually slowing at one point. And we end on the semiconductor trade. Not a good day to announce a deal if you're a chip maker, but that's the situation that onsemi is in. Shares are plunging 13.6% after it agreed to buy this company here, Synaptics, in a $6 billion all-stock deal. But investors clearly not convinced since Synaptics makes chips that go into things like laptops and smartphones. And what analysts are saying is that this takes onsemi away from that AI data center story, which is much more lucrative. John?
Yahara, thank you. Thanks for the update this morning. Some of the movers going into the opening bell in about 58 minutes' time. Inflationary pressures remaining elevated. PCE data posting a 4 handle for the first time in 3 years. Greg Dacko of EY Parthenon writing, the AI investment boom is contributing to price pressures across tech-related inputs. As a result, headline inflation should moderate rate, but core inflation is likely to remain uncomfortably firm above the Fed's 2% target. Greg joins us now for more. Greg, welcome back to the show. Let's talk about that. If we are uncomfortably above the 2% target, does the Fed have a role here? Most people would say yes, but if they hike interest rates, what kind of a difference does it make?
Well, I think we have to be careful as to where the pressures are coming from. What I've been arguing is that a lot of the inflationary pressures that we're seeing today are coming from the supply side. And there's really not much that the Fed can do in this environment. If you look at the plus and minuses in terms of inflation drivers, on the downside, you have lower energy prices now that will feed into lower gas prices over the second half of the year. You still have some disinflation in the housing market, but that's likely to come to an end. And then you have the labor market, which is disinflationary because wage growth adjusted for inflation is actually in contraction territory. Some of the supply pressures are coming on the plus side. You're seeing, as you were talking about just a minute ago, higher price pressures on the computer front, on the memory storage front. That's passing from producer prices onto consumer prices. You're also seeing some lingering effects from tariffs, and you are seeing some lingering effects in terms of transportation costs and production costs from higher energy costs still feeding into the supply chain. So the Fed can't really do much about those supply shocks. And I think, in my opinion, the Fed's likely to wait this out rather than tighten monetary policy as it currently stands.
Oh, Greg, let's build some life into that. I've heard from Deutsche Bank, BNP, Bank of America, they're all expecting hikes. We caught up with BofA yesterday, who think they could go as soon as July. What's going to give them the time, the luxury of waiting?
I think there's a little bit of a bias towards looking at other central banks and how they've reacted to this to this environment where inflation has risen. You've seen the Bank of Canada, you've seen the ECB tighten. The ECB is still talking about further tightening. But where did they start? They started at a policy rate that was close to neutral. We're still at a marginally restrictive monetary policy stance. And as I was saying, you're not seeing the typical inflationary forces from the labor market. In my opinion, and this is something that the market does not necessarily seem to be in agreement with, but the labor market is not inflationary. If anything, it's disinflationary. Yes, we've seen job growth stabilize. Yes, we have a low unemployment rate. But if you look at wage growth, which is a key gauge in terms of labor market health, that is declining when you adjust for inflation. Let's not forget, when you and I go to the grocery store, we don't really care about the unemployment rate. We care about the income we have in our pocket, and that income is under pressure from higher inflation. That's gradually eroding spending power. So I think the Fed is going to be very cautious about tightening in this environment where some of these supply pressures are leading to higher inflation, but they're also eroding demand, final demand, and that's an area of caution.
Greg, why aren't we seeing more of that than show up in consumer spending? Why have those figures remained really resilient?
I'll pivot that actually to the other side. You know, there was a lot of talk of massive fiscal stimulus being injected into the economy from the One Big Beautiful Bill, larger tax refunds fueling spending. But look at consumer spending growth in the first quarter, very weak, below 1% on an annualized basis. Look at the trend in terms of consumer spending adjusted for inflation, around 2%. But income, I come back to this, is still flat to slightly negative when you adjust for inflation and taxes. So that is really what I'm very keenly focused on. Yes, consumers can spend with wealth, and there has been greater wealth accumulation. They can spend with credit, they can spend with savings, but we have to be conscious that these are finite resources. If you look on the longer horizon, we're going to be in an environment where that pressure, that income squeeze, is going to lead to slower spending growth. I'm not talking about a recession or a contraction. I'm talking about more conservative discretionary spending happening. And while the World Cup may provide a bit of that lift in June and July, we have to be conscious that there's going to be this cap on spending momentum as we navigate through the rest of 2026.
Greg, though, how much of this market is doing the heavy lifting from that? We started the show speaking with Cam Dawson, who talked about how great the wealth effect is at this moment. How much of that is currently tied to the spending we're seeing, and what does that mean if you do start to get market declines?
I think we are seeing some of that wealth effect feed into consumer spending, especially on the services side. You see a little bit less of it on the retail side, and that's not surprising because a lot of the higher income spending tends to go towards spending on services, leisure activity, travel activity. So that's where you start to see more of that wealth effect. But let's not forget, we're also in an environment where if you have that income squeeze, which is the main pillar to consumer spending activity for the majority, the 99% of us, then in that environment, you're not necessarily going to see an acceleration in consumer spending momentum, you're going to see a cap on consumer spending growth. So I would anticipate that for the rest of the year, we're going to be in that 1.5% to 2% range when it comes to consumer spending growth, and that's going to limit the overall pace of economic activity. That's why I'm conscious and cautious about calling the Fed to hike in this environment, because again, I'm not seeing the types of mismatches between demand and supply that would force the Fed to tighten monetary policy in an effort to curb demand and curb inflationary pressures.
In the meantime, Greg, do you have to communicate hawkishly for the following reason, that it feels like things are a little lose-lose right now? Because let's say the Fed takes your way of thinking about things and talks about it publicly. Fed Chair Walsh comes out and says there's nothing we can do about this. I get it. It's above target, but we don't have a role here. What would happen to inflation expectations if we saw that kind of reaction from the Fed?
Yeah, I mean, that's a great question. I think you have to communicate. That's number one. I'm a little bit skeptical of this notion that the Fed will be communicating less, will be less transparent about its intentions in terms of monetary policy, because that leaves markets and investors to try and interpret what the Fed is going to do. That's going to lead to more volatility. So number one, you have to communicate and be clear as to your reaction function. Number two, yes, you do need to stay with that hawkish stance. Gone is the easing bias. That's a good thing. But you have to communicate the possibility that you will raise interest rates should you see, one, more inflation persistence coming from the demand side of the equation, two, potentially a rise in inflation expectations, and three, potentially a rise in wages. We're not seeing that. We're seeing wage growth continue to ease lower, and real wage growth, as I mentioned, into negative territory. But communication, John, is the most important thing in this environment.
Greg, appreciate your time. As always, buddy, thank you. Greg Danko there of EY Parthenon on this Federal Reserve. It's early days. I don't want to be too critical of an institution that's got new leadership, and we've only had one news conference with the Fed Chair, Kevin Walsh. But he did fail to articulate a reaction function for this Federal Reserve. And that's where some of the criticism has come from over the last week, particularly from the likes of Neil Dutta over at Renmac and others.
For sure. I think Greg's point is an interesting one, that you have to communicate because you don't want it to leave it just to the markets to decide the fate of financial conditions. You didn't really get that sense, though, from Chair Walsh. And I wonder if it does take some big market test for him to step in and issue something that maybe looks like forward guidance in order to get the rein back from what financial conditions are doing.
Not seeing that test this morning. We've got yields lower at the front end of the curve. We're down by about 2 basis points to 4.1%. 10 stable, around 439. Let's get you an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Iran striking a cargo ship in the Strait of Hormuz. Multiple outlets reporting Tehran was behind the first reported attack since the interim peace deal between the US and Iran went into effect last week. A policy win for New York City Mayor Zoran Mamdani. The city's Rent Guidelines Board voting to freeze rents for about 1 million stabilized apartments. The decision applies to both 1- and 2-year leases. It's the first time rents for longer-term agreements have been frozen. The US finishing its World Cup group stage with a 3-2 loss to Turkey. The Americans already securing a spot in the knockout stage. Team US will face Bosnia-Herzegovina in the round of 32 on July 1st. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Ulrika Hoffman-Bachali of UBS, saying the AI rally has more room to run. From New York City, you're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
I think the only reason why Micron's able to post 830% earnings growth in the year of 2026 is because the hyperscalers are willing to reach very deep into their pockets. And I think the big question is how much more upside is there to hyperscaler capex spending?
Cam Dawson, New Edge Wealth, on the program earlier on this morning, just a few hours ago. And that was the central question for this program this morning. The monster wealth transfer that you're seeing from the hyperscalers to the capex takers, the chip makers right now. And really capturing that story through this month so far is a 20% plus decline in Microsoft and a 20 plus rally, percentage point rally, for the likes of Micron. That gap really explains the story of the moment in this market.
And what does it mean for market leadership? Because those big cap tech stocks, they had been like our safety blanket for the market, this nice little corner to retreat to. We had Mag 7. Now we don't really have anything. It is maybe just Micron. So we're trying to figure out what market leadership actually looks like. And that's always a very messy process. And it feels like we're living through right now.
85, 86% margins, and it's becoming everybody else's problem.
It is, whether
Microsoft,
you're Apple,
yeah.
Exactly. I mean, you can have on one day the same story send Micron higher by 16% and Apple down by 6%.
Today's an odd one. I said this a little bit earlier. It's slightly confusing. So their margin's a problem for everybody else, which becomes a problem for them at the same time. That makes sense this morning?
Or it's just South Korea is doing weird things and the ETFs there are doing strange
leverage.
things. Too much leverage. Maybe this is deleveraging, not a fundamental story. You can kind of, pick your adventure of what you want here.
We'll spend some time unpacking that in the next 5 minutes or so. Let's turn to the market. Equity futures on the S&P 500. Futures look like this, pulling back by 0.5% on the S&P. On the Nasdaq 100, we are down by 1.3. We've talked about things firming up at the front end of the yield curve. Twos are down again for a fourth consecutive session. Yields lower. We're lower by 2 basis points to a break of 4.1%. Let's call this 4.0983 at the front end of the curve. Crude isn't hurting. This move in WTI and Brent declining once again by close to 4%. Brent at 72, WTI around 69. That's a cross-asset picture for now. Going into next week, here's the story for you. Before we get there, 10 a.m. Eastern Time, UMich consumer sentiment. Consumer sentiment has been absolutely terrible over the last several months, the last several years. Consumer confidence on Tuesday. Look out for that. More data on Wednesday, ISM and PMIs. On Thursday, it is payrolls Thursday, and I can give you a sneak peek of the estimate in our survey. The median right now is 115. The previous is 172, and these days 115 is seen as pretty good, Danny. A 115 estimate in our survey.
And again, it's the point you've been making. Does that allow the Fed to play for more time or at least concentrate more on inflation? The numbers have been holding up. consumer spending has been holding up. We're just talking to Greg Dacko about this, but the fear is that you are starting to see real wages start to get eaten into. And so at some point, does that spending not hold up anymore?
Stocks this morning down by 0.5%, on course for a fifth day without gains on the S&P 500. Ulrika Hoffman-Bachali writing, fundamentals continue to support risk assets. Equities can move higher. Fed hikes are unlikely, and AI remains the dominant driver of earnings growth. Ulrika joins us now for more. Ulrika, good to see you.
Good to see you, John.
We've got to unpack several themes there. We can save the Federal Reserve. Let's start with the earnings. That's been really supportive of this equity market. You've got 20% earnings growth this year. That decelerates into next year. How are we going to handle that decline?
Well, first of all, three drivers of earnings growth for us globally. One is strong government spending. The four largest economies in the world are fiscally stimulating. Then we have the AI capex that stands now at 2.5% of US GDP, and the consumer still spending. So in the short and medium term, that's very bullish for equity markets. But as we look further out, fiscal stimulus is going to start to fade, and the consumer may come under more duress. So those are the factors that make us less optimistic about economic growth in the US in the longer term.
Can we pick out the capex story as well? We're starting to see the companies doing all the spending. Their stocks are suffering. I've repeated this all week. Microsoft, Meta, bear markets, not fantastic. Is that going to shape their appetite to spend beyond this year? Will that decelerate?
Possibly. We still think, though, the demand for AI is only going to go up. In our estimates, we predict 25% increase in AI activity by 2030. That requires about 5 times the install base of compute that we had last year. So our estimates are only going higher in volume and in price. Having said that, we are now at the middle game of the AI chess game. And there are going to be winners and losers. The opening game, the first 3.5 years, everybody could be a winner. And I think we are starting to see now the separation from the winners and the losers. And we've seen it in software, of course, early in the year. Software was down over 20% in January. Now, I think the big question, to your point about the Max 7 and the leaders that you mentioned earlier, is the internet also going to be disrupted by AI? If you think about what internet companies do, they take our human attention and they convert it into a transaction. But what happens if agents take over? They are doing our purchases. They are making decisions. That could be a very different future. And I wonder whether that also weighs on the internet companies, not just the capex, but also the question of what is the business model of the future going to look like?
How do you find conviction anywhere? I mean, these are huge disruptions, and we won't truly about just how disruptive the forces are until years to come. So how do you actually trade these ideas when they are changing so quickly?
Selectivity is going to be key. We talked about the index level, but if you just look at the index level, you might actually miss the dispersion that's going on underneath the surface. Active is going to be key in our view. Dynamic, being liquid, will remain key as the world is changing so fast. We have not seen a technology revolution that's been moving as fast. And the reason is because it's self-learning. We have never seen a technology like this. And I think these are the key characteristics. We are still invested in the enabling layer of AI, into the physical parts of the economy. I think you can have much more conviction in the physical world. We are going to have scarcity there. We're certainly seeing it along the whole AI enabling layer. The digital economy, I think, is at risk. And I think that's the opportunity now for active management and positioning in those areas of the AI value chain that are seeing increased scarcity value.
So that's the tech story, and it's linked somewhat to the Fed story because of the price pressure coming from that particular industry group. Now we're starting to have this conversation about hikes, and what really caught my eye in your work is that you think cuts are more likely than hikes. Kind of goes against the grain right now of this moment where a lot of people are starting to think about hikes, not 1, 2, maybe 3 if you're at Bank of America. Why do you believe cuts are more likely than hikes?
I will go there. I just want to make one quick comment. You
Please.
said technology. We actually think that the sector boundaries are no longer the right ways to think about the equity markets because AI is going to be also a dividing line between winners and losers in technology. So yes, AI is technology, but not all technology is AI. And I think that's what we're going to start to see in the markets already. So now to the Fed cuts. We still think that the next move is going to be a cut further out next year for the reasons that we mentioned earlier, because the economy is going to slow on the margin. You have just mentioned also wage inflation is coming down. So we think the inflationary picture is going to look better next year. And the labor market, in our view, is going to also remain weaker on the margin. We have seen in the technology sector already 140,000 job losses this year. That's likely to accelerate further in the back end of this year. And I wonder whether other forms of knowledge work will also increasingly being replaced. So the labor market, inflation coming down, our base case is still that the next move by the Fed is going to be a cut. I think the one risk case, though, thinking about what the market currently prices, is that goods prices are going to start to spiral higher. Obviously, we've seen this now with the Apple price hikes. We've seen it across all the consumer electronics already. So that's something we are watching. But there are other offsets. So again, our base case is still inflation trending lower, and then the Fed reacting to that lower inflation and potentially weaker labor market.
On that labor market point, because you made the point about AI, I was just thinking because Matt Miller did an interview with Ford, and they talked about that they had to hire a bunch of their veteran workers back because they thought they could lay off more people for the sake of robotics. They're like, oops, we actually need skilled labor. Do you think that that's a mistake that a lot of companies are either currently making or going to make? And how does that shape this labor market discussion?
I think physical AI, we are quite far away from physical AI. I mean, when I say quite far, it's always a question because things are moving very, very rapidly. But right now, it's about knowledge work. And coding, of course, is the best use case for AI. We are seeing there that now AI code is self-checking, self-optimizing. We are getting into the stage, recursive self-improvement. I mean, these are huge drivers, again, of compute demand. Because if code now can self-improve, you could say, wow, actually, is there ever any limit to the amount of compute that you would need? So it's knowledge work. I don't think necessarily, factory floors will be rapidly completely replaced by robotics, but for sure that's going to be a factor over time. Right now, we're seeing also a lot of productivity growth, just being able to do more. So that's another factor that, of course, is very bullish for economic growth.
Ulrike, good to see you. As always, thanks for breaking it down. The more constructive view on this equity market on a day where we're down by 1.3%, at least for the moment, on the Nasdaq. Ulrike Hoffman-Bachali of UBS. Just on the labour market, Russ Brambach of BlackRock on the programme earlier mentioning Block and the layoffs there. That felt like it was years ago.
I forgot that even happened.
The end of February,
right.
The layoffs there. Ancient history at this point.
I mean, you have seen some select layoffs in some banking sectors, but the whole idea of people being laid off for the sake of technology, I think because of this pushback, you've had less CEOs talk about it. I mean, Standard Chartered was kind of made this poster child of just how much discontent there has been. So I wonder if these layoffs happen kind of more in quiet going forward, just because of that.
There is a public relations problem in AI right now, and that's for sure. Danny, thanks for this morning.
Thanks for having me.
More Danny Berger coming up. Another 2 hours, Danny.
2 hours.
Open interest just around the corner, taking you towards the opening bell. Going into the cash open, we're negative here by 0.5. On to Monday, Lisa will be back alongside Anne-Marie. We'll catch up with Ajay Rajadaksha of Barclays, Alicia Levine of BN Wythe. We'll catch up with Amanda Lynham of Goldman Sachs and Jim Karen of Morgan Stanley. From New York City, this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We've already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Ending the week with another day of selling 30 minutes ago until the start of your cash equity trade. I'm Danny Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up on the show, global stocks are closing out the week in the red as tech jitters return. Adding to the cautious mood, OpenAI is reportedly pushing its much-anticipated IPO into next year. Plus, Middle East tensions persist, but oil falls as ships continue to cross the Strait of Hormuz. What a day. This would be our 5th day of declines, and should we hold that? Something we haven't done all year. Here's where a lot of the pain is. Micron having such a strong day yesterday. That reverses, the tech trade tumbles. So memory isn't doing well, Nvidia isn't doing well. Also adding to that, OpenAI delaying reportedly its IPO. And again, fears of chip demand, maybe that's faltering. We've also seen a number of companies hike prices due to high chip costs. That includes Apple and Microsoft when it comes to their Xbox. A lot to go through. Let's stay on the theme of tech. Let's bring in Bloomberg tech host Ed Ludlow. Ed, let's start with some of the follow-through we're seeing from Micron. Just how much of Micron's story, 86% margins that they see, is bad news for a lot of others in this tech ecosystem?
Yeah, I mean, the Micron pullback of the pre-market this morning is small relative to the absolute surge of Micron in the main session post its earnings. It's like, that's worth pointing out, right? The story has changed very quickly over a 24-hour period where the net effect of tight memory supply and higher pricing, which is good for Micron, means higher prices for end markets, including consumer electronics. And you know, we can get into like how inflationary that will be in various economies. But you know, that's the net conclusion for Micron. They're in an environment where they have control and levers over what they can charge for high bandwidth memory in particular, because there's such demand from data centers who will respond to Micron's pricing power. And on the consumer electronics side, they have no choice. On your question on 85% margins, like historically, memory does not have those margins, but in any memory cycle, even if margins have been elevated, Micron, others have never been able to maintain it, right? It's always come down. So that's just an indicator right now of where their pricing power sits.
And I was really amused by this Wall Street Journal story this week where they talked to the chief business officer of Micron, who was kind of like, it's their fault, it's not our fault that in 2023, when we were in the depths of the pricing cycle, we told our customers, hey, you need to pay us more because it's bad for investment, and basically arguing that a lot of what we're seeing now is because of that classic boom and bust cycle. Ed, does it seem like this time is different? Will we still get a bust this time around?
Yeah, I mean, the way that a lot of the market are describing this moment is we're still in an up cycle in memory. So whether we've broken free of the boom and bust that historically memory markets go through, we just don't know. But in the moment in time we are now, we're on an up cycle. And the dynamic between pricing and trying to invest into greater supply is still an open-ended question. Basically, you know, Micron and the other two main players, Samsung and SK, have said we are going to invest in greater memory fab capacity. The issue is, like, what if this all falls away and they've spent it's highly analogous with GPUs, right? If they spend tens of billions of dollars building new fab capacity, demand then falls away, and then those big tin cans sit there not doing anything. And that's the risk that they're worried about and responding to, even if, you know, the public statement is they're committed to boosting that supply.
Ed, can we also talk about this New York Times report on OpenAI reportedly delaying their IPO? How much of it seems like an OpenAI problem versus the attractiveness for going public at this moment in a post-SpaceX world?
Yeah, like there are very many capital markets considerations, right? Not just whatever is idiosyncratic to OpenAI. The New York Times piece says that the bankers are worried that, like, this week, because of everything that's happening, the retail investor will be perturbed about participation with OpenAI. But also, you know, generally speaking, we've now had time to post-mortem SpaceX a little bit. You know, either based on the equity performance, but you will have seen the story on the paper losses of the bonds that are now trading on the secondaries market from SpaceX. There is finite pools of capital. And I think what you guys did earlier with John on Bloomberg Surveillance, right, is think about everything that's happening in a calendar month or a 30-day period. Alphabet goes to the equity market for $84 billion. SpaceX does the biggest IPO in history, then taps the bond market. SK Hynix will do a US listing for ADRs that will raise just a crazy amount of money. Anthropic seems very prepared to proceed with an IPO as it stands. You know, all of this is pitching the same story to the same pool of investors. And whether they all believe in backing each one is really interesting.
Ed, thank you so much for all of your work this morning. Also great to talk to you, too, on Bloomberg Surveillance. And Ed, of course, will be back at 11 a.m. Bloomberg Tech host Ed Ludlow. Brent falling below $73 a barrel. It's also on track for its biggest weekly drop in a month as traffic continues to move through the Strait of Hormuz. President spoke yesterday at the White House.
They want to make a deal with us very badly, and we probably will. I think we will, but the Strait is open. Yesterday, they took out 19 million barrels of oil. That's the most in the history of the Strait. And the oil prices are dropping like a rock. And, you know, as goes oil, so goes everything else.
Even as shipping resumes through the Strait of Hormuz, an attack on a cargo ship has raised concerns about the safety of commercial vessels. Joining us now is Bloomberg Washington correspondent Tyler Kendall in Washington. Tyler, what is the latest?
Hey, Danny. Well, at this point, a White House official tells us that they are looking into this attack and they're trying to determine whether it was perhaps ordered by the high levels of the IRGC or if it was maybe a rogue decision by lower level personnel. But regardless, it does mark the first such attack since the Memorandum of Understanding was signed, though, as you mentioned, at least for now, it doesn't appear to really be derailing the process in reopening the Strait of Hormuz, as data is still showing us that vessels are transiting through, though it is raising concerns in particular because this attack happened what is considered to be the safer corridor in the Strait of Hormuz. This is that route that hugs the coast of Oman and that the U.S. monitors. But there is, of course, this heightened tension now, as we even heard earlier today from Iran's foreign minister reiterating the idea that any ships that are seeking safe transit have to still coordinate with the country, because it wasn't just this attack that we saw yesterday. There were also at least 3 super tankers who had to turn around, reportedly after hearing warnings from Iran's Navy. Now, we can't say breaking in the last 15 minutes or so. We did get this report from Iranian state TV that the U.S. and Iran have officially established this mechanism to keep communication open to avoid any military escalation in the Strait. This was that aspect that the Vice President J.D. Vance had confirmed after this weekend's talks, but this appears to be the first confirmation from the Iranian side that this could be up and running. But Danny, at this point, U.S. officials have maintained, including the Secretary of State Marco Rubio to reporters overnight, that any deal where Iran is seeking to have control over the Strait or impose fees just will not be acceptable to the U.S.
Tyler, thank you so much for your reporting. That's Bloomberg's Tyler Kendall in Washington, D.C. Now joining the show here in New York is Partners Group Chief Investment Strategist, Anastasia Amoroso. Anastasia, great to see you.
Good to see you, Danny.
I got to say, it's remarkable to look at the price of oil and just this big round trip that we've come through. Yeah. What do you make of when this conflict started? There were so many energy experts who warned we have real constraints in the physical markets. It's going to show up in paper markets, and here we are. And it looks very benign.
That's right. And I think the concerns ultimately did not play out. And, you know, JP Morgan Commodities team actually did a fabulous job looking at this. And they attributed most of the the adjustment to demand moving lower and not necessarily to inventories being drawn down quite a lot. You know, we have released the strategic petroleum reserves, but we haven't actually tapped into the OECD inventories, the private ones, to the extent that I think a lot of experts thought that we would. So the bulk of the adjustment happened because of demand falling lower for things like jet fuel, for example, out of Asia. So I think it's because of that, you know, now when we look at the oil market, we see inventories that are not as low as they could have been. And as we see the flow through the Strait of Hormuz are actually rebounding and very quickly. I mean, we're at 75% to the pre-war levels. Probably by the end of the summer, we can get close to, 90. And by the end of the year, we can have everything restored. So that's a drastically different picture that I think what was ultimately feared. And that's why I'm also stunned, Danny, looking at the price of oil. But $72 on Brent, it's a remarkable turnaround.
Well, if we don't need as much oil as we thought, and then supply also goes back online, I mean, are we talking about a pretty rapid drop even further in oil prices than we were before this conflict started?
Potentially, yes, because what's actually interesting is that we were supposed to be building inventories this year. We were supposed to be in an oil surplus market, and of course the opposite happened. But if you look at month-by-month data, energy experts are expecting that we're going to be building inventories once again. We'll be in a surplus, flipping from deficit to a surplus in August. And so you might imagine that for the next several months, kind of the playbook for a lot of the oil producers is going to be maximize volumes, maximize output. And so as a result, we might actually end up with even a further drop in oil prices into 2027.
Well, the big market force at the moment, one, you have crude doing this, but two, just the volatility we've seen in the equity market and in tech. And we're going to be talking about it throughout the next hour because I'm pleased to say you're joining me for the full hour. But it has been the story of what's good for Micron isn't necessarily good for others. That on the same story, you can have Micron gain 60% in one day, and you can have Apple fall more than 6%. How much of market leadership is really starting to shift? Just given that dynamic of the need for memory and the high prices that Micron can command with its customers.
I mean, look, the leadership is definitely shifting, but I would say rightfully so. And Danny, we have talked about this over the several months and quarters, is that's kind of the natural process of the evolution of artificial intelligence, because you realize now you need to chase this component, now you need to chase this component, and that shifts. And so the bottleneck, sort of where it lives and where it must be resolved, sort of shifts. So I think it's a perfectly natural and honestly logical development. And for investors, it does mean that it's not just allocating to the hyperscalers and expecting to get the bang for their buck when it comes to artificial intelligence. Is really trying to find out what's the next hotspot going to be that's going to have outsized earnings growth over and above consensus. Now, I will say memory today has become consensus, and maybe that's why you have some of that give back in the shares of Micron this morning. But at the same time, when I look at the average selling prices for semiconductors, they're surging for one particular component, which is memory. When I look at the unit sales, once again, they're up significantly year over year for one particular component, which is this high bandwidth memory. So, so that's where investors are rightfully focused for now.
Okay, as I said, we're going to talk more about this, much more to discuss. Anastasia Amoroso is sticking around. But first, a quick check on your equity markets. About 20 minutes until the start of your cash equity trade. And we are looking at losses. This would be the 5th consecutive loss for the S&P 500. Micron not able to save the day yesterday, and indeed it declines today, as Anastasia pointed out. We're down 1.5% for the NASDAQ. Yields, those are a little bit easier. The front end is perhaps more interesting. We're down by nearly 3 basis points for your 3-year yield, for your 2-year yields rather. And part of that does seem to be that the correlations reemerged between oil markets and front-end treasuries, with Brent crude dropping 3.6%. Some of the individual movers this morning, Deutsche Bank and Stifel have lowered their Nike price target. The company's turnaround has been taking longer than expected. KeyBank removed its price target entirely. And a look at Triller, which is apparently becoming a SpaceX treasury company, I don't even know what that means, to a discount to SpaceX's current market value. So I guess they're going to be holding SpaceX, and that's why you want to buy them. And then Strategy falls as Bitcoin falls below the 60,000 mark. Coming up, the inflation fight isn't over. Economists just pushed up their forecast, dimming hopes for Fed cuts. We're going to discuss that next. This is Bloomberg Open Interest.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. First, a landmark win for some New York renters. The Rent Guidelines Board voted to freeze rents on about 1 million rent-stabilized apartments. That delivers a signature campaign promise for Mayor Zohran Mamdani. Meanwhile, landlords warn that the move could squeeze building finances. Novak Djokovic is making his Wall Street debut. The 24 Grand Slam champion is joining private equity giant General Atlantic as a strategic global advisor, helping source investments in sports, wealth, and healthcare. The $126 billion firm says Djokovic's network and business interests could unlock new deal opportunities beyond the tennis court. And Volkswagen is said to be weighing up to 100,000 job cuts and the closure of 4 German factories as the CEO pushes a sweeping overhaul. The automaker is under pressure from U.S. tariffs, weak China demand, and rising competition from BYD and Stellantis. Unions are vowing a fierce fight. Now to the American economy. A Bloomberg survey found that economists are raising their forecast for core inflation and delaying Fed rate cut expectations well into 2026. Bloomberg economist Stuart Paul is here and still here with us as Partners Group Chief Investment Strategist Anastasia Amoroso. Stu, great to see you. What's behind the recent upgrades you've seen?
Well, look, yesterday we saw a very clearly hot
core PCE inflation print, given the tame core that we saw in the CPI report, maybe folks were not entirely prepared for what they saw yesterday. But I'm not going to over-index on what we saw in the PCE inflation report, because about 2/3 of the core monthly print that we saw for the month of May came from things like airfares, it came from things like portfolio management fees, and it came from things like healthcare services. And when that's the case, it's not some screaming sign that there's cyclical strength that's driving spending and inflation. Instead, there are somewhat idiosyncratic factors that I think the Fed will be inclined to read through, at least in the near term.
That's exactly kind of the point I wanted to ask you about, because it does look like, if you look at services inflation on the surface, it did go up. But when you dig into the numbers, it is transportation. Within that, it looks like it's airlines, so therefore jet fuel. And if you look at the price of jet fuel, is starting to come down quite significantly. So maybe that's the question: is do you think the Fed is really going to extrapolate that out and to kind of look at the core and the trimmed measure, and are we going to trim that away? And maybe the trend is actually quite benign outside of that.
Well, so we know that Kevin Warsh has some alternative preferred inflation measures, and I think it's almost anyone's guess at this point what he's going to index on most. I am at least still focused on non-shelter core services, the most labor-intensive services, because that's when you start seeing potentially evidence of something like a wage price spiral that ends up resulting in inflation getting a little bit out of control. Right now, I don't quite see it. Average aggregate labor income growth is running at an annualized pace of about 4.5% to 5% per year. Now, that's going to be too high for comfort for the Fed. It likely means that core inflation runs at a pace of about 2.5% to 3% into 2027. That could be, as we're seeing folks changing their expectations, enough to forestall rate cuts for a prolonged period of time. But all of this hinges on labor market health so much. Yeah. And when you hear about whether it's job cuts in Germany or you hear about AI efficiency reducing labor needs at home, we're not yet seeing enough labor market dynamism for me to be entirely secure in that expectation that core inflation is just going to remain too hot for too long.
I would love to get both of your takes on what lower energy prices will do to this, because we've seen, as we were talking about before, Anastasia, oil markets making this round trip. There's been this thesis, it was presented by Torsten Slok of Apollo, that this in itself will cause inflation this time around because lower energy prices mean consumers are saving more at the pump and they're willing then to spend more elsewhere. Would you subscribe to that at all, that actually lower energy prices isn't as disinflationary as maybe we originally think?
Look, I don't know if it moves the needle really all that much, right? Because well, first of all, let's think about where we actually came from, which is we were worried about, higher gasoline prices dampening consumer spending. But guess what? Consumer spending did not really change all that much. And maybe partially that has to do with the tax cuts that were also, were in effect as the gasoline prices spiked. But I just don't think it moves consumer spending, and certainly not for the higher income cohort. So I probably don't fully subscribe to that view, but I find the points, Stu, that you make about the labor market interesting, because when you look at the labor market, you don't see wage inflation going up. You see wage inflation actually coming down. You see some firming in the labor market. So I actually really wonder, why is it that consensus seemingly is thinking that the Fed was so hawkish? Because you could peel away at a lot of those one-off factors. Core goods inflation seems to be coming down, tariff-related. Energy inflation is coming down. Hopefully semiconductor inflation will start to come down. So, and those are all the things that the Fed can control. So why is it, in your opinion, that the Fed was perceived to be so hawkish?
Well, you bring up an interesting point about all these one-off factors, whether it's energy-induced inflation, a semiconductor shortage. We're living in a moment of the AI build-out. And sure, you could peel any of those layers of the onion back and try to focus on the core of the core of the core, or whatever we start getting to. But when you have all of these factors dovetailing in any particular moment, it's really difficult to then say that there is some sort of lackluster economic activity taking place underneath the surface. What's really going on in the aggregate is something like GDP growth, real GDP growth, running about at potential, maybe a few tenths of a percentage points below potential, but valuations are high. Asset markets are still doing, we're down 5 days in equity, so I don't want to say asset markets are doing
they're
entirely
still
fine,
okay,
but
Stuart. They're okay.
Spreads are still narrow. We still see plenty of IPO activity and additional securities issuance. We still see investment driving economic activity right now. And so it's difficult for policymakers to say that policy rates are restrictive right now. And when that's the case, it's, I think, entirely reasonable that they're going to be at least jawboning in the hawkish
But wasn't
direction.
this part of Kevin Warsh's point that it obviously is not restrictive if you look at things like equity markets, but when you look at the housing market, it clearly is, and that there's some issues there.
This, again, is sort of like the ordering of economic dynamics right now. We went through a period where folks were refinancing their mortgage at sub 3%. And when that's the case, it's not necessarily the case that policy rates right now are restrictive. It's that policy rates and long-term rates were, for 2 years, exceptionally low. And of course, that's going to end up halting housing market activity for a prolonged period of time thereafter. Right. The housing market doesn't turn over that quickly. But what does it mean about current economic conditions? At least when I heard his comment on the housing market, I was willing to discount it. I think that he was focused on the consequences of history rather than the consequences of current policy.
Stuart, thank you so much for joining. Great to get your thoughts. That's Stuart Paul from Bloomberg Economics, and of course, Anastasia Amoroso. Coming up in the next hour, we're going to get the view from strategist Sarah Hunt, who says that more volatility could be ahead as investors wait for clarity on rate policy. You're watching Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Another day of losses for this equity market with Meta and Microsoft now in a bear market. The Nasdaq falls 1.4%. As Treasury yields, at least for the 10-year yield, don't go anywhere. 2-year yields more interesting. That's coming in. Brent crude falling 3.2%. Coming up, it's your opening bell in just 4 minutes' time.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Just seconds away to the start of your cash equity trade. You're watching Bloomberg Open Interest. I'm Danny Berger. It's a market that is headed for a decline for every single day this week, something we haven't done so far this year. It's been quite the ride with tech. Micron does well yesterday. It drags down other things with it. It's falling today alongside the entirety of the NASDAQ, underperforming, down by 1 1/3%. Down at the New York Stock Exchange, ringing the opening bell, we have Society for Immunotherapy of Cancer. 9 million cancer patients per year, they say, that they benefit. Driving immunotherapy breakthroughs, a very important cause. Down at the NASDAQ, and they should be excited. They have returned more than 400% over the past year. They are a robotics company, so clearly doing well. I'm not doing well this morning. Again, the big tech trades slumping. Nvidia, Micron, SanDisk, all of them falling. Micron down 5.7% after gaining some 16% yesterday. SanDisk is also down, Nvidia down. Also, SK Hynix had a very difficult trade in the South Korean session. We know that they want to come to the U.S. market too, so just more supply coming to market. Also, maybe not helping is the fact that OpenAI is weighing a delay to its IPO. We've also seen a number of companies, because of what's happening at Micron, have to hike their prices, including Apple and Microsoft Xbox. Let's go back over to the desk, because still with us is partner group Anastasia Amoroso. Anastasia, look, in this market, I was just pointing out that we're seeing tech falling again today. But Meta is in a bear market, as is Microsoft. Do you think that there is a real question now to whether these tech giants can continue to spend in the way that they are when it comes to AI and data centers? Is this the market trying to force them to pump the brakes?
I mean, look, the market has been trying to force them, I would say, over the course of the last year or maybe 2 years. And all that keeps happening is they keep upgrading those CapEx expectations. I think what the market is likely underappreciating, I think, are two things. First of all, is that there is an ROI on a lot of the spend that's being rolled out. And the reason why you would spend $500, $600, $700 billion, I should say, into CapEx and data centers is because you're expecting to see your cloud revenues grow as a result of that. We're seeing that certainly from the hyperscalers. We also see, as we talked about last time, the hyperscaler cloud backlog of $1.5 trillion. So all of those revenues are yet to be booked. So I do think that's one thing the markets are underappreciating. The other is there was an interesting point this morning about Amazon and how AI enablement of Amazon can actually allow them to be better better at placing ads, to be better at product recommendations. And so, so actually the companies like some of those same hyperscalers are going to benefit in the other parts of their business, whether it's digital advertising, whether it's e-commerce, whether it's social media, et cetera. So I think that's something that investors also should not lose sight of.
Does it, though, just make life more difficult when they sell off like this? Do they get as warm of a reception in bond markets, for example, when they go to issue new debt? Can you continue to see M&A be stock-only deals? I think it was Qualcomm earlier this week that did a stock-only transaction. Just the sheer mechanics of falling stock prices, does that make it difficult for them just to continue the project that they're on right now?
I mean, sure, to the extent that you see some widening, for example, in credit spreads, and do you want to then tap the credit market if your credit spreads are widening? That's where the mechanical connection there. Look, I do think the bond market mechanism is an important one here. It is good to have that sort of scrutiny. And look, these companies should absolutely be watching their free cash flow. And for some, that has dipped into negative territory. For others, it has not. And the bond market is a nice disciplining mechanism for sure.
I was going to say part of the thesis, I'm sure you're coming at it, is from a private markets point of view too, because you've also, Partners Group, undergone, as many of your peers have, this AI infrastructure build out and the funding of that. How closely are you watching what's happening on the public markets in order to kind of inform where the private market side goes?
I mean, the two are absolutely connected, but you have one set of opportunities in public markets, though, but I think you have a lot more in private markets. And areas of focus for us, you were absolutely right, has been on AI infrastructure build out. And we've been investors in data centers for several years. We had a successful exit of a data center at North. We have several other data centers on our platform. EdgeCore, for example, is a large and scaling data center operator here in the United States, Digital Halo out of Asia. So we're firmly committed to that space. And I think what's interesting is that the first wave of AI has been about building out the chatbots and the co-pilots and what I call conversational AI. The next phase of AI, what we're really excited about, is work as a service, a workflow automation. And so that requires a whole lot more data center capacity and a whole lot more chips, et cetera. So I think we also have to invest with that in mind. And again, in our infrastructure business, there's been a big focus on power and any which way that you can get it. So whether it's mobile power generation and getting that to the data center in case there's an outage elsewhere, whether it's investing in an independent power producer in California, and making sure that we have natural gas supplied power and eventually combining that with battery storage. So all of those things are very investable and available, I would say, in private markets. And then on the private equity side of things, we have a distinction that we have to draw there. You can invest in AI natives, but you're going to pay a big multiple for that. You're going to pay up for that. Or you can find what we're calling the AI reinvention candidates. And maybe it's some of the heavier industries like energy, like materials, like industrials, and see, or even software, and see what kind of AI capabilities we can infuse and then hopefully have a higher exit multiple on top of that.
I mean, there does seem to be a disconnect, just listening to you talk about the various opportunities that Partners Group is undergoing, about excitement there and what's going on in retail and more wealth products. Obviously, this is not a Partners Group specific problem. I mean, we've had, even in recent days, some of the more BDCs see withdrawals from them. I know your chairman was talking about this idea of maybe you start to pare back some of your evergreen funds. How is the thinking evolving at Partners Group with more of these sort of wealth-oriented vehicles?
Yeah, well, first of all, we absolutely not stepping away from the commitment to the private wealth channel. And look, private wealth represents about 20% of our business. 80% of our business is actually institutional clients that we do custom mandates for and direct programs. So what our chairman was referring to is that as an industry, we need to be mindful when you have outsized capital inflows at potentially elevated valuations, how do we actually right-size them? And so, case in point, a lot of money has gone into private equity as an industry from the retail channel in 2021 and 2022. And so as a result of that, you have a little bit more exposure to that as an industry maybe that you want to. So that's what it was really referring to. But look, we do see a lot of excitement in our business, I would say, again, both on the private wealth side and institutional side. We see a lot of excitement in our portfolio companies. You know, what's really interesting in private equity right now is we think we do have this inflection point where, first of all, valuations in private equity relative to public equity is actually the lowest they've been in about 15 years. And then when I look at the earnings and the EBITDA growth of some of our portfolio companies, they're accelerating in 2026 from what we saw in 2025 and are still projected to accelerate in 2027. So you have that momentum, and then you have the exit momentum. We have something like 25 exits planned for the next 25 months, give or take. So that's a strong pipeline of distributing capital back to our investors. And then, of course, the investment opportunity set too. You know, Danny, if you look at our pipeline, there are several advanced opportunities that we're looking at it in some of the most exciting, I would say, sectors today, whether it's the electrification theme that we talked about, the grid services, whether it's sports investing and the huge addressable market that we see in sports. You know, whether it's defense, right? That topic, by the way, we saw some pullback in public markets, but absolutely continues to be a topic for us.
You guys got to get yourself a Novak Djokovic equivalent, I think. I think you need a one-up GA.
I'm very happy with that.
You do. Just on the point of exits, before we let you go, that New York Times story about OpenAI delaying its IPO. If the IPO market isn't ripe for someone like an OpenAI right now, does that spell trouble about IPOs as an exit route? Like when you're talking about the dozens of exits you're doing, are you thinking, okay, let's find strategic buyers versus going into these public markets?
Look, OpenAI in particular, who knows whether it's really delayed and who knows why it's really delayed. So I wouldn't read too much into that. You know, the second point I wanted to make is, look, so much value accrues to investors before the IPO. And so that's why I think it's really important to participate there. And then to your point on when we do our exit planning, we certainly will investigate whether public listing is the right exit route for that company. But absolutely, we work with other sponsors in the industry. We work with strategic corporate acquirers. So we have to find the right the right exit opportunity for, and it's very specific for each particular asset.
Anastasia, this has been so great. Thank you for spending the morning with me.
So great to see you.
Really
Thanks,
appreciate it.
Danny.
That's Partners Group Chief Investment Strategist Anastasia Amoroso. About 10 minutes into your market trade, let's get a check on your equities. And it's one of these days where you have the majority of stocks moving to the upside. 316 stocks are up. However, it is a down market, and it's because the big tech heavyweights are down. Microsoft, they're having a better day. Again, they are in a bear market currently. Healthcare names doing well too. But again, let's look at the downside, because Micron, you know, used to be that NVIDIA was the stock that you woke up and checked. Now it has to be Micron, down 11 points, or dragging the index down by 11 points, followed by Broadcom, Advanced Macro, and Lam Research. Coming up, as you can see, it's been a whirlwind week for tech. It ends on a sour note. Mandeep Singh of Bloomberg Intelligence joins us next.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Gray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets.
I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Time now for some top calls. Here's what the sell side is saying. First up, BTIG initiating Robinhood with a buy rating, citing strong growth prospects, rising customer engagement, and a young customer base that's moving into peak earnings years. Next up, KeyBank downgrades Nike, saying its turnaround is taking longer than expected as China uncertainty, marketplace pressure, and management changes could cloud the outlook. And finally, TD Cowen downgrades onsemi after the company announced plans to acquire the chip company Synaptics. The firm says that the deal adds complexity to an already complicated business model. And it is overall another tough day for tech. Chip makers declining. And there is this report from the New York Times. OpenAI may delay its IPO as Sam Altman hunts for a $1 trillion valuation that advisors have told him he's not going to get. Let's discuss with Bloomberg Intelligence Head of Global Tech Research, Mandeep Singh. Mandeep, I'm curious to get your take of what you thought when you read that reporting. Is this just an IPO problem? You had SpaceX, it's making its life difficult for other tech players who are looking at sell-off. Or is there something fundamentally challenged with OpenAI that would make it less attractive for it to be public right now?
I think right now OpenAI does have a problem in the sense their business model is not as established as, you know, some of the other players that have recently gone public. And not that SpaceX was any better, but at least they have, you know, multiple revenue streams. In the case of OpenAI, they used to be at the frontier, and it was about ChatGPT. Well, ChatGPT clearly is slowing down. They don't have an ads model that generates a, you know, revenue from freemium users. And they have pivoted to coding agent, but the leader is still Anthropic. And now you've got open source companies that are encroaching as well. So when I look at, you know, what will excite people about the OpenAI story, I think they may have a hard time convincing, you know, at a $1 trillion valuation. Again, remember, when Meta IPO'd, it was a $100 billion company. So you could see the growth trajectory and you would want to participate in that. At $1 trillion valuation, when you have got so much competition from hyperscalers, it's a tougher story to sell. So I can see if you're burning a lot of cash, negative margins, you may have problems with your IPO.
The open source story, I feel like I've seen more reporting more recently just saying that companies are turning to open source, that there was a Chinese model put out recently that all the metrics showed that it was performing just as well as an Anthropic or OpenAI. To what degree are you seeing the shift happening of companies saying, I can't spend as much as some of the big foundational LLMs want me to, and therefore I'm turning to open source?
I think now that we see stories of Micron, you know, raising prices like that, everyone right now is trying to control their costs. And even though, you know, OpenAI's model is still better than the open source models, but because of the higher costs, it's causing this demand destruction in the sense like you have no choice but to look for open source options. And I think that's where all these LLM companies, I mean, I feel the hyperscaler stocks have started going down a lot more now, whereas previously, if they were raising CapEx, that would drive the stock higher. That seems to have changed recently.
Do you think that puts pressure on them and that maybe even curtails some of the spending that they're doing if we continue to see these drops? I mean, again, Meta and Microsoft in a bear market now.
Especially Meta and Microsoft, because their ROI is still questionable. And yes, some people may say Meta is growing top line, you know, 20% plus. There is some AI lift. Well, they don't have a frontier model yet. And Microsoft is trying to figure out what is their AI strategy post OpenAI going to Amazon. So I think there is definitely a case where one of them blinks and says, okay, I'm not raising my capex as much as people thought. And that is a big risk, especially when you see memory headlines every day. I think that's the thing to worry
Mandeep,
about.
Can you just explain to me, because Ed Ludlow was talking about before, that when you have these GPU stacks, you need to have Micron in there. You have to have this high bandwidth memory. Is that the same for like TPUs or other more like efficient, like the Samba Novas of the world? Do they all need Micron in there, or is this like a very specific, if you're running GPUs, you need that?
No, you need it for all the accelerators except for Cerebras. So Cerebras uses SRAM. That's why NVIDIA bought Grok. And so there are alternatives. And look, when you run into, situations like this where something is so cost prohibitive, you look for alternative. That's what you do, whether it's on the algorithm side, what Google did with TurboQuant. There will be some sort of a way for you to consume less memory and not keep, buying memory. I just can't see a supplier holding everyone kind of, hostage to the high prices, and people.
So the boom bust cycle then maybe will continue. They will remain cyclical then in that view.
I mean, I just can't see every hyperscaler, struggling to kind of buy memory at these prices and hurting their margins. I think either there will be an alternative, or one of them says I'm scaling back, and then others will feel easy about scaling back. So clearly we may be close to some sort of a digestion period. I mean, again, it's a very powerful technology. Everyone will keep investing, but I just can't see memory prices, keep going up, and the margins that Micron is posting. I think it's drawing a lot of eyebrows right now in terms of what they're doing.
Mandeep, brilliant as always. Enjoy the rest of your Friday and your weekend. That's Mandeep Singh from Bloomberg Intelligence. Coming up, hundreds of stocks are changing places in the Russell indexes. We're going to speak with the FTSE Russell's Catherine Yoshimoto about what it means for investors. That's coming up next. You're watching Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
A tough week ends on a tough note. We're down again this morning, and that's being led by tech, down 1.33% for the NASDAQ. The Russell 2000 small caps had been leading. We had seen a rotation Again, that takes a pause, a breather today. Dow Jones does do better. So you are seeing this trend, some of the tech. Again, if you don't have as much tech in your index, maybe you're doing a little bit better. Bloomberg dollar spot somewhat steady. Brent crude dropping 4% with the hopes that we'll get a clearing of the Strait of Hormuz, even though some ships, there was that report of a Singaporean flagship falling under attack. Nvidia, Micron, both of them are dropping. Micron gained 16% yesterday, and it stops this morning. Those gains down 6%. SanDisk also down. Look, it was a bad day also for the Kospi and for SK Hynix. Maybe it's a deleveraging that has sort of bled into the U.S. because you've also seen some of these ETFs, especially the leveraged ones, they're not performing well. And there's been this weird question about, like, how do you even form them? Can you find people to take counterparty risk? Apple also gaining after falling yesterday on higher costs. So today also marks the annual Russell reconstitution. More than 200 companies are set to join the Russell 2000 index. Let's head over to the desk now and take a look at how this rebalancing could weigh on the ETF universe and generally stocks. Joining us now is FTSE Russell Director of Product Management, Catherine Yoshimoto. Catherine, great to see you. And look, someone made this point to me. It's really interesting because the Russell 2000 has outperformed so much. And so now you're seeing some of the small cap winners get like rebalanced out and new entrances in. How are you thinking about what this reconstitution looks like this time around?
Well, the reconstitution has been occurring during an interesting period. As you know, the small caps have really been on a tear over the past year. As of rank day, April 30th this year, small caps were at 44%, large caps only 30%. But it is all part of the important ecosystem presenting the broad market, what the markets are doing. So reconstitution is vital to ensuring that small cap stocks are in the Russell 2000, large cap stocks are in the Russell 1000.
How are you thinking about the small cap universe? Because we are in this world, we're just talking with Mandeep about it, that like OpenAI has become so big that when it comes to market, it looks like a fundamentally different company than when, for example, Meta first IPO'd. Are you seeing the types of small caps coming into this market that end up in the Russell 2000 maybe less interesting or less robust? Because these companies are just waiting to go public.
I think Russell 2000 presents a great opportunity for investment managers to find opportunities that aren't, as followed very well. I mean, that really is the benefit of using the Russell 2000 to look for opportunities in terms of the small cap companies, joining first into the Russell 2000. There are examples like Netflix, Amazon.com, even Nvidia that first started in the Russell 2000 shortly after their IPO. And today, as you know, they are among the largest cap companies in the market.
Well, also, I believe as of today, SpaceX is also going to be added into the Russell indexes. And there's been a lot of pushback on this idea that it hasn't gotten the seasoning period. And we see it in the volatility today. What do you say to that pushback, that this doesn't belong in indexes yet?
So actually, IPO additions are part of the Russell DNA. Since 2004, Russell indexes have added IPOs on a quarterly basis as they become eligible. They're still following, we're still testing for minimum voting rights, minimum float. SpaceX is being added at its float adjusted weight. So people are actually surprised to find out that the weight of SpaceX and Russell 1000 is projected to be only 12 basis points.
So it's in there, but it's just like a little dash of SpaceX.
And as more, the lockups get freed up, then the weight will grow. And that's part of including it early enough so that you're not having a major rebalancing event later that adds to significant turnover.
Catherine, thank you so much for joining. Great to see you on this Friday. That's Catherine Yoshimoto of FTSE Russell. And, of course, tune into ETF IQ that airs Mondays at 12 p.m. noon. Coming up in the next hour, Sarah Hunt from Alpine Saxon Woods, plus billionaire Robert Friedland on his new chip startup, and the CEOs of BlackBerry talk about growing demand for its software. All of that in your second hour of Bloomberg Open Interest.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Sherry Preston. An international aid effort has been mobilized trying to get more help to Venezuela. The death toll has risen to 589 people at least following this week's double earthquakes. ABC's Victor Oquendo says thousands have been injured and thousands more still missing.
As many as 25,000 still unaccounted for, as experts warn the death toll could ultimately top 10,000. New aerial footage capturing the extent of the devastation. High-rises leveled. Blocks upon blocks reduced to debris.
Acting Venezuelan President Delcy Rodriguez says rescue crews are working tirelessly to try to get those who are still trapped. The earthquakes were among the strongest to hit Venezuela in over a century. President Trump's former national security advisor John Bolton is in a federal court in Maryland right now. He is expected to be pleading guilty to mishandling classified information. There are more than 36 wildfires burning in 12 states, including Utah, where every county is experiencing drought.
In Utah, the Cottonwood fire has scorched more than 70,000 acres, prompting evacuations for hundreds of people and burning down a popular ski lodge, the Eagle Point. Now, local, state, and federal agencies are all on hand trying to keep it from threatening neighborhoods. And the Iron Fire has also burnt more than 40,000 acres.
That's ABC's Trevor Ault. The cost of electronics, including laptops from Apple and Microsoft and video game consoles from Nintendo and Xbox, going up. The reason? The AI chips needed to run them.
Computer chips are in pretty much every device we use every day. Think TVs, speakers, smartwatches, appliances, even cars. So far, iPhone prices are not going up, but one analyst tells me that if this shortage of components does not improve, this is really just the tip of the iceberg for other price hikes later this year.
ABC's Elizabeth Schulze, AAA thinks 72 million Americans will be on the roads over the 4th of July holiday. You're listening to ABC News. New worries for hundreds of thousands of people living in the United States after Thursday's Supreme Court decision.
In a 6-3 ruling, the Supreme Court clearing the way for the Trump administration to cancel the temporary immigration status of hundreds of thousands of Haitians and Syrians. This ruling will impact those immigrants and their families who have been living and working legally in the U.S. for years, forcing them to leave or face deportation.
That's ABC's Rachel Scott. The court has not ruled yet on birthright citizenship, the constitutional right that President Trump wants to take away. 2 weeks after she escaped from her enclosure at an exotic animal ranch in Texas Hill Country, Gracie the giraffe is still missing. Just as they would in a missing persons case, law enforcers are using every resource at their disposal in finding the missing giraffe. They say they've hired helicopters and flown in with drones. They also have people in the county who are keeping a watchful eye out. The sheriff there says that area is full of mountain lions and rattlesnakes. They say that Gracie is a very big animal. However, she could fall into a cave or a sinkhole and break a leg. They're trying to find her, but so far they have not been able to. The heat wave continues blanketing Western Europe, even though it's spreading further east. 55 people have now drowned after trying to cool off in rivers and streams in France. Drinking alcohol has been banned in Paris parks, and alcohol sales are banned past 6 p.m. with the suggestion to drink water instead. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, streaming live at Bloomberg.com as well. Scarlett Fu is out today, but not to worry. Bloomberg's Christina Aquino joins us here for the next 2 hours. Christine, thanks so much for joining us. Coming up, we got a busy show here. We're going to talk to Joanne Shu. She's the University of Michigan Surveys Director over there. We got the UMich data out today. A little bit weaker than expected, but we'll break it down. Ed Ludlow, BTech anchor on the top tech stories. SpaceX trading down a little bit. The bonds are trading off, particularly some of the longer-dated bonds, and we'll talk to them about what's happening in the world of technology. Kathy Entwistle, Morgan Stanley Managing Director, will get her thoughts on these markets. We'll check in with Dan Roth, CEO and co-founder of Scaled Cognition, to discuss the company's $100 million A funding announcement and what this company's going to do with it going forward. Then we'll check in with Randall Williams. He covers all the business and sports. It looks like the Mets fired their manager here, so that's for the New York folks. That's kind of big. But we'll talk to him about some of the big stories out there in the world of sports, including the World Cup. So a lot going on out there. But right now, let's kick everything off with the Bloomberg Business Flash with Alexis Stockers.
All right, thanks, Paul. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. U.S. consumer sentiment rose in June as lower gas prices provided some relief for Americans grappling with high inflation. That's according to the University of Michigan survey. Meantime, on Wall Street, another burst of heavy selling, pummeling chip makers at the end of what has been a bruising week for AI winners. We've got the S&P 500 trying to make a comeback, now down about 4 points. Dow Jones Industrial Average off about 44 points. NASDAQ Composite down 82 points. So the major indexes here well off their lows of the morning, and the NASDAQ 100 down more than 200 points. Leading that slide, the chip makers, Micron, SanDisk, Seagate Technology, all moving lower. Of course, Micron yesterday hitting a record high with its stock after that blowout earnings report. Shares of Apple on the rebound, up about 1% after falling 6% yesterday on news it is hiking prices on a bunch of products. And speaking of hiking prices, Microsoft is raising the price of the Xbox console for the third time in a little over a year. Microsoft blames a shortage in components for the price hikes. Shares of Microsoft rallying here today about 3%. Brent crude $72.29 a barrel, down nearly 4%. West Texas Intermediate crude below $70 a barrel, down 3 3/4%, and the Bloomberg Dollar Spot Index down 0.25% at 1221.03. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash.
All right, Alexis, thanks so much. We appreciate that. We've got Christina Aquino sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube out there. Right now, let's take a look at what's happening in the markets. We got a little bit of sell-off, but as Alexis just reported, we're coming back from the lows in a big way. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Bailey Lipschultz. Billy, what are you looking at today?
Yeah, I want to start with a bit of a merger move on Friday here on semi ticker ON right now, down 18%, while Synaptics ticker SYNA up about a little more than 2%. This comes after an all-stock deal that will combine the two companies, obviously, with On Semi acquiring Synaptics. About $6.2 billion. So Synaptics holders will get 1.35 shares of On Semi. Maybe a bit of your normal arbitrage trade as we see the acquirer, who's going to get diluted, down under a bit of pressure as ARBs kind of try to profit off of that spread. The one thing that does stand out from this deal, obviously in the semiconductor space, but also the fact that, according to analysts, this acquisition would push it more towards the edge within AI. So thinking about smartphones, other actual devices, and away from building out data centers. So the bullish kind of perspective as it relates to On is that this does expand their TAM as opposed to just really diving deeper into data centers. Again, just given all the back and forth on, are we overbuilding, and what does this ultimately mean for them?
What I like about this deal is Synaptics is being advised by Frank Quattrone's firm. Frank Quattrone is the leading technology M&A banker for the last 30 years. His firm is advising, so still writing tickets in that space.
All right, Bailey, what else you got for us? You got some chip stocks, I see?
Yeah, I guess kind of looking more broadly, want to focus on SanDisk, which is down about 4%, ticker SNDK. Obviously, we have been seeing quite the volatility as it relates to the Philadelphia Semiconductor Index, right now down about 3%, but essentially back to where it was 2 days ago. Even on a weekly basis, the SOX is on pace to drop 6%. That'll only be its worst weekly performance since early March. So as much as we want to talk about a big rally yesterday in the wake of the Micron results, now we're seeing a bit of kind of risk off being dialed back. Investors may be bottom feeding as it relates to software names selling some of the big winners. You just got to keep in mind the fact that the SOX is up, 91% year to date still. So even if we are seeing a bit of red on the screen, it's still an industry that's been kicking butt.
All right, one more.
Acadia Pharmaceuticals, ticker ACAD. You know I love biotech covered healthcare for the first batch of my years here at Bloomberg. So that stock right now up double digits, up about 12%. Biggest gain since last May. This came after the European CHMP, which is equivalent to their kind of FDA, gave a positive opinion for its drug to treat symptoms of Rett syndrome. That is a rare disease that kind of affects development of women or young ladies. This is a reversal, though. So this is a group that really was negative on the drug debut before, but then kind of reversed that. That normally does not happen with these agencies. So looking at the Wall Street reaction, positive update, obviously, as it relates to the potential for sales of this drug in the European Union and what that could ultimately mean. Again, biotech, a lot of risk, a lot of reward, but right now, Acadia, one of the high flyers.
All right, very cool. Billy Lipschultz, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Looking at that UMISH number, the headline print came out at 49.5. The good news is it's better than 48.9 of last month, but a little bit below where the street was looking for. Let's break it down with Joanne Shu. She's the University of Michigan Surveys of Consumers Director. Joanne, what did you see from the consumer sentiment data that you guys were collecting?
Essentially, consumers are perceiving a little bit of relief from the moderation of gas prices. However, consumers remain really quite burdened by the persistence of high prices. At this time, they're a little bit less worried about long-run consequences of the Iran conflict, but they still think the short-run outlook is pretty poor right now for the time being.
Yeah, well, Joanne, as you mentioned, it's not just gas prices that a lot of households are worried about, right? They're also grappling with high food costs, high housing costs, and other essentials. How much of that is playing into the numbers that we saw today?
That is a large part of it. We had about 56% of consumers telling us spontaneously that their personal finances were being eroded by high prices. And that's the third straight month that a majority of consumers have said so. So it's not just gas prices, it's high prices all around. So despite this moderation in gas prices, views of personal finances, views of sentiment are still pretty low from a historical perspective.
I guess on the plus side, though, I mean, folks are employed. We got a 4.3% unemployment rate. That's pretty much full employment there. That's positive on the positive side of the ledger, I would think.
Yeah, so we haven't seen much deterioration in labor market expectations in recent months, but they still haven't really recovered to what the strong labor market expectations we were seeing about a year and a half ago before we had the escalation in tariff rhetoric. There are still a lot of consumers who are worried that the other shoe is eventually going to drop with tariffs. We had over a quarter of consumers mentioning tariffs at this time, even though it's not really in the news. So consumers are still pretty cautious about the future at this time.
All right, and one of the measures as well showing 5 to 10 year inflation moderating slightly here in terms of expectations. Is that something that would be big enough to factor into the Fed's reaction function, or too soon to say?
It's too soon to say. So this month's read is exactly where we were in February. And in February, we were still elevated relative to 2024 and much higher than we were seeing before the pandemic, the last time we were closer to the Fed's target. So consumers don't necessarily think we're out of the woods, but they're no longer bracing for a worst case scenario with a very long run impact of what's happening in the Middle East.
Joanne, thanks so much. Appreciate it. As always, Joanne Shu, she's the University of Michigan Surveys of Consumers Director there. We like to talk to them every month on that University of Michigan sentiment. Again, it came in at 49.5. Again, the good news is that's better than 48.9 last period, and maybe that reflects lower gas prices. The consensus was for a reading of 50, so we didn't quite get there, but maybe a little bit of improvement there. Christine, what are you guys working on in your world these days?
I mean, we're talking a lot about what happened in markets this week, Paul, in terms of that kind of very zigzaggy move in equity markets. I mean, one thing that we're focusing on in particular is just the amount of leverage in this equity market at the moment. Okay. A lot of retail investors caught up in that. And that's great when the market is on the way up, but not so much when we see a downturn like this week's.
Yeah, it's interesting to see. And we talked to a lot of the folks at a lot of the retail platforms, whether it be Charles Schwab or E-Trade, and they tell us that really for a long time, when there's dips in the market, the retail buyers come into the market, and they've been, you could argue for the last 15, 20 years or since the great financial crisis, you buy the dips.
Yeah, exactly. But given that we're seeing just overall, right, confidence not exactly at the highs at the moment, you can imagine a lot of retail investors probably feeling a little bit more cautious, especially when their household finances, gasoline costs, food costs are on the high side at the moment.
Yeah, I know. But I mean, we're getting back again. WTI crude oil at $69 here. We were down in the low 60s for, the few months before the war. And that was kind of where the market was. And if you talk to the guys like Mike McGlone at Bloomberg Intelligence, he thinks that's where we're going. He says you're going to see a 4 handle on oil.
Yeah, I mean, that would be amazing.
Pretty aggressive. And he says that's just simply supply and demand out there. So we'll keep an eye on that. SpaceX trading a little bit better. We did break below 150 here. It's at 150.65. The reason I call out the 150 number is that's where the first print was when on the IPO day. When they opened up the stock, which priced at 135, they were able to open the stock at 150. A monster amount of stock traded there at that 150 print. So a lot of people out there own it at 150. That's their cost basis. So if it gets below 150, that's I'm like, ooh, that could be tough from a technical perspective. So we'll keep an eye on that as well. And the bonds are definitely under pressure, particularly the long-dated bonds. Tom Keene earlier was quoting them at 96 and a half versus the par that they were priced at. So we'll keep an eye on that. All right, this Independence Day, folks, Bloomberg's got some good stuff for you. Join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app. Saturday, July 4th, starting at 7 a.m. Eastern. And if you're not familiar with New York City, the Intrepid is an aircraft carrier from back in the, 40s, 50s, 60s, somewhere like that. And on the deck of this, and it's moored right on the west side of Manhattan around 34th Street. and it's open to the public, and it's really cool to go on. They've got a lot of fighter jets and other kind of cool military jets on the flight deck, so you can see all the jets. You can go into the ship as well. It's very cool to go. So if you're in New York City, go check out the Intrepid, and that's where Bloomberg Television will be this July 4th. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up on 1022 on Wall Street, I'm Alexis Christophorus from the Bloomberg Interactive Brokers Studio, and stocks are doing an about face here in the first hour of trading after starting the day sharply lower. We have got stocks mixed at the moment. The S&P 500 in the green by about 9 points. Dow Jones Industrial Average climbing about 77, and the NASDAQ Composite now down just about 12 points, though the NASDAQ 100 is still down by triple digits, off about 110. We've got Brent crude at $72.19 a barrel, down 4%. It's low of the morning. West Texas Intermediate crude down nearly 4%, below $70 a barrel. The Bloomberg Dollar Spot Index down about 1/3% at 1220.60, and the Japanese yen up 0.1%, 161.59 against the U.S. dollar. Bitcoin in the spotlight today. It is on the rebound a bit, up about 1%, just below $60,000. After rallying to a record high yesterday, shares of Micron Technology down about 2% today, and shares of ON Semiconductor, the biggest loser in the S&P 500, down nearly 20% after agreeing to buy Synaptics in a roughly $7 billion all-stock deal as it looks to push into physical AI. And Rocket Lab and Lockheed Martin among the companies joining SpaceX and NASA to create a satellite network to track airborne threats. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Paul and Christine.
All right, Alexis, thank you so much. We appreciate that. Christina Aquino sitting in for Scarlett Fu was on assignment today. Scarlett will be back Monday. That's what people are telling me, so we'll see how it goes. But we got Christine here for us today. We're in good shape. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. All right, this memory chip shortage, it's becoming a thing. I mean, for people like me and you and our listeners and our viewers here, Apple's raising prices for a lot of stuff. Now it's starting to hit home for a lot of people. Ed Ludlow, B-Tech host, he covers all this stuff. He's out there in our San Francisco office. Ed, I think, people who weren't really paying too much attention to this chip shortage thing, I guess they're going to start thinking about it when they go to their Apple store, and they have to pay more for some of those products. What's going on?
Yeah, you kind of nailed what's been a very recent change in psychology of the market. We've gone from a place in the middle of the week where Micron is absolutely surging, and the market is cheering a situation where memory chip supply is so tight and the memory names have pricing power, to now looking at it from completely the other perspective, from the seller of memory to now the buyer. And that Apple case study, the way that Bloomberg put it is Apple raising prices because one single component cost is so high is an extreme measure. And so now extrapolating out and looking at what happened in Asia trading overnight, a little bit the trading of this morning's market, the concern is the next step is we come full circle and demand for consumer electronics is dampened because of high prices. And by extension, memory, ironically, sees demand dampen a bit. So it's a really sort of circular debate the market's having with itself here.
Well, when it comes to the memory chip shortage, is this something that is acute at the moment, or is this going to be the new normal, especially with all the demand for chips from everywhere, essentially?
It's incredibly severe. So like in very simple terms, all these data centers that are getting built specifically with NVIDIA GPUs require lots of what's called high bandwidth memory. High bandwidth memory is just DRAM. Everyday DRAM goes into your own consumer electronics, layered upon one on top of the other. For every NVIDIA GPU you have, there are 8 corresponding high bandwidth memory chips, so lots of layers of DRAM. And because A, Micron and other memory names have pricing power, and B, that those building the data centers have lots of money, that's where the supply is being prioritized. The net result is that the consumer electronics industry, not just Apple, Xbox raised prices on its consoles too, they have no choice but to pay that higher pricing in order to secure supply. It is a very severe situation. And the weirdness was that in the moment, again, there was euphoria in the markets Wednesday into Thursday. Good for you, Micron. Stock surges. It's a really enviable position to be in. And what Micron said is that this situation is going to last for at least 18 months before it improves. So it's a lot for the market to decide, like, what is good news and what is bad news here.
Ed, when we had those higher egg prices coming out of the pandemic, my genius solution was to just make more chickens. And that basically is what happened, and egg prices came down. That logic, I don't think is going to apply to memory chips, will it?
So historically, before this whole AI thing, memory was highly cyclical, highly commoditized. It was an industry that went through boom and bust. When consumers got disinterested in PCs and smartphones, the memory market crashed, both in terms of pricing. And so that is an industry that's so sensitive to getting supply right. The story under this administration in particular, but for a longer period of time, has been, let's get these companies to build more capacity. The problem is, what if they build all these memory chip fabs and then demand evaporates and they're left with very large facilities that aren't doing anything? Well, that would be a really less than prudent financial move. That is still there. The difference is that the data center demand seems to be here forever. It has staying power. It's not as cyclical as the consumer electronics industry has been. it's a really hard one for them to get right.
All right, and let's switch gears and talk about this OpenAI IPO, which may not be
Shall
happening
we?
now until 2027. What can you tell us about that?
I'm just looking at my bio to see if we've published yet. We haven't. What I can say is that it's consistent with what OpenAI said on June 8th when it disclosed its confidential filing, that they would stay private for quite a long time because there are things that they want to do that are more achievable as a private company than a public company. There is a lot going on in capital markets, as you know. We had the biggest IPO of all time in SpaceX. There is a lot of activity in the bond market, not just SpaceX tapping the bond market, Nvidia as well being the most recent, and there is a finite pool of capital. It's consistent that OpenAI would take its time, but I think what I can say safely on air is, like, I think OpenAI is also pretty calm about the idea that Anthropic goes public before them. You know, if you put it in the context of a race between two AI companies.
Ed, thanks so much for joining us. Always appreciate it. Ed Ludlow, who's a BTech co-host out there in San Francisco, Silicon Valley, right smack in the middle of it all, so he knows what's going on out there. Let's get back to these markets. We actually have a little bit of green on the screen here. The S&P erased its loss, now +7. The Dow's up 90 points, and the Nasdaq's down about 10 points right here. Kathy Entwistle joins us here, Morgan Stanley. She's a managing director over there and a private wealth advisor. Kathy, what's the conversation you're having with your clients these days about markets?
Great to be here. Thanks for having me, Paul. And yes, the conversations are continuing. Everybody's very interested to hear what we're thinking about, where we're going with AI. Is this a bubble? Where should they be investing? How do they protect their portfolio and grow it thoughtfully? So there's a lot of conversation going on right now. Clients are very interested in these discussions.
All right, Kathy. Well, big question, of course, is whether the AI trade has really fundamentally changed, or are we just seeing a little bit of de-risking in the markets at the moment? Where do you stand on that question?
I would say we're just, AI is not going away. The trade for AI, the long-term play is not going away. I would just say we're just revisiting revisiting the numbers, the valuations, and taking a breath and leveling that out a little bit. And we'll see that come back again. But we do think there's still opportunities long term, and instead of going with the big names that have been picked over and over again, to be more equal weighted if you're going on indexes, or to be selective if you're picking individual companies.
Concentration risk in the equity markets, Kathy, it's a concern for a lot of people. It kind of ebbed a little bit, 6-9 months ago. We had a little bit of a rotation out of tech, but it's back in force here. How do you kind of frame that for your clients, and is that something you need to diversify from?
Yeah, it's been a little challenging because, as we all know, there are a few key names that have grown quite dramatically in clients' portfolios. So we do want to diversify risk. I always go back to the old rule of never, more than 5% of any one holding in your portfolio, and I still believe in that. Yes, you can make a lot of money on one position, but you also have to think about what happens over time. And we're seeing that with certain companies that have had long trajectories over, multiple years that might get affected by things like memory chips and things like that. So you have to be thoughtful and start thinking about peeling back and think about how to do it in more tax efficient manners too. That is something that holds people back from selling because they don't want to take a big, tax hit. So we also are looking for ways to help mitigate that tax risk and slowly take them out of those bigger positions over time. Not completely take them out, but just, eliminate the biggest risk of having too much concentration.
All right, Kathy, talk to us about your views on the bond market. I see Morgan Stanley saying avoid the long end. Why is that?
Yeah, well, if you look at like corporates, it's very rich. The prices are very rich. There's not a lot of room for any risk that you're taking by going longer. When you think about it, the longer you are out in the markets, the less transparency we have of where we're going. And so to go long, you want to really be paid for that. And in the regular corporate markets, we're not seeing that. Municipal bonds, we're still seeing opportunities long. In fact, the shorter end and the intermediate end of municipals are pricey. They're a little bit rich right now. So it's interesting. We're giving a little bit different advice for municipals versus corporates, but not because one is better than the other. It's just that that's where clients are getting paid more and for the risk they're taking, the commensurate risk.
In a typical portfolio, Kathy, how do you guys think about alternative investments? I'm always surprised when I ask RIAs and wealth managers Because allocations come in higher than I would have thought, which maybe would have been about 5%. But how do you guys think about it at Morgan Stanley?
Yeah, we do. It depends on, of course, the individual client, how much money they have and so forth. And that's why there's a lot of times minimum net worth that people need to have to invest in some of these, although it is getting democratized and coming down for lower entry points. But we say really like 10 to 20 is pretty common. And for clients with, very large portfolios, you can go higher, 25, 30. And remember, alternative investments now make up so many different areas of the market, even the private markets, an area that we really think there's a lot of wealth being created before companies are going public. And we also want to take advantage of that. And when there's an opportunity to co-invest in a private market alongside some very sophisticated investors, it's a nice opportunity for them.
Now we're seeing a potential shift as well in terms of the Fed's approach to inflation with Kevin Warsh now at the helm. How does that affect kind of your general view on markets? Are there particular sectors or asset classes that could likely be the winners and losers if we do get a more hawkish Fed moving down the line?
Yeah, well, we like real assets, especially because as rates go up, we don't see such a big difference in the bond and equity markets in terms of, with the rates. We don't want to, we want the assets that they hold in the portfolio to be like a non-correlated asset. So that's where the asset allocation model comes in with real assets, commodities, real estate, hedge funds, just different gold, things like that. Just different areas of the markets that we think will give a ballast to the portfolio a little bit more.
Right.
And then think about that with the alternative investments as well, holding a little bit of non-correlated assets.
Kathy, thanks so much for joining us. We always appreciate getting a few minutes of your time. Kathy Entwistle, Managing Director, Private Wealth Advisor at Morgan Stanley on Zoom from Ridgewood, New Jersey. Ridgewood Country Club, one of my favorite golf courses around. They love me over there. It's a great course. Looking at the markets here, S&P is pretty much unchanged on the day. The Dow's up 28 points and NASDAQ's down 19, so kind of a quiet day here. Oil lower, 69 on WTI.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christophorous from the Bloomberg Interactive Brokers studio. Healthcare stocks are helping to lead the early turnaround on Wall Street, but investors are still choosing to take some profits in the recently high-flying chip makers and other AI-related stocks. The S&P 500 down just 13 points now. We've got the Dow Jones Industrial Average giving back 36 points. NASDAQ Composite, though, down 102, and want to call out the NASDAQ 100, which is down nearly 1% or 260 points. Micron Technology is down 4% after rallying to a record high yesterday on the heels of its blowout quarterly earnings report. In the oil pits, Brent crude now slipping below $72 a barrel, down more than 4%. West Texas Intermediate crude just below $69 a barrel now, or a loss there of more than 4%. Back over to some stocks in the news. SoftBank down 7% on a report that OpenAI may delay its IPO until next year, delaying returns for the Japanese backer. And Volkswagen slipped 2.5% in Germany. The company is reportedly considering cutting up to 100,000 jobs globally. It may also close 4 German plants to make Europe's biggest automaker more competitive. Bitcoin today up 0.3% at $59,540, and spot gold on the rise, up more than 1% to $40.77 the ounce. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christophorous. That's a Bloomberg Business Flash. Christine and Paul.
All right, Alexis, thank you so much. We appreciate that. We've got Christine Aquino sitting in for Scarlett Fu, and I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. All right. I think we're all probably in the same boat in that we're all trying to learn what AI is. How do we use it in our daily lives? Maybe how do we use it in our workflows? We're all learning new stuff every day. I learned a new term today, AI hallucinations. I don't know what that is, but I don't think it's good. Our next guest, I think, does know what it is. He can help us out here. Dan Roth, he's the CEO and co-founder of a company called Scaled Cognition. It is a private company, and they just raised $100 million in private capital, and that values the company at $750 million, so they're on to something here. Hey, Dan, thanks so much for joining us here. I'd love for you to tell us about your company, Scaled Cognition, and how you guys deal with AI hallucinations.
Happy to be here. So Scaled Cognition is a frontier model lab, so you can think of other companies like OpenAI and Anthropic, but we have a very particular focus on building models that are reliable, that don't lie, and don't do what you just mentioned, which is hallucinate. So hallucination is when a model confidently tells you something that's wrong. So in certain contexts, like if you're just kind of curious what the birthday of some king of England was, if it isn't quite right, it's not the end of the world. But if you're talking to an AI system that, say, is responsible for filling a prescription for you, and it puts the wrong drug name or hallucinates some numbers in the prescription code, and then a patient ends up taking the wrong drug, obviously these can have really huge consequences. And so the company that we're building is really focused on a new kind of technology that eliminates these sorts of risks.
All right, Dan, now walk us through kind of what is specifically different about Scaled Cognition's technology, because hallucinations is a very common problem for a lot of AI companies, a lot of companies trying to solve that issue. But what's different about your approach?
Yeah, we had to really start from the ground up. The other models that are out there, you might think of them as general purpose models, they really have to boil the ocean, right? The same model is going to get applied to discussing quantum physics with you, or helping you plan a dinner recipe, or help you with your relationship problems. And that breadth of application really makes it hard for those systems to kind of lock the models down so that they are guaranteed to be correct and truthful. In the world that we operate in, we're really focused on enabling businesses. So customer experience is the first domain that we're focused on. And when you really are able to focus a model's training and redesign the internal algorithms, the architecture of those models, you're able to take advantage of that focus and allow them to really be locked down to what we call ground truth. This is like sources of truth, which is much, much harder to do in a general horizontal kind of application. But in our world, it's possible. And it's taken us 3 years of R&D with an incredible team of PhD researchers to get here.
Broadly defined, Dan, do we have a sense of the quality of the output of AI these days? Is it 96% accurate, 99.9% accurate? Do we have any sense of that?
It's an incredibly difficult number to pin down. You know, the benchmarks that are reported are actually generally reported in what you would think of, or is called kind of pass at one, meaning you give it a question and it gives you an answer and then you grade it. And what's so interesting about AI is that if you ask it that exact same question a second time, maybe with a slight nuance, it might get it totally wrong. And so you see these benchmarks and the numbers are all over the place. And I think there are some arguments that the benchmarks and the models have become so coupled that you can't really even believe what the benchmarks are saying. But what I think is so fascinating is that they don't really test real world applications, right? You never are going to have a system where you just only ever ask it one thing once. You're going to have hundreds of millions of interactions with this if you're a business, and it should be able to give you the same or a correct answer every time. But that's not really what these kind of general purpose models do. And that's really what we're focused on, is building these reliable models that give you the same answer correctly again and again and again.
So, Dan, you mentioned that your model can be applied to processes related to bank accounts, medical records, insurance claims. There's a lot at stake there when it comes to customer privacy and customer experience. How do you build that trust that your model is going to be able to carry out those processes reliably when it's handling such sensitive information?
Yeah, so in terms of the data privacy, one of the things that is, I would say, kind of unique about what we're doing is that we actually provide our models to our customers for them to host inside their own firewall. So no data ever leaves the enterprise that you already trust. The second thing is that the way that our system is designed, we can actually prove that the system is only getting information from verified sources. So we can actually demonstrate to the customer, and they're able to demonstrate to regulators or others, that these are actually traceable, it's not a black box, and you can guarantee correctness.
You just raised $100 million at a $750 million valuation. What's the use of proceeds here?
Well, we always think about capital as helping us achieve milestones. And so, you know, of course, we could talk about how we're going to grow our team and things like that. But what we're really focused on is growing our customer base. We have around 100 enterprises currently building on our platform. We want to grow that to at least 1,000. And we want to, of course, get our revenue to about 100 million a year. That's our next major milestone. And that's what these proceeds are going to be used to fund.
All right, Dan, thanks so much for joining us. I appreciate you taking a few minutes out of your day. Dan Roth, he's the CEO and co-founder of Scaled Cognition, trying to reduce the AI hallucinations that you get from the data, which I didn't know was a thing, but I guess it is, and you want to minimize that. And that's what. Coming up, we're going to check in with Randall Williams, Bloomberg Business of Sports reporter, get his thoughts on the top sports stories. And for the folks in the New York market, and if you're a New York Met fan, they fired their manager, and I think most fans would say that's a good thing because the Mets are underperforming here. But that's probably true of a lot of teams around the country. But in the Mets, when you spend $360 million on your portfolio, you expect a better return here. Looking at the markets here, Christine, we got just kind of red and green on the screen. It seems like a quiet summer Friday, which is good.
Yeah, you're starting to feel that summer lull coming through in markets, don't you?
Yeah, absolutely right. So, you know, we're keeping an eye on oil because it's obviously kind of really sensitive to the news we're seeing out of Iran and the negotiations with the U.S. We've got Brent crude off $3.40. That's 4.5%. So Brent's sitting right around just below $72 a barrel. It's kind of where we were before the war. And WTI crude oil, now we're below $69, $68.85. So it's getting back there.
Yeah, that was unthinkable when we were over $100 for both of these prices, wasn't it?
Yeah, but you talk to Mike McGlone, as we do probably on a weekly basis. He's our commodity strategist at Bloomberg Intelligence. And he said, hey, this is just all war. And once you pull that out, that premium out, we're going right back down. His call is 40s and 50s because he thinks that's where the global supply and demand really puts the marketplace here. Looking at the dollar stronger DXY index, it's a little bit off today, but still 101.1. So we've seen some strength in the dollar over the last several weeks relative to other G10 currencies. So we'll keep an eye on that. The 10-year Treasury, again, 4.36%. It's off a couple of basis points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Christina Aquino, Paul Sweeney, here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Talking about the business of sports, I want to start with the big story, which is just, I tell you, the World Cup. I think it's going on really, really well. We've had some really good games. I think the fans are into it big time. I think that I've been loving to watch on my social media feeds all the international fans in the U.S. going to like Buc-ee's and things like that, and eating American fast food and pizza and doing it. I think everybody's having a good time. Randall Williams joins us, U.S. sports business reporter for Bloomberg News. He joins us here in our studio. Randall, it seems like so far through the first week or so, it's been a lot of fun. World Cup, yeah.
A lot of fun. The World Cup is definitely off to an incredibly hot start. The talk about the sport of football and soccer has primarily been about the matches themselves, which is always a very, very good thing. So I think FIFA and fans globally are probably very happy.
Yeah.
Yeah, well, I mean, were there any issues related to kind of the empty seats, you know, that they were unable to fill? Or it seems like that's kind of
that was
gone
the
background,
talk,
right?
That was the talk, that tickets were so expensive, but I haven't seen a single story, whether that be on a broadcast story, whether that be a print story, a radio story, that's talking about empty seats. Now, I have seen some in attendance. I've seen empty suites. But those are being sold at a premium, and I think that sponsors and the brands that buy them, they get to pick and choose what they want to spend their dollars on. So for the most part, stadiums have been full.
And I can tell you, New Jersey Transit, I think they've done a good job. I mean, we're all bummed out at those guys because they raised the prices on tickets and they closed down Penn Station. But despite that inconvenience to me as a rider, they're getting people back and forth.
It has been seamless going. It has been agonizing leaving, which is normally how it is for MetLife at all sporting events. You get there, it's perfectly fine outside of me being media, getting out from the train and then having to walk halfway around the stadium to get in. But that's a personal complaint. But outside of that, it's been very, very good. And you should expect traffic. It's the World Cup. There's thousands and probably millions of fans who are traveling for this. There's going to be traffic somewhere and congestion everywhere.
Yeah.
All right, a New York story here. The Mets fired their manager. I guess I'm not a Mets fan, but speaking what I understand from Mets fans, they're like, it's about time.
Yeah, I think, look, Steve Cohen has a lot of dollars. He's spending a lot of money on this team. This team has the highest payroll in baseball. They are 10 games under 500. And so with that in mind, he's probably looking at it and being like, you know what? I'm already spending on players. Let me just get rid of this manager and try to find someone who can jolt the team to better success.
Is it really a matter of just changing the coaches or no?
It's never
it's
never
a
that
bigger
simple.
problem than
it's
that.
never that simple. Like they're paying players a lot, and they are paying good players a lot. It's just not coming together. And so I think that from his perspective, you always start from the top down. You're not going to cut players unless you absolutely have to, or trade players unless they're problematic. And I think that oftentimes across sports, the easy thing to do is get rid of a manager or a coach and be like, oh, they take the blame. Now, the hard thing to do is if they don't turn things around, and he's clearly not the problem. So we'll see by the end of the season if the Mets are able to turn it around. I'm not sure that I expect it, but we'll see.
All right, talk about the business of sports, private capital, private equity getting into these major sport leagues. We got another news story. Blue Owl Capital advanced talks to buy a minority stake in the NBA's Cleveland Cavaliers. Just another example, I guess, Randall, in this trend here?
Yeah, Blue Owl has been in the NBA for a long while now, since the NBA allowed private equity rules. This is the latest edition. The Cavaliers owner had been trying to sell a piece of the team since last summer. Sportico reported that he was willing to sell up to 15%. We had heard that it was between, this stake that Blue Owl is buying is between 5 to 10%. Sportico reported that the valuation was around $5.5 billion. And so that's a lot of money that's going to go into both the NBA franchise and their upcoming WNBA expansion franchise. Private equity is all in on sports. It's just about the teams and how they can find success, and then of course the return on investment. Blue Owl exited the Phoenix Suns a couple years ago and got a 158% return, and so that was of course because Robert Sarver, the previous owner of the Suns, had to sell.
That's right.
But for Blue Owl, you got to be happy, and I think this is something that could pay off long term.
Yeah, well, speaking of basketball, I want to talk about this recent NBA draft top pick, AJ Divansa, saying that he can, quote, put butts in seats for the Wizards. How much hype is around that pick? Is this really going to be kind of a turnaround time for the Wizards?
I think we should all expense a trip to Washington, D.C. and go watch his first game and find out ourselves. In all seriousness, I think that AJ is, anytime you get a number one draft pick, it's going to bring a jolt to the city. I think the Wizards have Trae Young, they have Anthony Davis, and they have a team that should be competitive. I would expect them to be in between that 5 to 10 range as far as the Eastern Conference seeding. Now, as far as fully turning things around, they have a long ways to go. You look at the Knicks, the hometown Knicks here. I don't think that they could beat them. I don't think that they could beat the Celtics, and I think that they would have trouble with a handful of teams. But AJ should bring a jolt to the city. He should put butts in seats because he's exciting. He's a great player, and I'm excited to see him.
What match are you going to this weekend?
I'm going to England versus Panama.
Wow, where's that?
Ooh.
It is a MetLife.
MetLife.
So I'll be hopping on the New Jersey Transit for the third time. Another $98 ticket to get to the match. And
is that how a lot of people are getting there? Like, was it crowded when you Penn Station?
Actually, the trains have not been crowded. Okay. It's always crowded coming back. And I think the reason for that is because fans are getting there very, very early. I haven't gotten there that early. I'm normally either the third or second to last, and sometimes in the last one. I was the last train to leave, running to catch that New Jersey Transit train line. But I think it'll be perfectly fine. It's just leaving. There's so much congestion. But hopefully I can run and get out of there very quickly.
All right, very good. Randall Williams, U.S. sports business reporter, boots on the ground, MetLife Stadium, or wherever they're calling it right now. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Oh, we got Christina Aquino sitting in for Scarlett Fu here. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Mike McGlone, Bloomberg commodity strategist. He said, hey, when this whole war thing ebbs, oil's going back down to 40 or 50. Boy, it looks like he's right. We got a print here. WTI is $69. We'll check in with Mike McGlone on that. David Welch, Bloomberg Detroit Bureau Chief. Talking about the VW story, Volkswagen cutting maybe 100,000 jobs and closing plants. That is huge for that company and for Germany. They're obviously a big employer in Germany. Brian Barney, fixed income portfolio manager at Parametric, will join us to discuss municipal bonds. Why? Because it's Friday, and we talk muni bonds on Friday. Then we want to talk to George Ferguson here. He is Bloomberg's aerospace analyst. I want to talk to him about this Boeing story here. It looks like Boeing's getting back into the critical China market. Now they have a jet deal from China Southern valued at $3.6 billion. Maybe that's the beginning of some positive business trends for Boeing in China. So we got a lot going on. Right now, let's go down to Washington, D.C. Amy Morris has got our Bloomberg Business Flash. Amy.
All right, thank you, Paul. We're watching tech stocks drag indexes lower. The tech trade facing some headwinds today. Bloomberg's Dan Curtis.
We've had OpenAI looking to delay its IPO plans, according to the New York Times. That's pushing back against the AI space. We also had news overnight of Micron's competitor, Samsung SK Hynix in South Korea, preparing to announce hundreds of billion dollars worth of new investments on Monday, according to South Korea media reports. That pushed those memory makers' shares lower. Some seeing echoes of China's common prosperity push a few years ago, which was an effort to reduce wealth inequality. And so the AI trade is just getting challenged today.
Bloomberg's Dan Curtis. Apple and Microsoft both announcing price increases. That's also raised fears about the staying power of chip demand. We do check the markets for you all day long at Bloomberg. The S&P 500 is flat. NASDAQ is down about 0.1%, and the Dow little changed on the upside. 10-year Treasury yield at 4.37% and the 2-year yield at 4.07%. Now, oil is headed for the biggest weekly drop in a month after transits through the Strait of Hormuz accelerated. Even with the concerns over escalating tensions in the strait, ships have been openly transiting Hormuz following early progress toward a lasting agreement to end the war with Iran. That's added millions of barrels to the global market. Right now, WTI crude oil is down 4%, now at $69 a barrel, and Brent crude now down more than 4%, near $72 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Christina Aquino and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Christina Aquino sitting in for Scarlett Fu. Scarlett will be back Monday. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Michael Regan. He's a managing editor for the U.S. equity business for Bloomberg News. Mike, what are you looking at today?
One, Paul, I want to look at is Strategy, the Michael Saylor company that basically exists just to buy Bitcoin. It's bouncing around a little bit today, but I think it's trading at really interesting levels. It's down about almost 25% just this week and like 60% off the high. And if you recall, this company basically issues a bunch of sort of exotic convertible and preferred securities, uses the funds just to buy Bitcoin. But there's a lot of reflexivity there between the Bitcoin price and stock price, and investors just really thinking it's all about the wheels are going to fall off the bus for the whole thing. So the other one I'm checking out, Netflix.
What's going on there?
Pretty big bounce for that stock. I think it's kind of an oversold bounce to some degree. I mean, this is a stock that's lost almost half its value in the past 12 months. Our colleagues at Bloomberg Intelligence had a pretty interesting note about Netflix. Basically, the concern is that this could be one of the casualties of the AI trade, as more people are able to make this basically cheap to free content with AI. It sort of lowers the barrier of entry to content providers, and really they see it as a risk that Netflix and the Disneys of the world really have to get ahead of, with sort of perhaps more live sports or more local offerings. So if you have a terminal, I would check out that BI note. It's pretty good.
So that's thinking way ahead. So that is just thinking that maybe people will spend more time on AI generated content, less time on Netflix, less time on other.
That's basically the fear. On the one side, it could be a positive for them. It could lower their content costs. I mean, but how many of us are already goofing off on Twitter and Instagram, looking at these funny little AI videos? And the more you're doing that, the less you're booting up Netflix. So definitely an opportunity and a risk there. But the market's really seizing on the risks from them for now. Yeah. Another big move upward today. By the way, I'm skipping all the chip makers. I'm assuming everyone's heard enough about the chip makers.
We've heard enough about those.
You can thank me for that. Yeah. But big pop today, about 13% in Moderna, ticker mRNA. And good interview on Bloomberg Television, actually, yesterday with the chief executive officer, basically talking up their potential for a flu vaccine getting approved potentially as early as August, in time for the next flu season, and CEO hoping it's a chance to sort of re-engage in the conversation about RNA vaccines and get the public on board, sees potential for this to be a more effective flu vaccine than the traditional one. So good pop in Moderna shares there because of that.
Did we ever see that people get fewer vaccines this year, just in general, because we've got an administration that's less supportive of vaccines?
That's a good question. I don't know offhand. My guess would be probably yes, yeah. My guess would be probably yes. I mean, and there's certainly not the requirements like there once were, and constant sort of suspicion of them in the news. So I'll have to look that up for you and get back to you.
I talk to a new parent and say, do you get your kids the same vaccines that we've all gotten over forever?
Yeah, but at the same time, you see this measles outbreak in Texas, and I think people are, going back and forth on it a little bit.
Yeah, okay, interesting. I got them all. I think we got my kids all of them. I mean, you just do it.
Yeah, you just do it.
I don't know. I remember,
when you go for your annual physical, you just do it.
Yeah. 4 kids, I forget how that all happened. Michael Regan, thanks so much. We appreciate it. Mike Regan is managing editor for U.S. Equities over there, bringing us the latest stock movers. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Looking at WTI crude oil, now below 69. How about that? $68.77. It's moving lower, as someone told us it would. Mike McGlone, commodity strategist for Bloomberg Intelligence. He's ensconced down there in Miami Beach. Mike, it looks like this, I guess, risk premium, war premium is coming out of global oil, maybe at the similar rate that it went into it. How should we think about it?
Exactly, Paul. It has inklings of 2008 to me. That's when crude oil put its peak around 147, and it ended the year about $44 a barrel. I think we have a very similar trajectory this year. The big difference is back then the U.S. and Canada were net importers. Now we're on a massive net exporter and net surplus of supply trajectory. Next year, that surplus of supply is heading towards 9 million barrels a day. There's only one key force that's going to stop that from the U.S. and Canada. That's lower prices. So I think what crude oil is going to do is going to go right back down to that cost of production in the U.S. around $55 a barrel and hover back there again. It has to get there for midterms. Number one, what's the motivation of our leader, Mr. President? And the key theme is for the second half of this year is volatility is picking up in the stock market. If the stock market goes down, that to me will pressure crude oil down to $40 a barrel this year.
Yeah, well, big call there, Mike. But, we still seem to be having a little bit of uncertainty around traffic through the Strait of Hormuz. Of course, it's increasing. But then you get headlines like Oman warning its European allies that they're going to need to pay up to get through the ship. And then you still see news about mines and things like that. I mean, how vulnerable is the market at the moment to these headlines? Is the impact of things like that starting to fade away now?
Christine, I think you nailed it. I think most traders are looking at it like, okay, if we can get something to happen there, they're looking for something to be responsive and maybe sell WTI any kind of bounce near 80 on some kind of flare-up. But what you just pointed out is the redundancy of OPEC. That really accelerated with this war. It's becoming less significant. Drill it will has gone global. It includes Iran, Iraq, the UAE, US, Canada. And it's also focused on the shift in price maker status towards the Western Hemisphere, with US in the middle. So I look at it as that is less important now, and the key thing on a scale 1 to 10 in the second half, for crude oil to go up, that might make it go up. For it to go down, it's the stock market. Stock market absolutely has to go up for crude oil, industrial metals, and copper just to stay stable.
Mike, Tom from the Upper East Side's writing in asking about Bitcoin below $60,000 per token. What's going on there?
It's a bear market. The frenzy is over, Paul. One thing that really happened today is Tether, that's the dollar token, flipped into Ethereum. Now it's the #2 cryptocurrency behind Bitcoin. If you look at the enduring trends in this space, it's the proliferation of crypto dollars. And to me, it's just a matter of time that Tether takes on #1 above Bitcoin, and that would be around $10,000. So I look at it in the second half of this year. The stock market's down a little bit. Bitcoins have pressure towards 50 and eventually towards 10,000. Before we clear out all the excesses, I'll end with this. Dogecoin is #9. It's still worth 11 or 12 $1 billion. It tracks nothing. It was launched as a joke. We just need to purge that stuff to get to a bottom.
Hey, Mike, you're a former farmer. It's end of June. What are farmers doing these days? Is everything planted? Are they just kind of watching stuff grow? What are they doing these days?
There's ample moisture in the Corn Belt. June was awesome for moisture, and the significance about that is almost had too much rain. Is you almost never get a shutoff of that precipitation in July and August, which are the #1 months for growing corn and beans. The quote they say is July is the month to make corn, and August is the month to make beans. So moisture is ample, and if we just get a normal cycle, we're going to go back down to the lows we've had to 2024 and 2025, which are about the cost of production levels, which is consistent also with crude oil dropping below its cost of production. It's normal in commodities. You basically need a drought. It's kind of too late for that now.
And do we think China is going to be a buyer here? Do we know?
I love writing on that, Paul, because when you have to beg China to buy beans from the U.S., yes, some state, that's a sign of a problem, because some state entities from China might buy, but there's a massive proliferation of soybeans from Brazil, and they're cheaper than the U.S. So they might do it for political purposes, but it's not economically feasible. And the bottom line is stocks to use on a global basis for soybeans around 30%. That's really high. You typically got to get them closer to 20% for prices to sustain higher.
Well, one thing that I've been seeing a lot about like these days is El Nino. How worried should ags and the commodities community be about that this year?
Well, it's most more notably more for the southern hemisphere. The bottom line right now for all the 10 on a 1 to 10 scale for all ags is July and August precipitation in the Corn Belt. Will we have a drought? If we just get normal precipitation in this kind of green belt effect, a green space effect because of the longer growing season, we're probably going to get another bumper crop, which is a great problem, superabundance. It's just bad for prices.
All right, Mike McGlone, thanks so much. We appreciate that. Mike McGlone covers all the commodity stuff for Bloomberg Intelligence. And we've got oil again with a 68 handle here, 68.73. So that's moving down as there appears to be some movement towards negotiated peace in the Middle East. Mike McGlone there. Let's switch it over to the auto business. Boy, I saw this headline. Some big numbers. Volkswagen is cutting 100,000 jobs, closing plants. That's big news. David Welch, Bloomberg Detroit Bureau Chief, joins us here. David, what's going on with our friends at Volkswagen?
Yeah, look, the company's been kind of struggling for a while now with revenue flatlining, profits, stagnant at best, and they're facing costs from tariffs into the United States. They're facing competition in Europe from China, and their Chinese business. Like General Motors, Volkswagen was one of the first pioneers there, and the Chinese have been, first off, their companies have waged price wars and taken up a lot of market share. The Chinese government doesn't love foreign companies in the market so much anymore, and it's just been tougher for them to compete. So they're seeing their business challenged in every major market where they play, and they've always had a massive industrial complex in Europe with their parts units, engine units, different brands, and with the way things are run in Europe, it's always tough to cut jobs, and so they've always kind of pushed that reckoning off as much as possible because it's politically thorny to go and lay off a bunch of factory workers, and they've got union people on their boards. The unions are very tough over there as well, and I think they're finally at a point where they have to really kind of get the company leaner in order to compete with everything that's going on around the world and keep their profits up. They're in a tough spot and they've got a lot of work to do. They've started some of it, but it's going to be difficult for them going forward because it's hard in Europe to cut a lot of jobs, and they really have earmarked some massive numbers here.
Yeah, I mean, definitely part of the challenge, of course, is implementing those plans to cut labor. And as you mentioned, David, a lot of labor leaders probably going to be pushing back on this latest round. But how difficult would it be to implement the plans at this stage? Or is the direness of the situation kind of going to overtake any of that issue?
Yeah, it's going to be really hard. IG Metall is the big German union, and they're going to be pushing back. Volkswagen has operations in other countries with different unions. They will push back. And politicians too. The German government doesn't love people laying workers off either. And Volkswagen's got some government ownership with Lower Saxony, the province that owns some of the company. So when you've got the government kind of playing around in the business as well with people on the board, it all becomes politically very difficult to do. And I think they'll make some cuts, and it's clear that they probably have to. But how much can they do, and how fast can they do it? Those are the big questions. You notice the stock didn't roar on this thing. Usually when companies say they're going to cut a bunch of people, investors love it and the stock goes up a lot. I think the last time I looked, it was up like 1.2%, which is not a big bump. And I think investors, particularly European investors, know that these things are time consuming and difficult to do. And look at Stellantis. They've acquired a bunch of different European brands over the years. Starting with Fiat and Peugeot, they bought Opel from General Motors and put all that together. And they've made honestly pretty decent sense out of it, but still not a super profitable unit for them. And they have leaned it up. They've made it more efficient. They've cut workers. They've merged up engines and vehicle platforms and all kinds of hardware. But still tough to work through those stuff over the years and undo many decades of how these companies work in terms of their factories and all this sort of thing.
David, thanks so much for coming on. We appreciate getting a few minutes of your time. David Welch, he's the Detroit bureau chief for Bloomberg News in Detroit. So VW, some big news there. I'm looking at the shares trading in Germany off about 3% today. 52-week low today, 27% decline for the year. So continued challenges for global automakers. This Independence Day, join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid, right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app. That's July 4th, starting at 7 a.m. Eastern on the deck of the Intrepid, which is very cool. S&P unchanged, Dow unchanged, NASDAQ off about 30 points, so pretty quiescent trading in the equity markets here. WTI crude oil down $3, $68.70.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Indexes just barely moving at this hour. We do check markets for you all day long here at Bloomberg. The S&P 500 little changed on the upside. NASDAQ down about 0.1%. The Dow is up about 0.1%. The 10-year Treasury yield at 4.36% and the 2-year yield at 4.07%. Sources tell Bloomberg that OpenAI is considering an initial public offering as soon as 2027. That's a timeline that would potentially see it go public after its rival Anthropic. Deliberations are ongoing, but recent volatility in tech stocks influenced OpenAI's potential timing. OpenAI had been targeting a fall listing. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. It is Friday, which means we focus on munis. That Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. And with that, we go to Brian Barney. He's a fixed income portfolio manager at Parametric, joining us live in studio here. Brian, how's the municipal bond market been behaving this year?
Yes, good to be here, as always. The market's behaving sort of as expected. I mean, there was a little bit of a hiccup, certainly in March and April. But if you look at returns year to date, we just surpassed 2% on the main Bloomberg index. So 2% year to date, and we forecast roughly another 2% for the back half. So it's operating pretty well.
Yeah, I recall that one of the big themes this year was a lot of issuance coming in this market and maybe potential concerns about indigestion. How's that going now that we're near the half point of 2026?
Yes, so we have seen a great amount of supply. We've hit about 290 billion thus far this year, on pace for about 580. 580 is what we saw last year. Now, last year, the demand wasn't strong enough to meet all of that supply, especially the supply that was more on the long end of the yield curve. This year, we're seeing more demand, and the balance is more even. And I think the valuations are fair as a result.
Where's the demand coming from? Is it institutional, retail? Where's it coming from?
Yeah, it's predominantly retail.
Okay.
Right? We're seeing, whether it's mutual funds, ETFs, we've seen over 50 billion in net flows year to date. That's, I think, the second highest on record at this juncture in the year. On the SMA, separately managed account side, we're also seeing great inquiry, great demand. So mostly retail, some institutional, but mostly on the individual side.
All right. Now, Brian, what can you tell us about these tax-free energy bonds? I mean, it seems like a hot item in the munis bond market at the moment. What's been demand like? And do you think that this is something that could potentially revolutionize AI infrastructure spending?
Yes, great question. Yeah, certainly a big headline in our market is this sector, the prepaid natural gas and electricity sector.
How does that work?
Yeah, good question. So what you'll have is you'll have a funding recipient issue debt. Typically, that has been one of the major banks.
Okay.
So high-quality banks, A-rated, AA-rated, they issue bonds in the marketplace, and those proceeds go to the bank. What they do with those proceeds, though, they have to repay bondholders. But in the process, there's other parties involved, and there's a utility on the back end of that. And so what they're doing is they're prepaying energy to their constituents. So the savings that a corporation like a bank or a hyperscaler that just entered the market get in the tax-free market, they pass on that savings to the utility who buys power at a cheaper rate and then passes on that cheaper power and energy to their residents. So that's why the IRS allows this structure in the muni market, as opposed to, say, one of the larger issuers is, say, RBC. RBC can issue corporate debt like they do, they go to the muni market, they issue through this prepaid gas and electricity vehicle. Some of the savings to RBC gets passed through to the constituents of that energy utility or that system.
I've never heard of that before. Is this new?
It's been around for over a decade.
Really?
It's growing rapidly. So 21 year to date, that's about 7% of the issuance. So year over year, it's been climbing at a good pace.
And this is primarily used for the powering of AI, those types of companies?
It's been used, more recently, it's being used for some of that. But historically, it's just been for cheaper natural gas purchases and delivery to residents.
Never heard of that before. Where did you hear that?
Well, we reported on it.
Okay, very good. What else is, from a sector perspective, screens well for you guys these days?
Yeah, we like toll roads. We like certainly GOs and essential service revenues. The healthcare market is one we pay close attention to. Winners and losers in that space. Higher ed as well. Winners and losers, clearly.
There are winners and losers in higher ed, right? So you have to be careful. If I'm a liberal arts college in Ohio, that's tough, right?
Yeah, I think we've seen about 20 plus closings in small private colleges annually the last couple of years. That's up quite a bit, maybe up 3 times from what the run rate was many years ago. So yeah, you've got weaker demand, clearly. You've got higher labor costs. You've got NIL costs as well. There's a lot going on for these universities, and they're struggling, some of the smaller ones.
How are the big, I don't know, the University of Michigans of the world, or the big issuers, big schools, how are those bonds trading?
They're healthy, they're doing great. Spreads are probably close to historical averages. So University of Michigan is a AAA credit, probably trading very tight to the AAA eval curve.
Are they issuing, they being higher ed, still issuing debt?
Yes, absolutely. They have infrastructure needs within, the operations of the school, and certainly they roll over debt as well.
But you have to account for the fact that maybe the government's withholding some research money for a lot of these big research institutions.
Yeah, exactly. Even though, University of Virginia, my alma mater, certainly in the news with the administration. The administration has been holding back some research funding, so there's been some pressure on the big schools as well, but they're able to navigate that and cut costs.
Yeah, they need to cut costs a lot more. That's my personal opinion on higher education, having looked at the economics. Brian, thanks so much for joining us. Appreciate it. Brian Barney, Fixed Income Portfolio Manager at Parametric, discussing the municipal bond space as we want to do on a Friday. I want to get real quickly to Boeing. Boeing inked a deal with China Southern Airlines to sell some jets. It's not a huge deal, $3.6 billion by aerospace standards, but it might signal, at least to me, I'm wondering if it signals maybe an opening up of this China market, which has been kind of closed to Boeing for maybe 10 years now, and that's would be a significant positive. George Ferguson joins us. He's been covering Boeing for decades. He's a senior aerospace, defense, and airlines analyst. George, what should we take away from this China Southern Airlines deal with Boeing?
I think first of all, good afternoon. Every order is a good order, right? There used to be a song out there, I guess. Every love is good love.
Right.
Every order is a good order. So good to see it. When I took a look at it, I haven't seen an official announcement on Boeing's site, but I've seen it reported in some news outlets. It's 777s, 777 freighters. Boeing's got a pretty strong product lineup in that 777 freighter world. That's the 777 is going to be the biggest airplane in the sky with the new version of it. Freighters quite large, pack it out pretty well. So again, it's a good order, but I would have liked to have seen things like narrow body orders, right? I'd like to see 737 orders going into China. That would get me more excited. That's a bigger portion of the marketplace. So again, good to see China on the book here, but this is an airplane that Boeing has a really strong, airplane to offer. Airbus doesn't have as good of an offering, and so I could have seen them potentially order this even away from the Trump visit and and hopefully the rapprochement.
Well, George, as Paul mentioned, it seems like for years, the China Airlines market just in general seems to have been closed off to a lot of the outsiders. But, with this deal, do you foresee some of that starting to thaw? And could this be the beginning of even more deals between the U.S. and China companies?
So we put actually a China calculator on the Bloomberg terminal because we really look at that market. Prior to the pandemic, it was the most important market in the world, I think, for Boeing and Airbus. They were selling. There was over 300 narrow bodies going in there a year. It was a significant portion of narrow body production. It's really slowed down, but I would say it's still open for Airbus. Airbus has made a lot of deliveries into the market and orders in the market. And so it's been closed largely to Boeing since the first Trump administration. I think they kind of used the grounding of the MAX crash, grounding the MAX as reason not to take it. Now, China's slowed since then considerably. And so China just doesn't need the airplanes, we think, right there. The GDP growth is, from 8% down into the fours now. China's been a little bit inward looking, and they're building their own competitor to the Airbus and Boeing, Airbus A320, Boeing 737, the Comac C919. That is some deliveries of that last year. In time, I would expect them to replace Boeing and Airbus orders and deliveries with that airplane. But again, right now, the way it looks to us is they're absolutely still buying from Airbus, taking the majority of their deliveries from Airbus, and Boeing has just been blocked out since the first Trump administration, where we sort of entered into the trade war. And so that's kind of what we're looking for to lift, because it could be more opportunity for Boeing, but we see a lot of orders on the books for Airbus. It feels like they're pretty full with orders. So that's why we're kind of watching closely to see what they do here.
George, you got about 30 seconds left. Where is Boeing now on the monthly deliverables for 737s? Because you've told us in the past that's really critical for their cash flow story.
Moving to 47, which is what we expected mid-year. So I think they'll do 47 a month on the 737 through the end of the year, which is quite strong. They're actually getting better performance out of their supply chain and production build than Airbus is now, albeit Airbus is at higher absolute levels, but Boeing's doing a decent job at catching up right now. So it's looking nice.
All right, George, thanks so much. Appreciate it. As always, George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. Boy, if Boeing could ever get back into the China market. And I'm of the opinion that George was, I'm not sure Airbus alone can fund the growth of the Chinese aviation industry, but George suggesting, hey, with the Chinese economy slowing, maybe
it's shrunk enough. Yeah.
But I would think they would need, at some point, they would need Boeing supply, but it's been a decade and they've done just okay, I guess. Not to worry. Looking at these markets here, got some green on the screen here. It looks a little quiet, but S&P's up 16 points. The Dow's up 150. And the NASDAQ has now turned positive, is up 35 points. The VIX, pretty steady, right below 19. So that is better than above 20. Just feels a little bit better on the volatility index. Keeping an eye on WTI crude off $3.15. Now still at $68.77. So again, a nice move down again in crude oil as some of that risk premium, at least in the near term, seems to be coming out of the global markets. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. Chip makers were pummeled by another burst of selling amid concerns over whether the enormous investments in AI are justified. But now we're seeing a little more green on the screen. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.4%, NASDAQ up 0.4%, the Dow up 0.3%. The 10-year Treasury yield at 4.36% and the 2-year yield at 4.07%. Oil is headed for the biggest weekly drop in a month after transits through the Strait of Hormuz accelerated, even with some new tensions in the region. WTI crude oil now at $69 a barrel and Brent crude at $72 a barrel. Consumer sentiment rose in June as lower gasoline prices provided some relief for Americans grappling with high inflation. University of Michigan Director of Surveys, Joanne Shu.
Consumers are perceiving a little bit of relief from the moderation of gas prices. However, consumers remain really quite burdened by the persistence of high prices.
Consumers expect prices to rise at an annual rate of 4.6% over the next year. That's down from 4.8% in May. They also saw costs rising at an annual rate of 3.3% over the next 5 to 10 years. The cost of living remains at the forefront of consumers' minds, more than half spontaneously mentioning that high prices are weighing down their personal finances. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Christina Aquino and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Christina Aquino sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We are streaming live on YouTube, and we're streaming live at Bloomberg.com/video. We like to talk bonds. We like to talk ETFs. Let's talk bond ETFs so we can do that with Joanna Gallegos. There's an ETF for everything. Co-founder of Bond Blocks Investment Management. Folks, this is a platform that focuses on ETFs and applying them to the fixed income market. So giving you the great appearance and functionality of an ETF for investments in the fixed income space. Pretty cool platform. Joanna's a co-founder. Talk to us where you're seeing fund flows these days, Joanna, because we've got a Fed that seems like they're not going to do much, and markets even thinking about maybe some rate increases. How are you seeing that impacting your business?
Yeah, well, I think we start with where interest rates are and where yields are in fixed income. They're at historic highs compared to the great financial crisis. So what we're seeing in the category, and I think ETFs are a great place to give you a barometer of what's going on with investment sentiment and portfolios. Year to date, fixed income ETFs are up about $300 billion. That's a record for fixed income ETFs. So that pace would bring you to, if you continue that pace, it'd be about $600 billion by the end of the year. That's 50% greater than 2025. So investors are absolutely coming back into fixed income. They're taking advantage of these historically high income rates, and they're using fixed income again to support their portfolios. It's hard to ignore the equity headlines, but investors are piling into fixed income.
Yeah, well, talk to us about kind of the role of fixed income now as a diversifier in any portfolio, right? As you mentioned, a lot of investors kind of take advantage now of yields near highs, multi-year highs. That was not the case, just 5-10 years ago, where like they were near zero. Yeah. So yeah, does that kind of again revive this idea that fixed income is a portfolio diversifier effectively now?
It should. It should. Right now, the S&P equities year to date are somewhere between 10 and 12%. And the S&P 500, NASDAQ somewhere around 14%. I don't want to get too precise, but that means that when you have yields in corporate credit at 5 to 6%, or even high yield corporate credit at 7 to 12%, that's a competitive level of income to support your portfolio. And I think underscoring that for investors has been difficult in these markets that have been volatile, really interesting on the equity space, but also maybe not overheating, but maybe really priced in. So the AI trade may be priced in. Inflation isn't going down to the target as it was. Still strong fundamentals, still everything that everyone wants to see in equities, but now with that level of income, you should be considering more precise ways to add fixed income to your portfolio.
So is 2026 a year of just clipping coupons, that's how fixed income investors should think about it?
Why not? Why wouldn't, just gave you a couple of examples. On the shorter side of treasuries, you may be down to 3% a year. If you believe in the economic resiliency of our economy and the strength of the balance sheets of American corporations, if you buy their debt, you would be clipping 6%. And that income going forward is probably going to be the main driver of return in fixed income. You didn't have these levels 5 years ago. You didn't have these levels, obviously, 15 years ago. But if you aren't using income to maybe, be part of your portfolio to achieve, a typical long-term expected return on portfolio, like 10 to 15% a year, you're passing up really big opportunities, especially with the strength and resiliency of the economy.
Yeah, well, talk to us about what's been happening in a high yield market. That's been one hot market this year, and it looks like spread levels have really been kind of under control, despite the fact that, there has been a war the last couple of months. But is that sustainable at this point?
I talk about high yield every time I am on TV or radio, and it's been 4 years, and high yield has maintained its credit strength. It's the fundamentals of the balance sheet have been strong. Companies have taken advantage of restructuring their debt. So, again, that range between the highest quality spot of high yield, which is the B level, 7 to 12%, all the way to CCC. It is a place where you could be accessing, really valuable income with some confidence that even though spreads are tight, the economy has still been resilient, and that's a mix that you should be really leaning into when there isn't some trap door that is out there in terms of credit deterioration, the late cycle that we're in, maybe in the credit space, like it just isn't developing the way it has in the past, and so that tells you that maybe there isn't a trapdoor.
Private credit. What are you seeing in flows in your private credit ETF?
So in our private credit ETF, it's I would say the best of both worlds that people are looking for access in private credit. One, it's an ETF, so it's 100% transparent and it has daily liquidity. And it's structured by holding CLOs, which are basically bundles of bonds. So in our private credit product, you're getting access to over 7,000 different loans to middle market companies. And the reason that's super powerful is those bundles of loans are packaged by the names that you see in private credit, Blackstone, Ares, Golub. So you're getting not only a diversification across all of those loans, so no one company is overexposed in our product, but in addition, there's no one manager that's overexposed. So when you couple daily liquidity, the daily liquidity of an ETF, the diversifications, there's no true idiosyncratic risk between a manager or a particular type of loan or sector, that seems to me to be the right access point for private credit. And we try to make that distinction. This is one of those marriages between ETFs and underlying markets that should be looked at.
All right, very interesting. Hey, when technology, do you buy all those technology offerings that have been coming out?
In bonds?
Yeah.
So most of our products follow indexes. And,
Okay,
if it's, they're usually broadly across all sectors. And so, for example, CCC, not all, there's some concentrations in certain sectors and in different ratings categories. But in CCC, there's over 200 CUSIPs in that portfolio. So you're, again, diversified by a lot of different names, a lot of different issuers and sectors.
All right, very good. Joanne Gallegos, co-founder at Bond Blocks Investment Management, talking about this bond market. I'm just looking at their holdings here. You can do that on their website. Man, they own everything. I mean, when I was selling bonds, there weren't ETFs out there, but I'd have been knocking on your door like crazy selling my bonds.
The website's actually really powerful. You can look at all of the analytics of the portfolios. You can look at the holdings of the portfolios every single day.
Yeah, good stuff there. That's one of the advantages of ETFs. S&P 500 up 28, the Dow up 175, and the NASDAQ up 94 points on a quiet Friday in summer. 10-year Treasury yields come in a couple of basis points, 4.37%. Keep an eye on that. WTI crude oil below $69 a barrel. Very well received. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
We had some change at J.P. Morgan Chase in his senior management ranks. Marianne Lake, one of the senior folks, and one of the, I would say, 3 people that were kind of potentially in line to succeed Jamie Dimon. She's retiring, I think, is the term. I don't know. She's younger than me, so we'll have to see how that plays out. Before we do that, let's get some news on the terminal. EDF says KKR agrees to buy EDF Power Solutions in the U.S. and Canada, so they're back in business there. And then President Trump says Iran violated ceasefire with Hormuz drone attack. So again, Middle East noise and news on the front burner. WTI crude oil, which was below 69, now above $69.30. We'll keep an eye on those headlines. Sri Natarajan joins us here. He's the chief Wall Street correspondent for Bloomberg News. Talk to us about what's going on at J.P. Morgan and who are the potential heirs to Mr. Jamie Dimon.
It's the latest iteration of Wall Street's favorite parlor game, right?
Yep.
Who will be in position to take on the most consequential job in American finance? Jamie Dimon has been in that role for 20 years. He does not, at least doesn't look like he wants to step away anytime soon. He wants to be there for a few more years. But the news yesterday helped narrow the field a little bit from potentially 3 candidates to 2. One long time, arguably the front runner, Marianne Lake, over the last year or so, has been forced to step aside, or at least has stepped aside, and now the 2 new names in the mix are Doug Petno and Troy.
Was forced?
I guess if we think about it, when
I read it as a voluntary. Hey, I got my plenty of dough. I'm gone.
I think there's certainly a difference between the news early last year and this time around, because early last year, if you remember, JP Morgan came out and said Jen Piepszak, who's now the CEO of the bank, but was widely considered as one of the front runners to replace Dimon, put her hand up and said, I'm not interested in being CEO. I love my job. I'm comfortable in my skin. I want to continue doing what I'm doing. She's still at the bank, but she very clearly, voluntarily put up her hand and said, I do not want to be CEO. In the case of Marianne Lake, we haven't seen any announcement to that effect. It does feel like a Jamie and the board's decision that maybe she wasn't you were necessarily going to get the top job. And that seems to have precipitated this change where now you have Doug Petno, who will have sole charge of all of JP Morgan's vast Wall Street operations, and Troy Rohrbaugh, the 56-year-old, who's now going to be moved to the other side, the other big pillar of the bank, which is its sprawling consumer business, after having run the Wall Street business. So he's certainly getting that cross-training that Jamie definitely loves to see in his lieutenants.
Yeah, well, okay, so very different portfolios now for these 2 men. Is this effectively an audition for both of them for the top job, I would presume?
100%. It's definitely an audition. Both of them have very strong experience in the Wall Street side of the business. And, you could say that is in some ways the tougher part, because that's all about managing risk. The retail bank, if you get it into decent shape, it is very predictable and it ebbs and flows with the broader macroeconomy. With the Wall Street business, your skills as a risk manager are extremely important. Even today, Jamie Dimon is regarded as one of the top CEOs out there, largely in part and thanks to the way the bank navigated the 2008 financial crisis. It came out stronger than everyone else, and today it is fortress Jamie Dimon, right? The fortress balance sheet that they talk about. It is the most powerful banking institution in the United States. So the Wall Street side of the business is important, but if you want to be CEO, you can't forget the retail business. That is about as important as anything else out there. When you mess up on your trading desk, you might get an angry call from, I don't know, Easy Englander at Millennium or Steve Cohen at Point 72. But if you mess up on the retail bank, the aggrieved party on the other side could very well be the president of the United States, something that the bank is currently facing. So it's a very important job, even if it's not as profitable as the banking and trading side.
All right. Then there were 2, Troy Rohrbaugh and Doug Petno. I know nothing about either of them. What should I know?
Well, the thing you should know about Troy is he grew up in the Baltimore area, big fan of Baltimore area sports. Okay. He got a start in the 1990s growling pit of the Philadelphia Stock Exchange. Okay. So just the transformation from that point to now being a heartbeat away from one of the most important jobs in finance is sort of an incredible journey. Complete trading veteran, came up through the ranks, has spent most of his time there. is known as a little bit of a non-showy character. More risk. Fuss is more about market risk than splashy leadership displays. Whereas Doug Petno, you know, smooth investment banker, was a top energy banker, then ran the commercial bank, now will have sole charge over the commercial and investment bank, easy with clients, exudes the charm of a natural leader, but he's 61. And if Jamie Dimon wants to stick around for 3 odd years, and then perhaps another couple of years after that as chairman, where if you have Jamie Dimon as your chairman, are you necessarily the final say at any place? The clock starts ticking, and you do wonder at 65, does JP Morgan look at a Doug Petno and say, you're our man for possibly the next 10, 15, 20 years? Or do they go with a safer Troy Rohrbaugh bet?
All right, we'll see. Then there were 2. So there you go. If you're following JP Morgan and who isn't. But again, I think you asked pretty much any shareholder, they'd be like, Jamie, you can stay as long as you want, my friend. Just, you know, whatever you need, bud. Sri Natarajan joins us here, Chief Wall Street Correspondent for Bloomberg News, joining us in our Bloomberg Interactive Broker studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Christina Aquino, thank you so much for sitting in for Scarlett today.
Thank you for having me.
That was awesome. Scarlett's people are in touch with me, saying she will be back Monday. We'll see how that goes. She's a star. We never know where she is. Markets turning a little bit positive here. We'll take that to finish out the morning trading with the S&P up 25 points. This is Bloomberg. Good morning.
From ABC News, I'm Mike Dubusky. Former Trump National Security Advisor John Bolton has pleaded guilty today to illegally retaining national security information. Bolton entering his plea to a single felony count before District Judge Theodore Chewang.
As he stood before a federal judge, the former National Security Advisor admitted his guilt and said he's sorry for it. John Bolton acknowledged he illegally shared classified information in emails with his wife and daughter. Maryland U.S. Attorney Kelly Hayes says a hacker believed to be associated with Iran successfully got into Bolton's account.
He put our national security at grave risk in violation of the law.
As part of the plea deal, prosecutors have agreed not to seek more than a 5-year prison sentence. Bolton's sentencing is set for October 28th. Stephen Portnoy, ABC News, Washington.
The death toll in Venezuela is mounting, with now nearly 600 people confirmed dead following this week's severe earthquakes. 25,000 people are still unaccounted for.
Emergency crews digging through mountains of concrete and twisted metal. Crowds cheering as people are freed from the rubble. 4-year-old Adrian carried to safety. Venezuelan TV showing 3 more children covered in dust pulled out alive. This woman saying she held onto a door frame during the quake and watched her friend disappear.
ABC's Victor Akendo reporting from Florida. An international aid effort is mobilizing, but the main airport in Caracas remains closed for now. New violence in the Middle East as Iran fires a drone at a cargo ship sailing through the Strait of Hormuz, hitting and damaging that ship's bridge. The ship was traveling through the southern part of the strait near the coast of Oman. President Trump maintains the strait remains open despite the violence. There are more than 36 wildfires burning in a dozen states in the West. In Arizona, a car explosion sparked a fire, forcing Highway 87 outside Phoenix to shut down for a time. You're listening to ABC News. In a break with tradition, Britain's King Charles will no longer make Buckingham Palace his London home. ABC's Maggie Rulli is at Buckingham Palace with details.
The palace announcing that when renovations here are complete next year, the king's not going to move in, breaking with tradition. This was the London home of his mother, grandfather, and great-grandfather before him. Now, instead, the king plans to remain at Clarence House just up the street. Buckingham Palace will remain kind of the headquarters for the royal family. We'll host things like state functions and royal banquets.
In another first, the king released his personal taxes, revealing he paid $17 million to the government last year, putting him in the top 100 taxpayers in the UK. Just got a lot more expensive to buy Apple's new iPad and MacBook. Details from ABC's Elizabeth Schulze.
So a new iPad Air will now cost you an added $150. It's $749. A MacBook Neo, which is that lower cost computer that Apple introduced just a few months ago, will now be $700 instead of $600. MacBook Air and Pro prices also going up, with the Pro now starting at $2,000. Apple is blaming this on a global shortage of computer chips because of AI.
Tennis great Serena Williams will take on 20-year-old Maya Joint of Australia in her first-round match at Wimbledon. Williams recently accepted a wild card entry into the Grand Slam. And in Texas, a giraffe that escaped from a breeding ranch near San Antonio has been found. Mike Dubusky, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The White House puts the squeeze on AI. Welcome to Thank God It's Friday edition, as the administration limits the release of OpenAI's next model after forcing Anthropic just a couple of weeks ago to shelve its latest technology. The fear in Washington is palpable, and we're going to talk about it with Bloomberg's AI policy expert, Mike Shepard, with us in studio today. President Trump is suddenly accusing Iran of violating the ceasefire just a day after Iran opened fire on a tanker. We're going to get into this coming up with retired Navy Admiral Mark Montgomery. And Vice President J.D. Vance says Watergate overblown. Richard Nixon forced out by the deep state, comparing him to President Trump, which will play to our political panel. Rick Davis and Jeannie Shanzano are with us here on the Friday edition, and we start, as always, with Wall Street. Let's get to it right now with Amy Morris. She's got her eyes on the markets. Amy, what do you see?
I see green, Joe. Stocks inching higher as dip buyers step in after a tumultuous week for chip makers. We check the markets all day long for you here at Bloomberg. The S&P 500 up about 0.25%. NASDAQ up about 0.2%. The Dow also up about 0.25%. The 10-year Treasury yield at 4.37%. The 2-year yield at 4.08%. The tech trade just facing some headwinds today. Bloomberg's Dan Curtis.
We've had OpenAI looking to delay its IPO plans, according to the New York Times. That's pushing back against the AI space. We also had news overnight of Micron's competitor, Samsung SK Hynix, in South Korea, preparing to announce hundreds of billion dollars worth of new investments on Monday, according to South Korea media reports. That pushed those memory makers' shares lower. Some seeing echoes of China's common prosperity push a few years ago, which was an effort to reduce wealth inequality. And so the AI trade is just getting challenged today.
Bloomberg's Dan Curtis. Apple and Microsoft also both announced price increases, and that raised fears about the staying power of chip demand. Now, let's look at oil. It was headed for the biggest weekly drop in a month after transits through the Strait of Hormuz accelerated. President Trump, however, just posted on social media that Iran has violated the ceasefire with a drone attack in the Strait, and that the U.S. shot down 3 of Iran's drones. So we check oil now. WTI crude still down about 4%, near $69 a barrel, and Brent crude down about 4.5%, around $72 a barrel. We're going to keep a close eye on that for you. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
Amy, thank you. A wild market this week, and today is no exception. We'll get back to Amy Morris in just about 15 minutes with the latest on Wall Street here. The Friday trade, and boy, it feels good to say it. It's been another week, and it's not over yet. As Amy just mentioned, President Trump making news right before we came to air, and you can count on that almost every day here on Balance of Power. High noon, that's why we meet here on Bloomberg Radio and on YouTube. Search Bloomberg Business News Live. If you want to come here in the studio with us, we've got a lot to show you, including this post from the president. The Islamic Republic of Iran shot at least 4 one-way attack drones at ships traversing the Strait of Hormuz. One of the drones, he says, solidly hit the upper deck of a very large and very expensive cargo carrying ship. Damage was done, but the ship was able to proceed on its way. We knocked down 3 other drones. Obviously, he says, this is the line, this is a foolish violation of our ceasefire agreement. There's no thank you for your attention to this matter, just a signature. Thank you, Sam, for getting that together for us. He just posted it a couple of minutes ago here. But as Amy also mentioned, oil didn't even blink. We got $69 for WTI in New York. We'll see where we go from here. And we're going to have much more on this coming up, an important conversation with retired Navy Admiral Mark Montgomery. He'll be here in about 10 minutes, having traversed the Strait many times in his naval career and has real insight on what's happening right now inside the Pentagon. The 26th of June. I have to say happy birthday to my kid. It's amazing. When I think back what I was doing 19 years ago right now, careening to the hospital for my first and only child to be born. I feel very old today. So let's get the weekend started here. Maybe AI can help me. I was talking earlier with producer James. He's using AI to do his workout routines and all kinds of stuff that I'm clearly missing out on. I wonder how many AI models Shep is subscribed to. Does he get to expense that? He covers that for a living, right? I bring it up because Sam Altman, boy, got a difficult phone call from Howard Lutnick, and he started feeling a lot like Dario Amodei. GPT 5.6, you got that yet, James? Howard Lutnick says you're going to have to limit release of the next model because of its Mythos-like capability, remembering, of course, that Mythos was shelved to international clients and then Anthropic just pulled the whole thing back. These things are dangerous. I'm going to get to this wild interview as well with Garbarino, the chair of the House Homeland Security Committee, Republican from New York. He's been on the program before. He was presented Mythos. They put a little show on for him by Anthropic, and he was horrified by what he saw. Let's bring Shep in on this right now. Bloomberg News senior editor for technology and strategic industries. Great to see you, sir.
Great to be here, Joe.
Thank God you're here for us every day to cover this stuff. This has become, AI has really become as much a Washington story as it has a California or Silicon Valley story, and this is why. What is it that we think this new ChatGPT can do that's so dangerous?
Well, it's unclear exactly what the capabilities are, but clearly it is another instance where the government is seeing abilities in this software to do things that could theoretically at least wreak some havoc someplace. And, you know, we can only let our imaginations run wild, having not been fully briefed on the purview of that. But we do know that the concerns surrounding Mythos, when it was unveiled back in April, extended to the cyber realm, and that this technology could be used to crack the code on defenses in networks and computer systems around the world, including some finding vulnerabilities that have been latent for years and undetected. And so that set off alarms, but it also prompted Anthropic to hold back its release of that program to just a handful of trusted partners. And that is essentially what the U.S. government is asking OpenAI to do with its next generation of ChatGPT 5.6, if you're keeping score.
Where's the office where they're testing this stuff out and somebody says, you better call Lutnick, there's going to be a jailbreak?
Well, you know, that's a great question, because there is some competition within the government to figure out, well, exactly who will do the vetting. But there is an obscure office within the Commerce Department known for the Center for AI Innovation and Security, and they have been doing a voluntary testing program since 2024. This was started under President Joe Biden, under a slightly different branding for that office. But in essence, they are looking at these models that are voluntarily submitted by the cutting-edge labs, and they get some sort of a safety score. The models get reviewed and then are released. And usually this happens without incident. There have been dozens that have been checked out by this office in conjunction with the companies. But more recently, we have seen, and this is the most clear evidence, that they are actually trying to be a little bit of a gatekeeper for security reasons.
Really interesting. I mentioned Garbarino. Andrew Garbarino chairs Homeland Security in the House. He did an interview with Punchbowl to talk about this closed-door demonstration he received from Anthropic, the new platform. He said Anthropic, quote, told the model to find a vulnerability in a bank and empty the accounts. Shep, it then went and did it. And after it was done, found the vulnerability and showed that it could fix it.
Well, hopefully it wasn't our accounts.
Oh, my
Joe,
God.
Yeah.
This is, I mean, everyone's afraid AI is going to take our jobs. This is the real threat, this kind of stuff now. The fact that it could find the vulnerability but also fix it is good news or bad news?
Well, it's a little bit of both, really. And that is the two-edged sword in a lot of ways of artificial intelligence. That it does bring this capability, and yet it also brings this peril too. And it really depends on the hands of the user, but also the design of the system itself. And even yesterday, we talked about the Pope's missive from last month on artificial intelligence. And yesterday, the Pontiff posted on social media, which he has been doing, warning that, look, AI systems are not morally neutral. They have to have something baked into the design to ensure that they are secure, fair, and preserve humanity too. And in a way, the government is now looking at these systems to ensure that, now, wait a minute, is the design secure, and will there be guardrails up on the system to prevent it from doing the very kind of thing that Congressman Garbarino outlined. Now, you'll remember in that interview, he also said that the model was asked, can you come up with a plot to assassinate a member, kidnap or assassinate a member of Congress?
I was afraid to mention it.
Now, that is the kind of thing that you can bake into the model to say, have it say, hold up, we don't do that kind of thing. So these are the kinds of...
Can you do that posthumously? Can you go back to an A and retrain it in that way? If they are not morally neutral, do we need to get rid of them all and start over?
Well, they can be adjusted on the fly.
They can.
And that is the way that this technology has been developing and evolving, that different elements get added to it at different times. And the concern is that, look, we see the model development here in the U.S., and we're assured, at least to some degree, that the companies are trying to be responsible, at least they say so, that the government is trying to be somewhat responsible too, even though there are many out in the policy land who say, look, we're not doing enough. We need to have greater guardrails coming from the government. It's even coming up as an issue in politics itself. But one of the concerns, Joe, is that adversaries, especially China, but other countries too, could make use of these models, deliver them on the cheap to the public around the world, including in the U.S., that don't have some of those safety protections. So maybe if you ask for that thing that you shouldn't, in terms of hacking or committing some other crime, it won't stop you.
It reminds me, what was it, 2-3 years ago at this point, Congressman Seth Moulton calling for a Geneva Convention for AI. We still have nothing like that to allow what you're saying to potentially happen.
Well, that is right. And he was referring in Congress, and he is, of course, a war veteran himself. And he was specifically referring to the question of AI's use in the military. And the question is, okay, how quickly is the world, and are the norms governing the conduct of warfare keeping up? And we talked about this, of course, in the context of Anthropic's battle with the Pentagon over the safeguards that the company itself wanted on military use of its technology. So we are seeing, once again, that the technology was really outpacing policymakers' ability to address different risks, different vulnerabilities, but also even different opportunities as well.
In our last moment, Shep, what happens to these two? You've already got Mythos, or at least the new version, on ice. Now we add this new version of ChatGPT available to a very limited number of people. Does the White House see changes and then releases them eventually? What's the next leg here?
There will be negotiations between the companies and the administration.
But they're rewriting the algos now.
To ensure they will have to rewrite, they'll have to change some of the weighting, they'll have to add different guardrails per the government. And again, we don't have full visibility on what those concerns are. We do know that with Anthropic, the concern with Fable 5 and Mythos 5, which the company disabled, was that there was a jailbreak capability, meaning that it was possible to get around the guardrails on those models. And Anthropic has warned that, hey, there's no universal jailbreak. So it's unclear exactly where we're going to end up with these safeguards and these negotiations.
I was looking forward to this conversation for good reason.
Likewise.
Shep is the best at this, and I appreciate it
Thank
so
you,
much.
Jeff.
These are wild days that we are living here in Washington, D.C., and We'll talk more later on about the potential for a delayed OpenAI IPO, but we head to the straight next here on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. President Trump has accused Iran of violating its ceasefire agreement by firing at cargo ships transiting the Strait of Hormuz. Now, so far, crude oil prices are still lower, headed for the biggest weekly drop in a month. Let's check those crude oil prices right now. WTI crude now down about 3 3/4%, around $69 a barrel. Brent crude down 4 1/4%, around $72 a barrel. And stocks are higher after dip buyers stepped in. We check those for you all day long here at Bloomberg. The S&P 500, ooh, look at that. It's flat now. And NASDAQ is starting to creep down. It's down to just a little change on the downside. Dow, the same. It's flat. I'm going to check that out for you. Also, the 10-year Treasury yield at 4.37% and the 2-year yield at 4.09%. Now, sources tell Bloomberg OpenAI is considering an initial public offering as soon as in 2027, a timeline that would potentially see it go public after its rival, Anthropic. Deliberations are ongoing, but recent volatility in tech stocks influenced OpenAI's potential timing. OpenAI has been targeting a fall listing. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Balance of Power now with Joe Matthew.
All right, Amy. great to have you with us today. And of all days, it's a big one for Amy, and we're happy for you here on Balance of Power. She'll have more on the markets coming up in about 20 minutes' time. Friday trade starting to improve here. Maybe we'll be in better shape as we get closer to the bell. We'll see. The news might impact this, although so far no one seems to be blinking at what's coming out of Iran. The president's saying that they violated the ceasefire after shooting at a boat yesterday. We told you about this. WTI is still below $70 a barrel. Pretty remarkable. The president making news on a couple of fronts here. Bear with me before we bring in the admiral. Numerous European countries, he just went up on this with Truth Social, have been discussing the imminent implementation of a digital services tax on American companies. You've heard him talk about this before. Some of these countries are close to actually doing this. Please let this statement serve to represent that any country that imposes such a tax, are you ready? Will immediately be met with a 100% tariff on any and all goods sent to the United States. 100%. The tariff, he says, will supersede trade deals made with that country, whether implemented, signed, or not. Additionally, a 100% tariff will be immediately imposed if they proceed. So you got that. Now you got the ceasefire. This also came from Truth Social. We actually haven't heard the president talk yet today. He says Iran shot at least 4 one-way attack drones at ships traversing the Strait of Hormuz. One of the drones solidly hit the upper deck of a large and very expensive cargo-carrying ship. Damage done. He says the ship was able to proceed on its way. We knocked down 3 other drones. A foolish violation of our ceasefire agreement. We talked about Iran in the Rose Garden. I should call it the Rose Garden Club, right? Last evening, flanked by the American flags. Listen.
They want to make a deal with us very badly, and we probably will. I think we will, but the strait is open. Yesterday, they took out 19 million barrels of oil. That's the most in the history of the strait, and the oil prices are dropping like a rock. And, you know, as goes oil, so goes everything else.
Well, and oil is lower still today. Deeply curious to hear what the Admiral has to think, and we're lucky to have him back today. Retired Rear Admiral Mark Montgomery, former Destroyer Squadron Commander, U.S. Navy Senior Fellow of the Center on Cyber and Technology Innovation Foundation for Defense of Democracies. It's great to see you, sir. Welcome back to Bloomberg. When you hear the president say something like this and you now confirm the attack on the cargo ship, does it make you think we're going back to war?
This is a complex issue. I think as a military officer, I would recommend a proportionate counterstrike against the drone launching areas of the IRGC, you know, in around Bandar Abbas or around the Strait of Hormuz. But politically, the president really wants this peace deal to proceed, you know, the negotiations to proceed. I think he'll probably, my gut reaction is he'll let this one go. You know, and look, what we're talking about here is the Southern Transit Scheme, the one we've been using since about April 2nd. We were getting through about 1 million or 2 million barrels a day till the ceasefire was signed. Then it was about 9 million barrels a day. As the president said, there was a big day yesterday. I'm not sure it was a record. I think I've seen higher numbers than that. But in any case, back to normal flow yesterday. This is a transit scheme, generally mine swept by the United States, protected by U.S. aircraft and ships on the edges of it. But, you know, clearly, you know, it's shot down a lot of drones over the last, 4 weeks. But clearly one here got through, hit a ship. The good news is, as he averred to there, many of the drones have small explosive amounts in them. So if they hit a superstructure, the top part of a ship, known as a superstructure, you can get the fire out quick, then the damage is minimal to moderate.
Iran seems convinced it's going to be able to charge fees. We don't call them tolls, which is a little bit too cute for most people, Admiral. But I'm wondering what you see as the future for the Strait. Could we be in a world where these 3 separate routes are maintained by 3 separate entities?
No, I don't think so. I think, look, if they decide to charge transit scheme through the northern transit lane, the one between Iranian islands and Iran, they may be able to get away with that. But what will happen is the only ships that will go through there are the ones going to Iranian ports. And then ones going to other ports, you know, Qatar, Kuwait, Saudi Arabia, United Arab Emirates will go through the Southern Transit Scheme. I think we can keep Oman from violating international law and going along with Iran. But that's going to mean a lot of talks with Oman. But I also tell you, the other big deal is the Saudis are going to build a second cross peninsula from east to west pipeline. as is the United Arab Emirates, a second one down to Fujairah, outside the Strait of Hormuz. And, they're not limited by like environmental impact statements and OSHA and EPA. They're going to be built fast. And once they do it, in a weird way, by this overplay by Iran, they're frittering away their leverage. This leverage will expire when more pipelines are complete.
Fascinating. Could we end up in a world, and I know you're not an energy analyst, Admiral, but you sure seem to know what you're talking about every time we get together on this, when it comes to the oil industry, could we be in a world where we create an irrelevant Strait of Hormuz? Can you reroute that much oil?
So I think I'd have to separate it to crude, other oils, LNG, liquefied natural gas, and fertilizer. The other ones, the non-crude, are going to probably still have to come to the Strait. So I wouldn't call it irrelevant, but I would call it less urgent, or there's a lower ability to drive an international crisis, because as we found out during this, there are other sources of LNG, particularly the United States, can step in. We may be slightly more expensive than Kuwaiti or Qatari LNG, but when we're 100% available, because no one's blockading our ports.
What's your thought on the status of our armada, of this massive fleet that we have that was conducting the blockade? Of course, we've had multiple carrier strike groups there. We've got, I think, 50,000 men and women still in the region, and we know that a lot of these deployments are extended. We've talked about this before, Admiral. Do they all need to stay in place for the balance of this 60-day period?
Yes, and probably beyond. There's going to be about 4 60-day periods to get us at least past early to mid-November, and then the president might have a different decision-making matrix. But I would tell you maybe a more aggressive decision-making matrix. But the aircraft, the Air Force squadrons that are on the Arabian Peninsula, and the 2 Navy carrier strike groups, and the 17 or 18 destroyers are all critical. And so we're going to maintain those, but we'll rotate the actual ships through there. Okay. We have 80 destroyers in the Navy, only 17 are there. So we have an ability to do that. I will tell you, if this goes on more than another 6 months, there will be a long-term impact. The Navy will be able to do the mission for the next year and a half. But then 3 years from now, the Navy and the Air Force fighter squadrons that are also playing in this are going to have a significant readiness ding.
How's morale out there? What are you hearing from your contacts?
Look, they want to be on. I have lots of friends out there, relatives. They want to be on mission. Every military, soldier, sailor, airman, Marine, Guardian wants to be on mission. The ones in the Arabian Gulf, the ones in the Arabian Peninsula are on mission. So I think morale is as one would expect, high at getting to execute mission.
Wow, we're so lucky to have this incredible volunteer military force. Admiral, I have to ask you about reports this week. The Secretary of Defense, Pete Hegseth, forced out the man who many people know as the last American service member on the ground in the evacuation of Kabul. It was a very famous night vision photograph of him walking up the ramp, the back of a military transport aircraft, last boots on the ground. Hegseth forced out General Chris Donahue, reportedly a fierce and beloved leader of our armed forces. The brain drain at the Pentagon is real. Why did this have to happen?
Yeah, this is a real own goal, a big mistake by Secretary Hegseth. So first I'll say, CD, is a Delta Force commander, 82nd Airborne commander. He is a soldier, strong leader. I spent a lot of time in Ukraine working with their military, and I learned a lot about drones. When I come out, the one U.S. general that really, senior officer that really understood drone warfare correctly and how to counter drones was General Donahue. So from my perspective, this is a big loss. The Army, I don't know what his next job should have been, but I know he should have had another job where we could use his talents leading us. And he's among about a dozen to 15 senior, 3- and 4-star admirals and generals removed from service without explanation by Secretary Hegseth. And I think this weakens our national security with no obvious payoff.
What's the house cleaning all about if we're losing this much experience? Is it a loyalty test?
I think for some of them, the initial ones, like the head of our Navy, Admiral Franchetti, she's fantastic. I'd known her for 35 years. She was the best person for the job, but she was a woman. And Secretary Hegseth made it clear in his 2024 book that he didn't have a lot of respect for her or in general for women serving in combat. And so I think he has a issue with that. It's misplaced. You know, anything he puts in place now will be changed by his successor. We absolutely need the 51% of our society that's female to be an important part of our military across all services, in combat, in support roles, and everything. This is really misplaced effort by the Secretary of Defense.
I really appreciate you weighing in on that, Admiral, and it's always a pleasure to spend some time with you. Thank you. Retired Rear Admiral Mark Montgomery, U.S. Navy, Foundation for Defense of Democracies. I'm Joe Matthew in Washington with another breaker. He's posting quite a bit here on Truth Social today. Producer Steve's going to like this too in the control room. Hold on. What are you doing on the 4th of July? The biggest air show ever in history? I'll tell you what, the 10-year-old version of me would have been extremely excited. Actually, I'm kind of excited. But hang on. Ready? The 4th of July air show over Washington, our great capital, will be the biggest by far in the history of the United States of America. Hundreds of planes of different types, sizes, and speeds will be on display. Does Pete Hegseth know about that? It goes from 1:15 in the afternoon till 11:30 at night. The kids are going to be up late. I'll be speaking at approximately 9 p.m., preceding the fireworks, which, again, like the air show, will be approximately 10 times larger. Well, wait a minute. 10 times than any fireworks in the history of the country? If you like airplanes and fireworks and President Trump, it says be there. You think Rick and Jeannie are going? We'll ask them next. They assemble our great political panel back together on the Friday edition. Rick Davis and Jeannie Shanzano. Stay right where you are. We have much more ahead on the Friday edition of Balance of Power. I'm Joe Matthew. Thanks for being here. Only on Bloomberg Radio.
It's 12:40 on Wall Street. I'm Amy Morris. Chip makers pummeled by another burst of selling amid concerns over whether the enormous investments in AI are justified. Stocks are wavering, and now they're inching higher again. We check the markets for you all day long here at Bloomberg. The S&P 500 back in the green, 0.2%. NASDAQ up 0.2%. The Dow now wavering again. It's little changed, but still on the upside. 10-year Treasury yield at 4.37% and the 2-year yield at 4.08%. Oil now headed for its biggest weekly drop in a month after transits through the Strait of Hormuz accelerated. Even with these new tensions in the region, that includes the president accusing Iran of violating the ceasefire. WTI crude oil now still down 4%, around $69 a barrel. Brent crude down 4.5%, around $72 a barrel. And consumer sentiment in the U.S. rose in June as those lower gasoline prices provided some relief for Americans who are still fighting high inflation. Consumers expect prices to rise at an annual rate of 4.6% over the next year. That's down from 4.8% in May. They also saw costs rising at an annual rate of 3.3% over the next 5 to 10 years. University of Michigan Director of Surveys, Joanne Shu.
Consumers are perceiving a little bit of relief from the moderation of gas prices. However, consumers remain really quite burdened by the persistence of high prices.
The cost of living remains at the forefront of many consumers' minds. More than half spontaneously mentioning in this survey that high prices are weighing down their personal finances. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Okay, Amy, thank you. She'll be back at the top of the hour, 1 p.m. Eastern Time, with another read on the markets. That's right, when we welcome our global television audience to the conversation. Kaylee Lyons joins us, and we kick into a higher gear, kind of like that air show on the 4th of July. The president upping the ante. We got to figure out how to get in this thing, right? Can we get in one of these airplanes? The president just posted on Truth Social that the 4th of July air show, which was already scheduled, will be the biggest for type sizes, speeds will be on display. This is like a 10-hour from 1 in the afternoon, 11:30 at night. I got to see this as somebody who stops down for air shows. Are we talking an air show here or just a lot of flybys? There's a big difference. I was lucky enough to fly with the Thunderbirds once in an F-16 out at Nellis Air Force Base. Broke the sound barrier, pulled 9 Gs, lost my lunch. I'm not looking to do that again. Put me in a big, slow, like a C-130 or something. I want to see the mall from up there. We'll get a camera. You think Kaylee would go? She's probably got a cookout. You know, we came in today on this Friday thinking, gosh, maybe there are slow news days left. There's nothing going on. Maybe we have some big think conversations with Rick and Jeannie. But then, of course, as we walk in the studio, news breaks. And today, once again, it was from the President of the United States. And we're back to Iran. If you're just joining us, we talked to the Admiral about this. It's an important development here as he accuses Iran of breaching the ceasefire. Iran shot at least 4 one-way attack drones, he says, at ships traversing the Strait of Hormuz. One of them hit the upper deck, large, very expensive cargo carrying ship. Damage was done. We knocked out the 3 other drones. I'm skipping down here a little. Obviously, quote, this is a foolish violation of our ceasefire agreement, unquote. What now? Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join. Rick is back, our Republican strategist and partner at Stone Court Capital. Good to see you, my friend. And Jeannie is, of course, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, this isn't enough to go back to war over, is it? The Admiral, a short time ago, Mark Montgomery, suggested it was not. But this is so delicate that I wonder your thoughts on whether it could be different this time.
Yeah, I think all the pressure is to keep the negotiations going on. All the pressure is to try and keep the flow of oil coming out of the Gulf. And there'll be a lot of willingness to look the other way, to not overreact.
Okay.
Sorry, Rick, go ahead.
No, I'm sorry. And so, yeah, I think, when you look at what the incentives are, I think, people are going to look the other way. And even the president's own comments sounded downright at ease with it. Oh yeah, this happened, but we're not going to retaliate. We're not going to blink. We don't want that flow of oil to stop. So I think we're in for a period of time where we're going to have a lot of different obstacles to choose from in the Gulf. You know, the Iranians are going to constantly test our resolve. They'll test the resolve of other allies in the region. And I think this administration says, look, we got to push through. We got 60 days to get a deal. Let's get the deal done.
60 days, Jeannie, although Mark Montgomery said a little while ago you could have 3 or 4 of those 60-day periods to get you past November, at which point the president's, what did he say, his decision-making matrix? I love it when military guys start with the jargon like that. Things could feel different after November. Is that right, Jeannie? You don't want to go to war for the next couple of months. Maybe we do hit a deal, but if we don't, we'll meet you in December. What do you think?
I think that Donald Trump is not going to do much. You know, oil, you were just talking about, Joe, down around what, $69. He's going to bloviate, he's going to bluster, he's going to complain. But you're absolutely right. Nothing he can do before November. And you know who knows that? Iran. This is the same situation we've been in. They are holding all the cards. Donald Trump is playing catch up. And if you listen to Iran, what are they saying? The ceasefire has been broken repeatedly, given what is going on with Hezbollah and Israel in Lebanon. So Donald Trump, we're going to hear a lot about these kinds of statements, frustration, but there's nothing he can do. The ceasefire is fragile, and he's got no options now, and he knows it to his credit, but to proceed forward and try to get an agreement. And of course, 60 days isn't going to be enough. It's going to be a number of 60-day periods, but certainly nothing pertaining to like we saw in February before November.
Before we move on to something else, Rick, what do you make of the market reaction or the lack of reaction? This is pretty amazing. I mean, I realize it's been a couple of months of, you know, on again, off again. The market just doesn't seem to even care anymore. The president posts something like this. You've got crude oil down 4%. We're at $69 a barrel. We were at 67 before this thing started. Has Wall Street just moved on?
Well, I think they feel like the commitment is there to keep the flow of oil, and the president isn't dissuading them. If he'd have said, hey, I'm bottling it up again because we got to teach Iran a lesson, I think you'd have seen a different reaction. And that's the kind of things he was saying and doing just a month ago. Right. So I think we've seen a sea change in policy. Policy will dictate some of what Wall Street feels about this. Before, Wall Street thought we're in the middle of a war and everything goes. Now we're in the middle of trying to make peace, and stability should reign supreme. So I can't imagine a scenario right now without all-out war breaking out again, which is in nobody's interest, that the markets don't sort of set this aside and say, call us when something really good or really bad happens.
Well, it's unclear when J.D. Vance is going to be heading back overseas, assuming this stays in Switzerland or whatever we do here. He's still the point man on negotiations. We do not have a date, or I think even a suggestion that there'll be a second round of talks. He is making news, however, about a very different topic. And curious that he would pick this one to go after, Jeannie. J.D. Vance spoke at the Richard Nixon Presidential Library out in California. You've both probably been there. The headlines that came from it, though, are fascinating. As I read in the Washington Post, Vance dismisses Watergate scandal, says deep state went after Nixon. Vice President says he admired Nixon, drew parallels between the past president who resigned in 1974 and Trump today. All of it out loud. Listen to what he said.
If Watergate happened tomorrow, it would be like a 12-hour news story. Like, the idea that it would have taken down a presidency is crazy. And by the way, if you look at the story of how the deep state took down Richard Nixon, it's not all that different from what the same groups of people, the same institutions tried to do to Donald Trump in the first Trump administration. There is a parallel.
Wow. Look, it's one thing to try to express sympathy for Richard Nixon, maybe even the deep state, whatever you want to do, but to then compare him to your current boss is a strange move to make. Unless there is a parallel, Jeannie, what do you make of this?
Yeah. And Joe, I have a question. Is he comparing Donald Trump to Nixon, or is he comparing himself, a vice president surrounded by corruption, who doesn't do so well in 60, but comes back strong. So I don't know, JD Vance in 2038 or whatever it is. It is insane to sort of tease out why he decided to talk at the library about Watergate in this way. What political benefit is this to JD Vance, except, of course, saying, I too can come back. But Joe, this has been such an awkward, cringeworthy rollout of his book tour. I'm sure you saw the knee tap that was heard around the world with his lovely wife. I mean, from start to finish, this thing has been awkward. So, I'm stunned he raised it. And then again, looking at the knee tap, and if people haven't seen it, you got to Google it. It's all a little bit cringeworthy, so I'm not surprised.
Jeannie always comes prepared, I swear. Rick, I don't know. I'm not sure what to say about the book tour here, but why call out your boss and compare him to the only president who had to resign in scandal? It's not just, of course, the break-in and the plumbers and all that. It's the enemies list, the tapes, the anti-Semitic stuff. I mean, how do we frame this?
Well, I don't want to look past the midterms, but I, for one, am really excited about the 2028 presidential cycle, because if we can get this every day of that cycle, I mean, it will be a circus, and I want a ticket to that. Look, I mean, this portends a really significant thing, which is the culture and values we had in the 1970s is not the culture and values we have today. I mean, these are guys who, they are sending messages out to QAnon. They believe in conspiracy theories. They purge the Justice Department in order to go after their enemies. I mean, an enemies list with Nixon was horrible, and an enemies list in the Trump administration is applauded at every rally. He even names names. I mean, Nixon, you had to uncover this to find out who his enemies were. Trump just tells you, I'm going after this list of people. And so I do think it's something worth really understanding as to how different the political culture is today. And what Vance said is unfortunately the truth, which is things that were the violation of the law, the president using, money to silence people, burglaries to, try and win elections, would not actually rise to the level of an impeachment session in the Congress even today. So I think it's actually a really sad moment because I think what he's saying is more true than not, and it's a horrible thing.
Wow. I'm so glad we brought this up, and you guys are dead on here. Is there truth, as Rick is saying, Jeannie? What was the line? If Watergate happened tomorrow, it would be like a 12-hour news story. Is that the case?
I think it might be, but probably because we are now desensitized to the level of corruption. What is not true, and I think has to have his Yale professors of history sort of scratching their heads, I think he needs to go back to Yale and take another history class, is that the deep state was going after Nixon. Quite the contrary. It was Nixon using the deep state, and the history is clear on this. This has been vetted. This has been proven. He was trying to use the deep state to go after his political opponents. And guess what? It's the same thing Donald Trump is doing. As we're all just reading through the new Maggie Haberman and Jonathan Swan book, there's a point there in which Donald Trump is talking about Jerome Powell and says in very colorful, off-putting language that I'll leave to you, Joe, I want his effing something. And they talk about the fact that he is, wants to go after him. He wants to make his life miserable, and he's going to do that any way he can. Can we use this building? Can we use the DOJ? I mean, this is what he's talking about. So, JD Vance is trying to say that this is a deep state conspiracy on both sides. It wasn't true about Nixon. It's not true here. And we should all rewatch one of my favorite movies, All the President's Men, this weekend. A great movie, great book, too.
It's so good.
And go for journalists. It's so good.
So well made. To Jeannie's point, J.D. Vance musing on his own similarities to Nixon. Quote, young senator, vice president, writes some best-selling books, is hated by media. Kind of sounds like J.D. Vance, he said. I've always liked Richard Nixon. Our great panel is with us here on the Friday edition. Jeannie Shanzano and Rick Davis will be back in hour 2 as we cross the line here into the 1 o'clock hour and welcome our global television audience to the conversation. You're going to want to stay with us here. Coming up in hour 2, Congresswoman Madeleine Dean will join, the Democrat from Pennsylvania, ever passionate about the issues we're talking about here. And we'll connect with Tyler Kendall, our Washington correspondent, with the president accusing Iran of breaching the ceasefire. This is Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says Iran just violated the ceasefire. Welcome to the Friday edition of Balance of Power. Just a day after Iran opened fire on a cargo ship in the Strait. I'm Joe Matthew alongside Kaylee Lines here in Washington. Kaylee, the markets haven't even blinked here, but there are real questions about the status of peace talks.
Yeah, of course, we don't know when the next round of talks between the U.S. and Iran, formal ones, that is, will take place. And we have seen violations of a ceasefire been accused before. Iran repeatedly accused the United States of it while it was still maintaining its naval blockade. Of course, that blockade is no longer in effect. The president had declared the Strait of of Hormuz free and open, and yet the president is now saying that there were 4 one-way attack drones at least that were launched at ships transversing the Strait of Hormuz. He says, and this is a direct quote, obviously this is a foolish violation of our ceasefire agreement.
Yeah, and it doesn't mean he's going to do anything about that, but he's dropping a marker on this. And boy, isn't it amazing, the lack of reaction on Wall Street? We've really learned to live with this, apparently. Oil is, in fact, sharply lower. We've got $69 a barrel WTI, which is a price we haven't seen, since the day this whole thing started.
Yep, going back to February. It's incredible. We're down more than 4% on Brent as well at $72 a barrel. It also seems that the market isn't blinking at the other threat from the president regarding tariffs on countries that are going to impose digital services taxes. I thought some of them already do this, but he says European countries are on the verge of doing so. And if they do, 100% tariff. My question, Joe, is under what authority, given that so many of them have been ruled by the courts as being unconstitutional?
You can threaten a lot. It's different to actually implement them, as the White House has found. We'll get the latest on all this from Tyler. She came over to see us here in the studio from the White House, and we're going to talk a little bit later on this hour, Kaylee, with Congresswoman Madeleine Dean, the Democrat from Pennsylvania, no fan of President Trump's policies, but a lot to talk about here. The floor is frozen, so lawmakers are all going home.
Yeah, we're not going to see any of them until after the July 4th recess.
Right, yeah.
So it's getting a little sleepy in Washington on this
we'll be
Friday.
Okay.
But we still have things to cover, and there's still things moving financial markets, so let's get a check on those now as we turn to Amy Morris here in Washington. Hey, Amy.
Hey, Kaylee. You know, Wall Street's a little bit sleepy, too. It's been chaotic. Some mild gains now in stocks amid the intense volatility in high-profile technology names. Let's check those markets for you. We do it all day here at Bloomberg. S&P 500 up 0.2%. NASDAQ up 0.3%. And the Dow up 0.2%. The 10-year Treasury yield at 4.36%. 2-year yield at 4.08%. Now, oil still headed for its biggest weekly drop in a month after transits through the Strait of Hormuz accelerated. But President Trump posted on social media that Iran violated the ceasefire with a drone attack in the strait. And Oman has told European officials there's no way to go back to the pre-war status quo and that ships will likely have to start paying fees to move through the strait. Well, oil still moving lower. WTI crude oil now 3.8% lower at $69 a barrel. Brent crude at $72 a barrel. That's about 4.4% lower. Volkswagen is looking to cut additional jobs, may even shutter factories to make Europe's biggest automaker more competitive. The plans include doubling staff reductions and cutting general overhead costs by 11 billion euro by the end of the decade. Labor leaders have vowed to oppose the plans. Volkswagen shares nearly 4% lower. Boeing secured an order from China Southern Airlines valued at $3.62 billion, marking an important win for Boeing, which shares are less than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power now with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. So it does seem to be a sleepy Friday overall, though you are seeing some material action in the oil market, as Joe and I and Amy were mentioning, with prices lower, despite the fact that the president is accusing Iran of violating the ceasefire in the Strait of Hormuz. As he says, the U.S. shot down 3 one-way attack drones, but of course a 4th hit a ship that was still able to continue on, but nonetheless reignited some concern yesterday over the ability for ships to transit the Strait of Hormuz after it, of course, had been declared open via this memorandum of understanding. And we still have major outstanding questions as well, Joe, about whether or not fees or tolls are going to be imposed by Iran and Oman. The different sides are saying different things about that in particular.
That's for sure. Fees, the word that Iran likes to use here, service fees, I think is what we're calling it.
For administration.
Yeah, it's like when you check into the hotel, who made that reference? You get the spa charge, whether you use it or not. But there are 3 routes that are emerging here in the Strait. And the U.S. is trying to keep its own under control here, but this is an indefinite presence of our military, it seems, in that part of the world.
Yeah, and for how long is that going to be deemed sustainable when, of course, the Pentagon is already requesting tens of billions of dollars more in funding from Congress for what has already taken place in the Middle East as we question the future.
Heard about this from President Trump. He was speaking at the Rose Garden Club just last evening about the status of talks. This is before the Truth Post earlier today. Listen.
They want to make a deal with us very badly, and we probably will. I think we will, but the strait is open. Yesterday, they took out 19 million barrels of oil. That's the most in the history of the strait, and the oil prices are dropping like a rock. And, you know, as goes oil, so goes everything else.
That's the idea, and oil is lower, $69 for WTI, and that's despite the news here with the president saying, quote, this is a foolish violation of our ceasefire agreement. Bloomberg Washington correspondent Tyler Kendall joins us right now in studio here in Washington with the latest. Tyler, is this a one-off post, or could there be a change here in the Strait?
We're going to have to see how it evolves, because this does mark the first such attack that we've seen since the Memorandum of Understanding was signed. President Trump giving us a little bit more details here beyond what we had been tracking last night when this news broke. He says that the U.S. was able to intercept 3 out of 4 of these drones, but that one ultimately hit this vessel, though damage was sustained. It was still able to continue transiting through. But you hit on a really key point, Joe, that I've been following closely here, which is that this attack happened in one of those routes that's considered to be the safer route. It's that corridor that hugs the Oman coast, where the U.S. really has some leverage and control over. So in some regard, this has perhaps undermined some of the confidence. Bloomberg News was able to review a message that one major oil company did send its vessels to say, hold put for now. We saw the UN's global shipper say that they're going to, for now, suspend evacuation operations in the wake of this. But still, the data analyzed is showing us that it's not really having that big of an impact. Ships are still making their way ultimately through the Strait.
Okay.
Well, and of course, there's the question on whether, in order to guarantee safe transit through the Strait, ships eventually are going to have to pay. Bloomberg is reporting that Oman is telling European officials that there's no way of going back to the pre-war status quo in the Strait of Hormuz, and that transiting ships may have to be charged some fees. You questioned the president about this directly at the G7, and he made it pretty clear he did not want fees associated. The Secretary of State has said the same thing. So where's the disconnect here?
I was going to bring that up. Just last night, we had Marco Rubio reiterating to reporters that that's not going to be ultimately an option. But it's very clear that it's top of mind for Iran. Earlier this week, it really came to the forefront because we saw Iran release this joint statement with Oman, saying that they were working out some sort of fee structure, navigational fees, environmental fees, along those lines. I think the Secretary of State said ultimately it would be semantics in his words, but any such charging of passage wouldn't be acceptable. But pair that with the Wall Street Journal report that I know we spoke yesterday about on this program, that Iran's estimating it could bring in $40 billion worth of revenue each year. But not only that, they're potentially going to pitch this to other countries in the Middle East, maybe even China, to share in on the costs, but also the profit of operating such a system. It leaves a lot of big open questions. Maybe that's the most contentious point right now. But then also, as you both know, we're tracking very closely President Trump last night doubling down that unfrozen Iranian assets are going to go towards U.S. farmers. That's the latest that we've also heard from Iran, disputing that that's something on the table.
Fascinating. Before we bring in the Congresswoman, Tyler, what's going on with this latest tariff threat? European countries discussing, he says, the imminent implementation of a digital services tax on American companies. To Kaylee's point, some already have this. Let this statement serve to represent any country imposing such a tax will immediately be met with a 100% tariff on everything. On what grounds would that be made?
If I could take an educated guess here, I would assume that the president is teeing up something under Section 301. Okay. We know the administration actually already has investigations from the first Trump term under Section 301, which is investigation into alleged unfair trade practices. And we've seen them before pull on investigations from the first Trump term and essentially repurpose them here. Typically, these investigations take 9 months, but they're able to essentially expedite that process if the work has already been done. Section 301 is a very malleable tariff, I think it's fair to say. It can go up to 100%. There's no cap. And it also can be done indefinitely. You have to review it every 4 years. But it would make sense maybe he's leaning towards that. Whether or not this is a negotiating tactic, I mean, you mentioned I was at the G7 last week. He said 100% tariffs on French wine if France doesn't drop it. Quickly, I will add, once we have seen a country drop it, that was Canada last year during the negotiations. They chose not to collect revenue. So
wow, fascinating.
Maybe it'll work.
All right. Well, I guess we'll see. We've seen 100% tariffs threatened before, and they never actually became reality. So to some extent, we have to keep history in mind here. Bloomberg's Tyler Kendall, our Washington correspondent. Thank you very much. And for another perspective now, we turn to Democratic Congresswoman Madeleine Dean, who represents Pennsylvania's 4th District and serves on the House Foreign Affairs and Appropriations Committees. Congresswoman, welcome back to Balance of Power. I would love to begin with you on what we were just discussing with Tyler regarding the president accusing Iran of violating the ceasefire in a way that he says was foolish. If this was a ceasefire violation, should the United States do something about it?
Well, what I wish we had were diplomats actually negotiating the ceasefire. I'm sure by now everybody has read the 14-point MOU and how weak it is, how clearly drafted by Iran and for Iran that it is. And it was only a memo to talk more, to negotiate more. And we do not have solid diplomats on the ground doing the work, the difficult, complex work of negotiating the ceasefire. What we also see, and it was part of your last conversation, is just the chaos of this president, the whiplash that you can get from listening to him from 1 hour to the next, whether it is on signing bills that have been passed in a bipartisan way, like the housing bill, or about the ceasefire in Iran. Think about it. This war that was named Epic Fury has actually been an epic failure. And I say that with no pleasure. Obviously, our men and women of the military have been exquisite, but we have lost 13 members of the military. Hundreds have been wounded. More than $150 billion at least has been expended. Our munitions are low. The president's now asking for a supplemental, even as he asks for more than $1 trillion in a defense budget. The president's chaotic moves, whether it's domestic or it is international and a question of war and peace, frankly, have been very hard to follow and very hard to support. That's a serious problem for this country.
You're on the Foreign Affairs Committee, as has been mentioned, Congresswoman, and I'm just wondering what you guys talk about. And is it Democrats in one circle and Republicans in another? The stories that we keep hearing are that you're not being briefed by the administration, that you didn't even see this MOU until it was already signed. Or has it brought Democrats and Republicans together somehow because you're all living in the dark?
I didn't see it until it was leaked and picked up by the press. We have not had a briefing from the administration. We haven't had a briefing on the war, on the so-called Epic Fury, let alone on what would be a ceasefire and hopefully peace in the Middle East and a restoration of some economic ability to recover the economy by this administration. After all, what is going on in my district, what my constituents care about, are the issues of war and peace. They also care about the issues of costs. Everything the president has done has driven up costs. Originally with his reckless tariffs, and here you hear him threatening them again, 100% on you, 100% on you. But then his chaotic and inhumane immigration policy. I'd love to talk to you about my visits to both Dilley and the economic impact. Dilley, Texas, and to Moshannon in Pennsylvania, these for-profit detention camps, some holding children for months, terrorizing whole families. We have not been briefed. The president and his team have not briefed us. Secretary Hegseth has not come forward to either the appropriations or the foreign affairs committees. This is an administration, sadly, out of its depth, following an emperor who has no clothes and has shown it over and over again. And it is very dangerous for our national security and extremely harmful to our economy.
Well, you mentioned Secretary Hegseth not coming before the Appropriations Committee. We have seen a supplemental budget request handed down that includes almost $70 billion for the Pentagon and much money for other things, including Ebola response and aid to farmers, for example. What would the consequence be for our national security if the Pentagon doesn't need or doesn't get the funding it says it needs?
Well, I'm looking at this list from the supplemental from the White House ask. $67 billion for the war, $1.4 billion for Ebola, $11 billion for farmers, $1 billion for Penn Station, and $770 million for Department of Energy security issues. What would it mean? How about they release the $100 billion? I'm in touch with the defense industry. $100 billion from last year's big, beautiful bill. How about this administration doing its job appropriately in a straightforward fashion, even with bills that I didn't approve of, but he got them signed into law? Why are they asking for a supplemental when they have not released $100 billion worth of defense spending from his big, beautiful bill? And it's very jarring because, as you know, this week we just marked up our final appropriations bill, the 12th of 12 in the House, and it is the defense bill. For the first time in history, they have asked for more than $1 trillion in defense spending. So why in God's name would we ever need another supplemental for this failed war?
There are questions as an appropriator, Congresswoman, about what's going to happen in September. There are questions about this defense bill if the Save America Act is attached to it. But what do you think about the narrative right now that Chuck Schumer, that possibly Hakeem Jeffries, maybe yourself, will not be able to vote for a budget in time to fulfill our requirements in the next fiscal year, and we could have a shutdown ahead of the midterms?
I hope we never have another shutdown. There is absolutely no reason for it. We have, as appropriators, have been doing our job. The Senate needs to get doing theirs. Then the four corners need to come together. But the administration has to actually govern. And remember, we have a shutdown again. Shutdown is the wrong term. The week collapsed underneath the chaotic behavior of the president failing to sign the housing bill and trying to attach this falsely named Save America bill, a voter suppression bill. And what happened with the Speaker of the House? He said, sent us all home early because he could not govern. He could not get a rule passed so that legislation could move forward. We should never have another shutdown. But if we do, take a look at who's in power. In the presidency, Republicans. In the House, Republicans. In the Senate, Republicans. And now we saw yesterday with some of the releases of the Supreme Court decision, Republican-appointed justices. They're in full control. They should be able to make sure we have a budget and no one suffers a shutdown.
It's good to have you back, Congresswoman. Come see us when you get back to Washington. From Pennsylvania's 4th District, Democratic Congresswoman Madeleine Dean. Kaylee, we should note, the president actually turned some fire on Republicans over this whole situation involving the House on Truth Social. He said House Republicans should unify, stop voting down rules or threatening to do so, knowing that there is a stoppage of all business on the floor right now, thanks to one Republican member.
Yeah, Congresswoman Anna Paulina Luna wants to see the Senate act on the Save America Act, so she's stopping action on the floor of the House. Not sure that's going to compel the Senate to do anything, but it certainly makes the job of the Speaker much harder, which is why he had to dispatch himself to the White House yesterday to talk to Trump about it, try to get Trump to do a little public leaning on this particular member, perhaps.
Well, we're still here.
We'll
have a lot more with our panel. They're here too. Rick and Jeannie next, only on Bloomberg.
121 on Wall Street. I'm Amy Morris. Tech stocks dragged global indexes lower following renewed selling in chip makers, while a report that OpenAI could postpone its plans to go public also weighed on sentiment. We check markets for you all day long at Bloomberg. The S&P 500 up 0.2%, NASDAQ up 0.1%, the Dow up 0.1%, the 10-year Treasury yield at 4.37%, and the 2-year yield at 4.08%. SpaceX's blockbuster bond sale is weakening in the secondary market. Traders saying they cannot recall another recent deal that's widened this sharply. Shares of SpaceX are still higher, though, about 3% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines alongside Joe Matthew, tracking, as always, what's happening here in Washington. No so frequently in this second Trump term. That includes the latest on tariffs. We got a new post from President Trump on Truth Social today, threatening 100% tariffs against European countries who he says are close to actually charging digital services taxes. Of course, some of them already do this, but he says 100% tariff on any and all goods sent to the United States of America will be imposed if others follow through with that. There is a question as to what authority he would use and whether or not he actually means to make good on this threat, because, of course, Joe, we have seen frequently in this administration a tariff level threat only to be retracted, perhaps reduced. Look no further than our northern and southern neighbors as we think about what was once a threatened 50% tariff on all Canadian and Mexican goods, down to 25, with a carve-out, of course, for goods compliant with the USMCA agreement. This is constantly changing, although those agreements may be subject to change pretty soon as well.
Well, that's right. It's time for renewal. And, of course, if they don't do anything, it automatically renews, as we understand. But there is a big question right now about what the president wants to do. He's been dumping on the USMCA recently, even though he's the man who negotiated it.
Yep.
And his line most recently has been, well, it was the way to get out of NAFTA. And he says, at this point, we don't need this. That has caused a lot of stakeholders to worry about the direction that we might be traveling in, and it's where we start our conversation with our friend and colleague David Weston, the host of Bloomberg Wall Street Week. They're going to be digging into this on the program this evening. David, how much time is left to renegotiate this before it rolls into the next phase?
How does next week strike you? Joe, it's
July 1.
July 1 is the date that they put in. And I talked to some of the people who negotiated the USMCA, and they said at the time they had a 6-year period because they were pretty sure Donald Trump would not be the president then. Well, look how that turned out. It turns out he is president. But nobody involved thinks it's going to get renegotiated by July 1. They've started some preliminary talks. They have some talks scheduled into late July and August. They'll be lucky to get this done in the next several months. But it is looming, and it is making a lot of people very nervous in the auto industry and energy and, of course, in agriculture.
Well, and in agriculture, we already have seen, of course, billions of dollars in aid flowing to farmers. The administration is now requesting some $10 billion more. What is the USMCA agreement on American farmers specifically, or influence on American farmers and their incomes, David?
Well, it's a great question, Kaylee. The starting point is go back and see what happened under USMCA. And what happened under USMCA is that Mexico and Canada replaced China as the largest sources for exports for the U.S. agriculture, which is critical to farmers. We went out and talked again to some farmers we did about a year ago. It's gotten a lot worse in the last year because they depend so much on exports, because they actually produce more than the United States could ever consume. One of the people we talked to was Tom Halverson, who's the CEO of CoBank. I know you know him. He's a major supplier of credit to farmers across the country. And this is part of what he said farmers are looking at with respect to the USMCA.
Right now, about 20% of our agricultural product in total has to be exported. We have no population growth in the United States right now. So the more agricultural productivity and output we have, it's not hard to recognize that it's got to go someplace, right? And we're not going to consume it here in the United States. So the long-term future for U.S. agriculture, it can be defined as exports, exports, and more exports.
In corn, one of the destinations for those exports increasingly is Mexico. It is the largest export market for U.S. corn.
It's like 6.5% of the total production goes to Mexico alone. The two countries combined, when you look at corn and corn products, It's about 1.8 billion bushels of corn, which is the entire production of the state of Minnesota. So it's a really, really big deal. It's the gold standard in my mind. It's something that we could replicate across the world.
But despite it being the gold standard for U.S. farmers, America does run a trade deficit in agriculture with both Mexico and Canada.
You probably do like I do, and most of the people we know want to have, fruits and vegetables that we used to not get in the wintertime. Now we want them 365 days a year. That means we have to buy them and import them from other places. And the result of that is, even though we're exporting more and more agricultural volume, we're also importing more. That has resulted in our agricultural balance of trade going negative.
So that is the state of agriculture in the United States. The other voice you heard was Stu Swanson, whom we talked to about a year and a half ago. He's a corn and soybean farmer out in Iowa. And he said, they're sort of running out of hope at this point. And it's fine. Kayla, you mentioned earlier there's a request now from President Trump for a supplemental for several $1 billion to farmers. And that's fine. They need that money desperately. But every farmer you talk to says, we don't want subsidies. We want to be able to sell our products around the world. And as you know, that got hurt the first time President Trump was president because of the cutoff of China.
David, is there any economic constituency used as a political piñata more than the farmers?
No kidding. That's totally right. I mean, it's no coincidence that Iowa is where you have the caucuses to begin with, right? I mean,
yes. E15.
But it's tragic actually to talk to these people. I mean, Stu Swanson said, people are getting out of farming. He's a third generation farmer. He has two daughters who have trained to go into agriculture, and he's not sure he's going to be able to stay in the business. And it brings tears to his eyes. He talks about people actually committing suicide out there in the Midwest. It is a very serious situation. And go back to the USMCA. Therefore, the farmers say, whatever you do, don't take away the export markets in Mexico and Canada that we have. Don't blow this up. That would really hurt the farmers terribly.
It's an important show tonight.
It very much is a special Wall Street Week focus on the USMCA agreement, hosted by our very own David Weston, of course. Looking forward to that at 6 p.m. this evening. You can catch it every Friday, of course, here on Bloomberg TV and radio. Just like you can so frequently catch Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino, who are joining us now. Rick, of course, Stone Court Capital Partner and Republican strategist, and Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Welcome to you both. Jeannie, we were just hearing David talk about the dire economic situation that many farmers find themselves in, hence the request for some $10 billion more in funding for them in the supplemental. That is supposed to be one of the sweeteners for Democrats. That plus funding for Ebola, for example, maybe gets them on board with funding more money for the Pentagon. Is it likely to work?
I don't think so. And it's fascinating because the Ebola funding, as you mentioned, the farmers funding, all to try to attract Democrats over. But the problem is, Kaylee, the war is so wildly unpopular, not just with Democrats, but the American public writ large, who I think in the last CBS poll said 69% say the war is not worth the cost. So it's going to be very difficult to do this by trying to do it via supplemental, which means you have to go on reconciliation and you've got to get the 50 votes. And that's going to be hard because probably they can lose 3 Republicans if they have Fetterman with them. But you've got more than 3 Republicans who are skeptical about this. And let's not forget, this is to me like, paying your electricity bill, which I do, Kaylee, all the time. But you're paying for something after you're told it's $1 billion for it. So it's really, really a hard sell, and it's a vote nobody wants to take.
I'll just be personal for a minute here. I hope they keep this Penn Station money in there. It's $1 billion, Rick. You spent enough time underground Penn Station to know what I'm talking about. I see you, Rick Davis, waiting for that Amtrak. But I thought the president said New York was being taken over by communists. Is that money going to get the support of Republicans?
Yeah, the little bit of infrastructure funds were for Washington, D.C. and New York City. I mean, you're not going to get a lot of popularity by, repairing those things. But please keep the Penn Station funding in. It desperately needs a facelift. That would actually make me think about voting for Republicans in New York City if we could get that passed. So, look, at the end of the day, this can be a hard sell. Democrats have already said, regardless of any incentives in agriculture or healthcare like the Ebola money, we're out. We're not going to give you a win right before the midterms. They think the war overtakes all other things as being negative. Like Jeannie said, nope, this was not sold to begin with. It wasn't sold throughout, and it isn't being sold today as a win. And so you're asking Democrats to support something they know is a dog, and you're asking Republicans to start barking. I mean, like, these guys don't want to vote on this either. They've got to win re-election, and they know the public doesn't like it. So I think this is going to be a bit of a slog. And it's coming at a time when the president's relationships with the Congress are at a low ebb, even compared to his first term. And so I think that the campaign that needs to be waged to get this done is going to have to start right away.
Well, it's going to have to start in a couple weeks because Congress left town already for an extended July 4th recess, Rick. So I'm not sure how immediately this is going to get started. But we did see the Speaker of the House meeting with President Trump at the White House yesterday. President Trump posted on Truth Social after that, calling on Republicans to stop grandstanding and disrupting business on the House floor. Is the Speaker being honest with the president in your mind, Rick, about what is achievable in the way that, say, the Senate Majority Leader, John Thune, is trying to be?
Look, I think that it's pretty clear that people tend to tell the president what he wants to hear or what they think he wants to hear. So I would be surprised if there's any tough love from the speaker. He seems to have basically abdicated his role as speaker to the president of the United States. But remember, it's not so much taking votes on these supplementals, it's clearing the decks so that you can get that done. And the president has just gummed it up by saying, I'm not signing anything until the Save America Act is done. So does that mean that this is dead on arrival?
Great question. Jeannie, we've got about a minute left. We just talked to Madeleine Dean, Democrat from Pennsylvania, says no more shutdowns. Can we assume that Chuck Schumer and Hakeem Jeffries see it the same way when appropriations matter in September?
Yeah, I'm not sure we can assume anything. I mean, that's the other thing. You guys were just talking about the calendar. It is so short, and we have this government funding deadline on September 30th. Yeah. It would make no political sense for them to shut down the government. She's absolutely right about that. But can they agree? And if so, how? And that's where this supplemental or reconciliation, however they try to do it, comes down to play is, are they going to be able to get the Republicans they need on board to get the 50? And then what are they going to need? That's the Senate. What is Johnson going to need in the House? And that's where the SAVE Act that Rick was just talking about is. And so I don't know how they move forward on this. And there's very few working days left when they come back from July 4th. Then they have the August recess, and we are off to the races on the midterm.
Well, we got a lot to look forward to here, don't we? We haven't even talked about what's happening on the National Mall. Rick Davis and Jeannie Shanzano, thank you both. Bloomberg Politics contributors will meet you on the late edition of Balance of Power, as we do every Friday at 5 p.m. Eastern Time. We're going to turn our attention coming up to what's happening with John Bolton. Is it possible he goes to prison? We'll talk to Robert McWhirter about it. Our favorite lawyer from Maricopa County is up next on Bloomberg TV and Radio.